Good morning, everybody. Welcome. I'm not supposed to be alone. I'm supposed to have a friend.
There he is.
Good morning,
What
Will.
is
How are
good?
you?
Good morrow, sir. How is you? I'm not too shabby.
Mate. I am not too shabby,
I'm
eh,
great.
Nige? I am all gravy, baby. How's everybody?
All gravy, baby.
Yeah.
Yes, how is everyone in chat? How are we all doing on this fantastic, terrific Tuesday morning, afternoon, evening, night, wherever you are in the world?
Yes. Welcome to everybody to the early risers segment of the Fivers live stream. Yes, we are live an hour earlier than normal. Yes, we are going to carry on doing that until, I don't know, until we're tired of streaming, which is going to be never. Let's have a little gander at who's in chat at the moment. We've got Craig Pereira with a cat face. Ooh. Not entirely sure, but hello. How are you? We've got Sean saying, yo. We've got Trader Slava saying, good morning. Good morning, Trader Slava. We've got Ramu saying, hello. We have got Fez saying, fix the profitable days counter. We're on it, mate. We'll get to that immediately. We've got Dara saying, morning, good morning. We have Jonathan with 5 thumbs. Dude, I've only got 2. And Will has got 2.
I suppose we could have 4. We could have 4 thumbs.
Sigma FX saying, yo, yo, yo. Good morning, Sigma.
Yo,
How
yo.
are we this morning?
Good,
We've
my
got
man.
Tony Gold, Grand Rising.
Yes,
Yep.
sir.
Every day, all day. Mondays through to Thursdays. Fridays, we're very lazy.
All day.
Sean saying, yes, sir, we are on. Neko saying, Richard the Goat.
Yes.
I don't consider myself the goat, but thank you very much for that. It's actually William the Goat.
Yeah. No, it's William the Sheep, because I am Welsh. It is Richard the... You're not Spring... Yeah, you're Springboks. Yeah?
Yeah, well, we can go so far as to say Richard a Goat and William the Goat. We've got Zion Capital Funds. Hello from India. Well,
Good,
hello,
man.
India.
Hello to you. How are you doing, sir? Good morning, 5%. What is good, Habib? How are you doing? Hope you are doing swell.
Dude, did you hear that in the background?
No.
Some guy on a motorcycle just went absolutely bonkers.
Oh, really?
I was just like, whoa, dude. Corner.
Bro, what is going on? Good morning
Michael,
from Ghana.
morning from Ghana.
Good morning.
Morning, Michael. We've got Louis. Good morning, team. Morning, Louis. All right, let's get a screen share up, you and I, my friend.
You get a screen share, and I'm going to get some music to set the mood.
Yes, please. Let's do this. Okay, screen share is ready. Share my screen. Oh, come on. There we go. Sorry, I misclicked. Trev Beats, dude, we haven't seen you in a while. Morning, Will, and all.
What's good, man? How you doing? Feels like a long time no see, but it probably hasn't actually been that long. It just feels like it's been a long time.
It's been a minute, mate. It's been a minute.
It has been a minute, hasn't it? Trev, how you doing, man? Good to see you in.
Dude, NASDAQ yesterday. What a very nice move. I've already removed all of the drawings from the screen, but I had a trade over here somewhere and kind of just took out up over there. LJ told us to have a little gander at the options price. So on the options chart, which yesterday was at 25,533, if I can remember correctly, which then was somewhere over here. Which was exactly as he, I wouldn't say as he predicted, but as he explained, was that price during the New York Open, which is this line over here, this is New York Open, the NASDAQ price would kind of like drift towards this options price. At least it's going to expire at New York Open. And this was the area where it did expire, but we just absolutely flew through that, carried on going higher, which was very nice for NASDAQ. For anybody who trades NAS, very, very nice upward push there. NASDAQ. And then now, since last night into this morning, we have this very slowed upward trajectory, very slowed. Kind of just waiting for the next impetus. If we go onto the daily, we can see that we are still very much in this banded area. So this flag, ascending flag section, where we did once upon a time have a converging flag. So price kept bouncing between these two areas. And then eventually we had the break over here on this candle. We came in line with the all-time highs over here. We reacted a little bit lower, came back to a lower band, just kind of wicked off of it, and seems like we want to start pushing up. So, for me, I am very bullish on NASDAQ at the moment. I can see no reason to really go bearish again for a while, because we have a lot of structure to eat up. We have this local high over here, we have a base area, and then we have the all-time high segment, which is then in view. Very strong upward push the last few days from last week. What was this, Friday? Monday. No, that was from yesterday. Sorry, not from last week. That was from yesterday. So we had this area down here that was tested on the 4-hour. We reacted off of it very strongly, and we started to push bullishly from there. It slowed down ever so slightly over here. If we do have a little bit of a pullback, that's fine. But I do believe that we're going to potentially pick up again at some point, whether it's during New York session or during London session again tomorrow. NASDAQ is looking really good at the moment, in my opinion. What are you looking at?
I'm going to take a look at gold. I'm going to see what EU did yesterday. So EU was... I'm going to bring... Where am I? Oh, I'm just above you. I'm sitting on top of you, Richard. Can I have a look at what Euro did yesterday? Because it did not do what I wanted it to do. And for those of you who remember what I was saying about the Euro, I wanted to see it do this on the 15-minute. Now, I did drop below onto the 5-minute and say those who want to be trading micro structure could, and this is what I'd want to see. You kind of saw it. This would be like an F setup. This would be a very low probable setup on the 5-minute. However, I was just sticking to the 15-minute, and I said everything will be completely invalidated if we get a break and close below this low here. Now we did. We got a break and close on this low here, and it just invalidated everything for me. So I was like, huh. All right. Never mind then. So stepped away from EU. You know, I suppose you could have taken sells on it. However, the way that I did my higher time frame bias and the way I did my sort of like trend continuation prediction, then I was looking for buys predominantly. However, it sold off, and those of you who were trading pure price action and what you see on the 15.5 time frames, then you could have caught a really, really beautiful sell opportunity. But I stayed away from it, so wasn't interested. Wasn't looking at GU. It didn't really do much either. You know, we had a bit of a sell-off here, consolidation, a little bit of a upwards move over late New York, early Asia, I want to say. So that was okay. Gold has been very nice, I'll be honest. So gold has potentially started its claw back up to mitigate the absolute catastrophic elevator window slide downside momentum, whatever not innuendos, whatever references you want to make for the way gold just absolutely dropped the soap the other day. So, so now that we've got this this massive downwards momentum, and if we're going to the 4-hour chart, woof, look at that. So we did break this down a little bit yesterday. Now, if we go into the 15-minute, you can actually start to see. So this was yesterday's price action. Didn't look that clean for me. I didn't like it that much. However, this area was quite nice. This was quite nice, and this here is okay. I'm not too keen on this. It feels like it's in a bit of middle of nowhere right now, but this was really nice. So those of you who caught this breakout, super nice. Well done on that. Those of you who managed to win a trade in here without higher time frame bias, like without actually having like maybe 4-hour daily, 1-hour sort of entry point, please explain how, because there is zero opportunity on the 5 or the 15-minute for entry points here. So yesterday wasn't interested in gold. Today I'm kind of interested in gold. We got a beautiful consolidation breakout, bit of a pullback, potential continuation here. Going to be really interesting to see what happens over the course of today. Maybe not so early in London session, maybe a little bit later into late London, early New York session. It's going to be super interesting to actually see what happens now on gold. And that's pretty much it. NASDAQ, like I said, Rich has been giving me FOMO with the absolute bombs that he's dropping on the NASDAQ. So I have been watching it a little bit, but I can't find a reason to trade it, unfortunately. Maybe I'll try and maybe I'll ask for a 1-to-1 session with Rich. See if he can keep
I have some really good news.
Go on.
I have some really good news. If you don't mind going over to my my screen. So yesterday we had a problem with MT5 just being laggy, and if you had drawings on your screen or any EA, like for argument's sake, the position sizer, it would lag. But look, the lag is gone. Okay.
Not lagging.
Hold on. Okay. If you have the position sizer, so anybody in chat that's got the position sizer, there is a change that you must make in the inputs section, and it will rectify the lag. So what you do is you can just double click on this top section here. Okay, you can't see it because it says my screen. Anyway, if you right click on your screen and you say experts, position sizer, properties. Okay. If you scroll down a little bit to the section that refers to as fonts. So you probably won't be able to see it all that well here, but you just scroll down a little bit where you choose the line color and the label colors. Where it says label font face, that refers to which font is being used. It should be on Courier right now if you opened up your inputs table. Change that to Arial, A-R-I-A-L. Just change that to Arial and it's sorted. Then you just say okay and it's fixed. It seems as though the Courier face, front face, seems to be a problem, but Arial is great. So this is all thanks to Mike. You guys know him as the mental wealth trader. He just messaged us saying, hey, listen, here's the fix. There you go. No more lag. I can move everything around. No issues. There we go. Sorted. So maybe if you have other indicators that are also still struggling, just change the font to Arial and then see whether or not that
if Arial doesn't work, just try them all. just go through all
of them. But yeah, so sorry, I got excited because I was like, I love.
Yeah, man. Yeah, fair. Go. Yeah, 100%.
Sigma saying, my indicators and EAs are crashing, lag, freeze on every instance on Fivers. I had to replace the .exe file with an older version until the issues are fixed. So, Sigma, try what we just explained. Go and change the font from whatever the indicator is, whatever I don't know, your default one is, and change it to Arial, A-R-I-A-L. And then see if it works.
Yeah, awesome, man. Yeah.
So I know that there are a fair few people that are using MT5 along with the position sizer, and it was near impossible to take a trade. It's laggy. The response time was horrible. It's fixed. It's just fixed. So what I'm going to do today is I'm going to look for a trade on this live account with this information being used. So I'm excited. I'm happy.
Champion, mate. Absolute champion. Smash that like button on this live, guys, as well. Just seen from Remy over here saying, make sure you smash the like button. Also, some big news that we are getting ever so closer to the 100,000 subscribers. We are at 96.8. Let's see if we can get 97,000 subscribers by the end of the stream, or by the end of the day, or by the end of our section. Would be absolutely sick if we can do that. So make sure you subscribe and smash that bell notification as well. And the best response to that is Sean is saying, "Sir, yes, sir, absolutely, my friend." Also, Trev Beats referring to gold, I'm assuming, as a rug pull. You know what? Gold and maybe even silver has acted like a meme coin recently. It is just rocketed up, and then it's just rug pulled. Maybe, I don't know, maybe Trump's rug pulling. Maybe he owns like 80% of gold. He's rug pulling it.
You know what I think happened? I think some of the bigger players decided to start taking capital out of gold.
Yeah.
And then everybody else got a fright and was like, and then did the same.
Oh no, like we must get out, because if the bank's getting out, if the big guys are getting out, we're going to end up getting at less prices, and we got to take the price now. And then it's like that domino effect. It's like that one bank, then the other bank, then the institutions, then hedge funds, then the retails and all the other people. So yeah, 100%.
Culture Avenue is saying, "Hi Fivers, hope you're well. I've already emailed support twice, but my funded account gave the number created on the 29th. I'm assuming the 29th of February, so that's what, 4 days ago. Is still pending risk approval, so I'm unable to trade it." So, first and foremost, the 29th, was that like a weekend? So
Friday, I think that was.
Just before the weekend was Thursday. So Friday, Saturday, and then Sunday most probably didn't count. So you can take today and yesterday as a potential, let's say 3 days, 24 to 44.
Oh. Rich? Are you there? Or is it me? Oh, he's back. Was that you or me?
Was that us? Who was it?
Was that us? Oh, I don't know.
I don't know.
You were talking, it just disappeared. You were like...
Dude, I was talking and you disappeared.
Huh. Oh dear.
Okay, I don't know what's going on.
Let us know in chat who exited, who dropped out.
Who's to blame?
Who's to blame on that one?
Sorry, guys. I don't know who it was. That I'm gonna quickly go and check the live stream, just to see who it was. That's to blame for this suddenness.
Zach saying, "How do I get that risk management tool?" Rich will let you know in just a second.
It was me. I don't know. Sorry, guys. It was me.
I'm not gonna lie.
If we bring my screen up, are we referring to this one?
Yes, I believe so, mate. Yeah.
Are we referring to this one here at the bottom that says NAS 100 risk and then percentage?
Oh, I don't know. No, I think they're on about the position sizer, I believe.
Okay, so the position sizer, this one, you can go to earnforex.com. It is a free-to-use EA. So you can use it on MT4 as well as MT5. It's a free to download. Just follow the instructions at earnforex.com. What you can search for is earnforex.com position sizer EA. And then it will take you directly to the the exact page where it is, and then you can get this position sizer. So it's free to use. I use it. A lot of the people I know, Victor uses it. I know that Jonathan also uses it from time to time. It's very intuitive. It's awesome. So you can get that. But if you're referring to here at the bottom where we're talking about the risk indication here at the bottom, this is a Fivers indicator that you could download. I don't know exactly where to download it now, since they've changed the hub and the website and stuff like that. But that's where we used to get it from there.
You're doing.
LJ saying, sorry guys, I rug pulled it, my bad. Yeah, LJ,
God's sake, LJ, what have I told you, mate, about taking out of gold before letting me know? You gotta let me know first, man. Tell me. Communicate. Yeah. Share.
Yeah, insider trading, mate. We've discussed this.
Yeah. Dude, oh my god, I watched this thing on X earlier, and it was, did this guy just admit to insider trading? And he said something, and he goes, for those of you who betted on this website, for me to say this, congratulations, you've just earned X amount. And the caption was, did this guy just admit to insider trading live on TV? And I was like, ah. I was like, huh, fair. So yeah, there you go, guys. There you had it. Insider trading going on live at Fivers.
Wesley's like, pretty rich of you, Rich, to leave mid-sentence. Pretty rich of me. I'm sorry. I had to do that. I don't know what happened there. My internet just decided it didn't wanna at that point in time.
Barry! Hey, Barry!
Hello, Barry.
How you doing, my man? Miss you, bro.
Forgiven us.
Yeah, I hope you're doing well, my man. I hope you're doing well. We've missed you. It's good to see your face back in. So hope you're doing well.
Saying it was an overreaction to Trump's Fed nomination announcement, and it was an end of month rebalancing of the funds. Massive rebalancing, dropping 12%.
Yes.
Kind of silly.
Pretty rich. I like that. Pretty rich if you're rich. Dude, it must be a rich thing. It must be a rich thing, because lots of riches I've known is just like hopped off stream suddenly in the middle of something.
Dude, I don't do it often. What are you talking about?
Oh, no, it's the first time you've done it, but it's not the first time a rich who has streamed with me has done it.
Well, we've got Rick Wells coming in on Thursday, and you can take that up with him. And then the other one was your brother.
No, that's fair. I actually don't think Richard Wells has done it. Unless his Wi-Fi has dropped out. Oh man, do you remember that as well? Oh, that made me laugh. Back on the old LLTF days. So I used to stream with my brother, who's also called Rich, and he ended up risking on a position, hit stop loss on a personal account, or not on like a proper account, not his stream account, like one of his main accounts. Forgot he had it on, lost on the stream account, doubled his loss on his main account, and just rage quit. He said, "Well, I'm off." Quit, like got off the stream and then just walked off. I was like, oh my god.
Well, here at the Fivers, I feel like we're a bit more professional. We won't just leave you guys high and dry. The only reason I went off of screen there for a second was because of technical difficulties. So you won't see us rage.
I'm off. I can't do this.
So Culture Avenue. Sorry, I wanted to just get back to what I was saying. So generally, the Fivers is very quick when it comes to their risk allocation if you have passed an account, okay? Or if you've gone from phase 1 to phase 2, that kind of like thing. Sometimes what happens though, if that happens over a weekend, or if you pass your account on a Friday and then over the weekend, sometimes it can be a little bit delayed, because for a few reasons, but the main reason would be it's weekend. So the amount of people that's available on the risk management team might be less. Somebody might be on weekend, somebody might be on holiday. It's not an excuse. We're not like excusing like the length that it takes, but just a bit of patience from your side. It is being attended to. So if you've received an email that says waiting for risk, it means that it's gone to the risk department, and the risk department is reviewing your account. So nothing to worry about. It is a very standard thing to do. Also, another thing to take into consideration is that in the background at the moment, the team is working really hard on getting a few events in place. That's going to happen very soon. I'm not going to give an exact date yet, but very soon. So one of the things is the Futures platform that they're working on really hard to try and get that sorted as well. So some of the technical difficulties that we might have might be due to resource constraints, where people are being used to go and make sure that certain issues are sorted out as soon as possible so that we can get the Futures platform released. But on your side, Culture Avenue, it should not be all that long. Well, like I said, if it says pending risk approval, that's good because someone's reviewing your chart or your account. So it's not going to be much longer. Yeah.
What about
Samuel?
Huh?
Sorry, Samuel was asking on which day the price distribution of this week's competition. Are we talking about the Discord competition? I'm not 100% sure. I think it should start rolling out often soon. I'm not like all that active on the Discord, so I'm not entirely sure. Maybe you can, if you are in the Discord, Samuel, you can go and jump in the Discord and just ask what is the estimated time of receival on the distribution of the weekly competition.
Yeah, fair. Interesting.
LJ saying, also chat, tell me, is it about time I changed my YouTube display pic? Dude, we love seeing Mike.
Yeah, what's wrong with Mike, man?
Yeah, the only time we get to see Mike is when you're chatting.
Plus, you know, it's nice to look at a handsome face when your name pops up.
Yeah.
You know? It's better than looking at LJ. God, imagine having to look at that face.
Let's look at the Market Watch.
Joking away, guys. I love LJ. So many people think that I'm actually trolling people when I say stuff like that. I am joking. I love LJ. He's a very handsome fella.
Do a poll. We can do a poll. If anybody, if Remy, if you would like to set up a poll, question, should LJ change his profile pic from Mike, and I'm going to say no, to something else. We can do that.
Someone else. Is he going to change it back to himself, or is he going to make it like now it's Rich, or change it to Jonathan? Bosh.
That's a good one.
That's a good one. There we go. Sorted. There's your answer. Why is it?
Min is saying, "Oh my God, why spread so big today?" So if you're talking about gold is going to be a little like hoppity. If I just chart this one, maybe I should just change the template quickly. But if you look at the spread, maybe I can go down to the 5 minute, and then we add the ask price. Now, it might not seem that much. There is a little bit of a gap, but it's 42 in terms of the spread. That's not that bad. Really, it's not that bad. So it's not all that much, but it's going to jump around quite a bit because once again, we've got market participants, more market participants than normal, and everybody is trying to get their orders in now. So you're going to see a little bit of a hop, but it's not that bad. NAS, I think, is pretty much where it is normally, and even EU is still on 0. So the spreads are.
Don't forget as well, we've got the government shutdown now.
Oh yeah, I forgot about that. I didn't want to bring that up.
Yeah, not again.
Yeah, it's the last time we had the government shutdown. My trading was mediocre.
Stagnant? Yeah, same. Actually, no. I'm completely bullying you guys. Like I'm lying. I kind of don't mind if we have a government shutdown because I was going to agree with you and say, yeah, my trading was very average. Actually, during the government shutdown, I had 7% out of those months. Then it did.
That's not bad.
yeah, exactly. It was like 2 months, and I earned like 3.5% 1% each month. Well, I think one was like 3%, the other one was like 2, and then 1 or whatever it was. But point being, I had a good couple of months during the shutdown, and then we opened back up, and then I had like 2 weeks of just nothing, and then the rest of it was break even.
Yeah, for me, because it was at that time that I started to change over just to NAS and focus on NAS, and sometimes the information was just kind of like slowed. I still got decent enough trades, but I have 2 segments that I kind of like focus on. I have the London section down here, where I have one way of trading, and then the New York section over here, where I have another way of trading. And the New York section was just not doing what I would have wanted. So I got the majority of my trades during London, which were okay. They were fine. They could have been better, but regardless. Samuel is saying no, the Fivers weekly contest. I'm not entirely sure when they do the prize giveaways for that. You can message
support
or and kind of just get a little bit of clarification there. But I'm going to say this once again, just so that maybe the point doesn't go over everybody's heads. There's a lot of stuff that's happening in the background at the moment with the Fivers. There's a lot of events that is being worked on and worked on hard so that it can be the best event that it can be. And it's going to come out very soon. So maybe some of the resources are kind of like jumping between things. And so the attention that might be given to the weekly contest is a little bit, it's been pushed back a little bit, just so that this other format can, or this other event can be focused on nicely. But don't worry, you will still receive your prize if you were one of the winners. We will make sure you receive it.
Sigma
morning.
Oh, no, okay. I was going to say, Sigma saying, LJ is a very handsome fellow, and you, Will, are a bad man. I'm a bad boy. yeah, say that again.
The BNB trader. Should I send you the one I'm thinking of swapping into?
Yes.
Do it.
Actually, do we want to see it?
It's going to be a pre-approval LJ in a unicorn outfit.
Although, we have got the much better butler in chat right now, and I'm not on about his brother, I'm on about even better again. It's Mrs. Butler saying, I can make him a new profile pic. Oh, I don't know. LJ, be careful agreeing to that one. She makes some savage profile pictures.
Yeah, my wife has...
an imagination.
Yes, she's very, very creative. So, the BNB trader asking JPN 225 ready to make new all-time highs and close. What is your view? I have not looked at the JPN 225 at all. So let's have a little quick gander at it. I mean, we were very strongly bullish. We had a little bit of a sideways section, and then we tried to push bullish yet again. A little bit of sideways. It's bullish. Is this all-time highs though? It's been making all-time highs all the while. Yeah. Mm-hmm. No, this is probably going to be all-time highs yet again. We've already on today. We've already made a new all-time high.
Fair. We wicked. What time frame is on? Oh, it's on the daily.
This is on the daily. Yeah, this is on the daily. We've already.
Yeah, that's nice as well.
Okay, so what I can see,
no messing about with that either.
Yeah, what I can see on the 4 hourly is we did have an area of support all the way over here. We had one reaction and then a secondary reaction. A third one didn't quite reach it, but this movement from over here is the one that created the new all-time high. So if I go back to try and see from which point that reaction was, it's obviously from this first one, but there's also a secondary area just slightly to the left that also had a little bit of a reaction. Let's go to the hourly and let's just see. When was this? This was Thursday last week. This could have been news that tried to push it down from here, and then it just failed. It wicked into this area of interest and then started to push off. And then this push down that we had over here was off of that area of consolidation, as well as, let's say, the last candle over here trying to push price lower, failing, and then pushing price higher. So this is good. This looks good. This looks like a very nice bullish area. We've already taken all-time highs. We've already re-established all-time highs. Now, I don't know from historic events how the Japan 225 operates when it reaches all-time highs. So I would say, as always, look for an area where there's a potential pullback, an area that can be focused on. For argument's sake, an area of consolidation, a small little area like that, or previous high swing points that were disrespected, like this. Because it's already broken through, I would rather go to an area that's untested, so an area of consolidation over here. So if it were to pull back, there is a chance that it could potentially pull back to this area over here. And then lower than that, you can look at more areas of consolidation, especially if these areas of consolidation have shown a lot of interest. You have a lot of reactions off of that area of interest. So when it reaches it, it either moves volumetrically out of that area, or when it comes close to it, it slows down and then changes direction. So there's always an area to be tested. So first and foremost, I would say if we were to push bearishly again, or let's say retrace a little bit, I would say that the first port of call would be this area of consolidation over here, which could then lead to a reaction of pushing up higher. Secondary from that, I would say, is if this area of consolidation fails, there is a small little area of consolidation over here from which it can react and then maybe start pushing up again. And then thirdly, from the same area, going all the way down to the lows of yesterday and then reacting off of that. So this is all potential pullback and then continue bullish momentum moves. Or what can happen is it can just straight up have a small little retracement and then straight up just continue from here.
Mm-hmm.
Maybe. I'm not sure though. I'm always cautious around all-time highs with any asset. Always. Yeah, because if it's all-time highs, anything that you have to the left is uncharted territories. So you don't really have structure to the left. Yes, you can use stuff like VWAP and like Bollinger Bands and whatnot. But in terms of structure to the left, there isn't any. So all of this over here is uncharted. So you don't quite know if there's a price point that is of interest based on price action alone. So I'm always cautious around all-time highs. And so should you. You should all be cautious around all-time highs, lest you have something that happens like what happened with gold, new all-time high. You're thinking it's just going to smash through and continue pushing higher. And then lo and behold, we start crashing down.
You're a bit generous with that pullback before the continuation down.
Yeah. I mean, Culture Avenue saying, thank you for the reply. I'm Korean. Welcome from Korea. And honestly, hardly anyone around me is trading Forex, and the Fivers is not well known here. Well, let's change that. Let's change that. Yeah, let's get the Fivers like trending in Korea.
Well, to be fair, I have thought about suggesting that the Fivers send me a bunch of like Fivers flags and all, and then or like Fivers posters, and I'll start like hanging them up in Hong Kong. I have considered that.
Do it. Just do it.
How sick would that be? Should I just get like a little stickers?
We'll send you some merch, and then you just go walk around jogging in your Fiverr shirt. And your Fiverr.
Dude, I went out for lunch today in my Fivers t-shirt.
Nice.
Oh my god! Do you know what I did? Well, someone turned around. I was on the MTR, and someone starts laughing, and it was like this elderly woman, and she starts laughing, like talking to this other woman. They turn around, look like it's like side eye glance me, turn around and go, "Oh, Guaylo," and I was like, "Wow." I was like, I know what that means, right? I was like, I understand you. Like, I can kind of speak it. And oh man, they were trying to be subtle, but I'm starting to be able to speak a little bit more Cantonese, and I could understand what like she was saying. And I was like, bro, I'm right here. I was like, what are you doing? But yeah, like, should I start getting like QR stickers to the Fivers website and start like posting them all over the place?
Yeah, like it sounds like the right thing to do, mate. Just do it. Culture saying, I was quite worried, but your response has put my mind at ease. Thank you very much. It's a pleasure. Now, once again, we're just the streamers, so we don't have all of the information from what's happening in the background. However, if you ever are in doubt, just contact support and just ask them for clarification. They will provide the clarification to the best of their abilities.
Yes, indeed, my friend. Like we say, we always recommend you speak to support, because at the end of the day, we're not support, but we can do our best to answer what we do know. Even if you get a nice answer from us and it's an answer that you're looking for, still check with support.
So this is an interesting question here from Tony Fibo. Hey guys, what's your take on futures versus CFD in day trading? Obviously Fivers is CFD, but why not trade futures? Zero spreads, CME, centralized, reliable data feeds, cheap fees, etc. Well, do I have news for you, Tony? The Fivers is busy working on releasing a futures platform, and that is going to be released much sooner than what anybody realizes. So Tony, if you want to trade futures, the Fivers will have a futures platform very soon. So yeah, I agree. Zero spreads, CME, centralized, reliable data feeds, cheap fees, and so on. I mean, whatever information we have, like NASDAQ. NASDAQ is just the CFD version, is just a derivative of the futures NASDAQ information. So CFDs is just an easy way with leverage to trade. But if you have a futures platform, which we're going to have, you can go and join us there. And then you can choose. You can have CFD, or you can have futures, or guess what? You can have both. And then on top of that, we also have stocks, which is with our Trade the Pool sister company as well, which has their own.
Words, we're absolutely amazing, and we have everything, so there's no reason why we should go anywhere else.
So the reason why the futures platform is taking a little bit of time to be released is because the Fivers will, like with everything that they try and do, they try and have it be the best that it can be before releasing it to the public. They don't want to release a product to the to people from the company side that is going to be buggy or going to have issues. They want it as good as they can get it before they release the product. So there's testing that takes place. There's alpha and beta testing and stuff like that. So we're very close. We're very close to releasing the futures.
Yeah, it's going to be exciting, man. Like, I'm not a futures trader, but for probably about a year or so now, I've been looking at futures and considering getting into it. So I'm excited. I'm really excited because I'm looking at starting like a futures journey live on stream with you guys. So that's going to be super interesting. I'm really looking forward to it to see how it goes. See what it's like. Dip my toe in the water, but instead of dipping my toe in the water and doing it in the private, I'm going to really show and expose absolutely everything about it. I'm going to expose how I feel about it, about my sort of thoughts on my journey, my learning stage, whether I'm profitable straight off the back, whether I take a bit of a hit. So I'm going to be really going on like that sort of beginner journey all over again as a profitable trader, but a beginner journey in a different platform like futures, for example. So stick around for that as well, because that's going to be really, really fun. I'm really interested.
Yeah, I'm definitely registering for the futures platform once it gets released. Tony Gold asking, do you guys accept US-based clients by chance? Why, yes, we do. We most certainly do. We have C-Trader, which is available, I believe, to US customers. We also have the Trade the Pool segment of the Fiverr. So Trade the Pool being the sister company of the Fivers. They do stocks. So you can go and trade stocks if you want to. And then also we're going to have the futures platform that's going to be released, also be available to US-based clients as well. So yes to all of the above.
Stephen saying, hello, rich and well.
What's up, Stephen?
What's up, Stephen? How is you? What is good, my friend? Also, go there. There you go. That's all I have to say. Let's try that again. Anyway, guys,
King Boss is asking about gold. Do you want to go through gold, my friend?
I can go through gold. What I'm going to do first is I am going to bring my chat up real quick, and hopefully that I don't stumble over my words this time, because I've now brought up Euro JPY on TradingView. I'm going to give you my reasons why, because in 8 minutes time, the minute I said that changed. In 8 minutes time, I'm going to potentially be looking at placing a buy position, and it's going to be an intraday entry, but a swing trade position. So first things first, 4-hour consolidation, looking really nice. We did fill this gap, which I was a bit gutted about, but nonetheless, I wanted to get in on that. But we filled the gap now. Hopefully we can pull back and retrace all of this big move here. If we can, fantastic. It'll be about 2.5%. If not, then it is what it is. So dropping down onto the 15-minute time frame, which is where I'm looking at buying it from. It's not looking good. What are you giggling at?
I like how Will's just has no idea. I tried to put the no.
I'm on my laptop though, so I'm flipping stuff around, so I can't see
the no glasses as well. This might be backwards because the thing on the screen.
Yeah, it says on.
I think it is. Yeah, it says on. Yeah, it's meant to be no.
Oh, nice.
It's a no, Will. It's a no. It's a no from me.
Yeah, that's a no. Welcome, LJ.
Thank you.
LJ. Nice
I was going to present my display pic change.
Is this the display pic change that we're having?
No, not this one.
Oh.
Not this one. But it is something like this.
No, this is just today's outfit for some fun.
Okay.
Oh, hang on. That's wrong. So, yeah, this guy.
No, the Teletubbies.
Wow.
LJ the Teletubby son. I love that.
That is.
This is what the vote is on. This is what the vote is on. There you go.
That is
I think it's a good one.
So far.
I don't know. I think it was. I think it was no change.
Look,
no change.
We all love
We've had
Mike.
an interest rate vote with no change. So the Fed said no to it.
As I said, the Fed has said press pause on the interest rate. Interesting. Well, now that the Fed has seen what the interest rate could be, maybe they won't press pause on it. Maybe they'll see if they can cut interest rates.
Nah, dude. I mean, we're going to get radio silence from the US right now because they're trying to put out fires, my friend. They're trying to put out fires, I think.
Yeah, so this 15-minute looks quite nice now. It was very high on the wick, which I'm not too keen on. But if we can pull back into this area here, then I'm going to be pretty interested in potentially buying something along the lines of this. That'd be for a swing position, probably looking at putting my stops around here somewhere.
Euro yen.
Yeah, Euro yen. It's my swing strat, and the euro seems to be recovering against the yen. But however, I say recovering. It's still under, and we are still bearish. But we'll see how it goes. You know, I'm only going to put one lot on it. It's broken nicely above the structure point, so we'll see how it goes. Oh, someone's placing trades before I am. Well, by the way, guys, when I do place this trade, I will bring my my MT back up, and then I'll show you me placing the trade.
Interesting. So I was just popping in just to say hi, and then I was going to dip. But
say hi and then show us your tally.
I'll be seeing you guys very shortly anyway.
Yeah, fair, true.
I don't know if I like euro yen right now, Will. I will just...
You don't reckon? You reckon the yen's going to be a bit stronger at the moment? You reckon it's going to hold a drop?
It just seems very neutral. I think as far as if I wanted a yen cross, I'd kind of like the majors right now. Like euro dollar is a bit sad. I'd rather go, you know, pound dollar or look at or like AUD yen. Like go look at AUD yen or pound yen. They've got much more drive. Like euro yen is kind of stuck in like the neutral kind of 50% of the prior trading range for some time. You know, you've got some of the other guys like AUD yen. Obviously, today had kind of the breakout with the RBA. You know, this might now be due a pause because we already had the sort of data flow come through. But you can see it's much healthier than right now. And we do have the ECB on Thursday, not to forget. I just don't want to see a brother get stitched up. You know? So I'm just trying to help a brother out.
Help a brother out.
So I'd probably go like pound yen, maybe. Just because pound is moving much more.
Pound's moving much more in general anyway. So if you look at the euro at the moment, it does look a bit crap. Looks a bit sad, like you said. Yeah, we got that area of just complete, like, I don't know, ice cream and sun yesterday.
Because they're moving in the same like
fashion
direction on each of the higher and lower time frames, but just the pip movement is pretty terrible for euro yen. It's or euro in general. It's pretty stable.
Yeah, euro. I would say euro dollar is a bit crap. I mean, yesterday we had a bit of movement, but wrong direction. But
yeah, so you'll probably just have a better time getting in and out on pound yen, but it'll be basically the same trade, just with better.
Better movement.
Yeah. So anyway, I can disappear, so I stop annoying you guys and come back later.
Dude, you're never annoying to us.
We've got my
you are a
granny kind of cardigan thing on right now, and my little pink bucket hat. But
dude, you know who you remind me of? Jamiroquai at the moment.
Rave hat.
Okay, now you're just straight up Elton John.
Hey, fair. Look, Elton John's a respectable man as well. You know.
Yeah.
Right.
I feel
Nothing. Hey, there's nothing wrong with a bit of Elton John.
Jamiroquai probably more
your jam.
My vibe. I've got a very Jamiroquai hat. I'm sure you've seen it before, Rich.
I have, yeah.
Yeah.
Courtney is asking for us to please have a look at AUD CAD. AUD CAD. Interesting. I don't think I've ever had a look at AUD CAD.
That's interesting. Okay. I'll hang around just for this one, since we've got the odd question today.
Okay, so AUD CAD. Let's start with, we've had a little bit of a, how can we put that? We've had a very slight upward tick, but more consolidative during this whole segment here. This is on the daily. So for the longest time, we have been kind of sideways. So this whole range is from, what is this? September the 12th. All the way to January the 26th, or the 6th of January. And then since then, we've broken above these high points, actually closed above, and then just straight up.
And then we're straight back into consolidation.
Straight back into consolidation. And then a very nice upward tick, a little bit of a pullback, and now a continuation higher.
Yeah,
And I also think that this one is close to all-time highs. Oh, no, it's not. There's all-time highs is all the way up over there. So let's see where we can be testing if we carry on pushing higher from here. Okay, so let's go back. Let's see what action we have to test. So we have straight up an area right over here. If I pull it all the way back, it seems as though it had some reactions. Not bad. Not bad, I think. So this is basically where we can go and test 0.9756.96901. That's the next port of call if we're going to carry on going bullishly.
Did you say 967?
Yeah, 0.975 to 0.969.
9. Okay.
Yeah. But it's interesting because it seems as though if I just check the higher time frames, let's check the monthly. We have been quite bearish, actually, for an actual long time. And then we've kind of like come into a little bit of a consolidative section here, which we're now breaking for the first time effectively. And this is months. This is months and months and months. So first time in years.
Yeah. I can tell you why.
Tell us why.
So it was the pullback of commodity inputs. So they're both very commodity related countries, right? Now, after the GFC, we had the massive run up in the super cycle of commodities and China taking advantage of that. That then, once we got to that period at the peaks that you're looking at around 2013-14, that started to come back off. China had kind of gone through that massive growth phase, right? Then at that point, we did have oil, which was on the downdraft because of the GFC, then starting to rally. And we had some of the 100 plus periods, right, on Brent and crude. So obviously, the majority actor for Canada is typically looked at as oil. For Australia, it's things like copper, uranium, iron ore, that kind of stuff, typically, and gold. Gold is another big one. So obviously, they were all coming off whilst oil was becoming more in demand as the economy got better. So we saw the regime shift of that. Back at that time, around 2012, 2013, the Aussie dollar was above parity with the US dollar as well. So since then, we've come all the way down to 60, 70 cents. So hence just that general flow of Aussie dollar coming back off. Now, recent times, we are seeing commodities come right back up, just like with silver, gold, copper, the lot, rare minerals. But we've seen oil come down, and it's sticking lower. Furthermore, Australia has done very well as far as the trade tariff talks with the US, because we're very friends. We got one of the lowest rates just off the bat, and then got a lot of, they just scrapped everything altogether. Trump has had a lot of troubles with Canada, and they've had about a good bit of beef. And then also recently, we've seen commodities go further higher: iron ore, copper, all the rest, silver, gold, blah, blah, blah. And we've seen the US take over Venezuela. The majority person that hurts as far as oil is Canada, right? So hence, we're seeing a furthering of that. And then we've also had the economic conditions for Australia recently increase. And like today, we had the rate increase because of that. So there you go. That's the summary of why that's there.
Nice.
Makes sense.
So given where we've peaked, I'd be looking for a bit of a pullback. I'd probably just throw like a kind of fib retracement or something like that.
On this full move.
Yeah, so on this recent move, so you've got 2 points of call. The prior high. Oh, sorry, my screen's not showing. My bad. There we go. That's better. Okay, so you got the prior high down to these lows that we've rallied off just recently. So per the break and the new high, I'd be looking for some kind of a 61.8% retracement on that, and then a extension to the 161 as a port of call.
So 96.8-ish?
Yeah, 96.80 basically. That and or, which with some of the levels that you were looking at just before, Rich, if you run it from the recent low plus today's top, the 161.8 would be 97.37, which is just under some of the levels you're looking at. So those would be my first ports of call between those two levels, basically, right?
Yeah.
That has shifted completely. Hang on.
An oopsie. It does look bullish. It really does. Yeah, so especially since we've had, like, for the longest time, what is this from? We had from May all the way into September. We had consolidation and then a start of a new upward attempt. Then straight back into consolidation, breakout of that. But now we're actually seeing, for the first time in about a year, slightly less, obviously here around about April, we had that massive dip last year. But for the first time, we're actually seeing some confident bullish movement. Where in April, we had that slump, that quite a pull down lower over here. So very, very much slowed movement, a drop down, slowed upward tick. This is just all consolidation back into this area over here. Tried to push higher, broke that recent high, straight into consolidation, breakout yet again, a little bit of consolidation. But now we're actually seeing what I like to see in terms of, like, price movement, like a little bit more conviction.
Yeah, and so going back to that April period is obviously the Trump tariff period. Aussie dollar being the higher beta currency of the two. At the same, like, Canada is to a degree because of commodities, but they are pretty much almost one-to-one with the US. Like, they're almost kind of the same economy. It's just, like, slightly less, but they share a lot of stuff. So whatever happens to the US will be more what happens to Canada. So Australia has much of the China risk with that. So yeah, I'd be looking for a small pullback here since we've played this out pretty strong, and then looking for buys a little bit lower, 61.8, 50% retracement, and then head higher towards 97 plus.
I'm inclined to agree with you. Okay, I've had I just put the fib up here now, but I have a base area on the daily, so that little bit area of consolidation basically, and that's between the 0.718 and the 0.618 section on the fib. So 93 or 0.9322 to 0.9272, somewhere around there, I think is a good area for a potential, like you say, retracement. But it does.
I just don't know if we'll get that low.
Yeah, I also don't know. I'm like looking at this, I'm thinking it's more conviction than we've had recently. So this might just not come back.
Yeah, and it's because of the rate change today, which I don't think they should have done. Talk about that a bit later, so we can get into it later. But it's sort of shifted the balance. We're already shifting that balance in general with the Aussie. I mean, per the dollar, we're up almost 4 cents since the start of the year. But now that's sort of further dug that in, and it makes the forward positioning very murky as far as potential further rate cuts, which
I do like this
terrible idea, but
0.9533 to 0.9516. Okay, refresh. Thank you. This looks a little bit better. However,
you would need Trump to sort of pull back on his aggression towards Canada to probably help that. Yeah, that's kind of the area. Yeah.
Yeah, I would say these two areas potential.
Yeah.
This move, like you said, this was the news of the rate change, which seemed positive. When we had the opportunity to try and push back, it didn't really go all that far down, and then we had the slight push higher. So it does feel as though this is the general gist. We want to continue pushing higher. How strong? Don't know yet. A bit of a pullback right now. Maybe we can start seeing a bit of a turn back.
Yeah, at least for today. Like, so I did short the Aussie on the Aussie dollar from the tops just earlier. I'm now out though. I would prefer to see a bit of a deeper retracement, but right now I think that might take some time to actually muddle through. You might need a catalyst of the NASDAQ coming further off. We've had some beef between NVIDIA and OpenAI. The rest of earnings have been pretty good though, so that's giving things up. Just like we saw the drive higher yesterday about the NASDAQ positions we were talking about. That played out very nicely. So yeah, ideally, and then I'll go away for a bit. 95.20 to 95.35 is kind of where I'd have my eyes on for AudCAD.
On which one? On AudCAD?
Yeah.
95.25, you say?
95.20 to 95.
95.20.
Yeah.
Okay, so it's this area down here.
Yeah. So it'll just be whether you get a partial stall catalyst in between that, or like the full sort of up, down, and then continue. And normally you get like a slightly higher low per where we rocketed off after the RBA, and then continue higher. Right. So it's basically in that cluster, and you're just looking for the overshoot because it is like a more exotic pair. Often you won't get the exact level points. It will like overshoot a bit, kind of like gold has a tendency to do so. But yeah, anyway, I'll say bye for now. I'll see you guys in like 15 minutes anyway.
Yeah, go get yourself a coffee.
Yeah. Exactly, get myself a coffee. See you guys. Ciao.
Awesome. LJ, just being Mr. Random.
Just drops in and just drops absolute bombs on us. Let's go, my man. See you later, broskies. Well, yeah, see you in like 15 minutes, 20 minutes.
Jatin Singh asking us very, very, very much to have a look at NAS. We'll get to that right now. There we go. Let's have a look at NAS. So this is on the 15-minute right now from yesterday. NAS reacted off of... Wait, maybe we should go over to the daily. NAS reacted yesterday off of a very nice area of support down here. It doesn't look that way right now, but if I go onto the 4-hourly, you will see it. It makes a little bit more sense. This was the last time the price tried to push bearishly before we started to push up nice and bullishly. When we had an opportunity to push price down, we never even remotely came close to it. We came to basically this last candle over here. So we pushed all the way down into that area, and then we volumetrically reacted pushing higher. However, we're not really making new highs. This was in a high area over here that I wanted us to break through. We haven't broken through it yet. So this, even though this reaction down here was nice and bullish, I think there is a potential for us to potentially start pushing back down again. So if we go on to the daily, we have this area where we are right now basically being an area of interest, and then we have this upward channel trajectory basically coming into play. Much stronger reaction here at the tops, but still no all-time highs. So all-time highs were not taken, and we've already had this strong reaction pushing price lower. So in that regard, I'm a little, I wouldn't say concerned, but like I'm waiting for NAS to show me what it wants to do. This slowed reaction that we're having here at this current area where we are right now, we did have a push down from this area already once before, and that was on Friday. So I want to see whether or not we're going to have the same reaction where we are now. I'm a little bit like on the fence about as to what NAS wants to do right now. Even though it's a very slight upward trending channel, it's very slowed if you compare it to what we had yesterday. And on top of that, we do have, let's call it radio silence coming from the US based on their the government shutdown. So generally when you have stuff like the JOLTS opening, the rate cuts and stuff like that having an impact on all of these indices companies, we're just not going to see that. So we're going to have to rely almost entirely on what these companies are doing right now. So that input from the government is just not there. So I don't know if we're going to have like a strong push down because the information is slowed or held back, or are we going to continue this slow upward movement over the next few days? Still waiting to see that. But in terms of intraday, something to look at for intraday trading, if I just remove this and this, you always look at price structure. So you have high swings, you have low swings. It's always something to look at is how we're reacting in relation to these highs and low swings as an example. So if we start breaking lower than recent low swings, so if this is your recent low swing, if we start breaking lower and then potentially coming to retest it to continue lower, then you can potentially get in on a sell there, targeting either previous areas where price had some back and forth indecision, something like this. You can aim for somewhere down there, or you can alternatively just wait for a reaction like this where we start pushing up, wait for a candle that signifies the continuation of this upward channel as an example, and then you can get in on a buy. But as it stands right now, I'm sideways on NAS. I'm just waiting for the right kind of reaction. Not seeing it yet. Even on the 5-minute, it's a bit slowed. You know, we had this little channel over here trying to push price up, consolidated, tried to break above, failed, and now it seems as though there's a little bit more bearish influx coming in, even though it's very subdued. It's very slow moving. It's not very strong.
Awesome. Yeah, I got no views on the NAS right now. I looked at it and I'm not really seeing anything. It's not quite where I want it to be. Gold, however. Do you want to do it? Are you going to walk off the
gold, mate?
I'm going to have a quick look. I've already looked at it. So when you and LJ were chatting about AUD CAD, I had a quick look at gold. And I'll be honest with you, it looks nice enough for me to have put an alert on. Although, right, I don't know what's going on with my MT at the moment, but I've got an alert set right here.
You can't see it.
I can't see it.
Right click. Anywhere. Mm-hmm. Just right click anywhere.
Yeah.
Then on your the trade levels, property. Make sure that one is selected.
Muppet. I must have accidentally unticked it when sorting stuff out on the back end. Okay, fair point.
And then if you want to change the color of that, you right click and then you say properties, and then you go to your color segment, and then you can just change the colors there.
Legend. Diolch yn fawr, Rich.
I did the same
side.
today. I had an alert set up for NAS, and then the alert pinged, and when I came to look at the screen, I was like, where's the alert? Why is there no alert like line? And then I was like,
I was looking at it,
didn't select the...
I couldn't see anything. I was like, what's going on? Why can't I see it? But yeah, fair. I didn't. Maybe I should have checked that before saying. But yeah, I must have accidentally unticked trade levels when I ticked trade history. Anyway,
Is that kind of like anti-blind?
Yeah. So looking really good here on gold. Got this nice bullish movement up. Got this consolidation. I'm not going to call it a pullback zone. Let's call it. Got a pullback zone here. Break through the pullback zone, and then we further pulled back on the 15. Dropped down to the 5. It looks just that little bit sweeter. So on the 5-minute, we've got this consolidation, micro consolidation. It's like a very small consolidation zone just here. Followed after this this pullback, and then a continuation up, broke above the consolidation, pulled back, tapped in beautifully, and then moved off very nicely off the tap of the consolidation, off the retest, should we call it? So just want to see if this can push above. If we can get above 49.49, I think I'd be interested in buying this. I'm going to be very careful. Yeah, I'm going to be very careful due to the fact that it just absolutely melted like an ice popsicle in an oven set at full blast. So, I'm going to be very careful on it, going to see how it goes, and then I don't know. Well, as you can see, I've drawn out what I want to see. That's what I want to see. Preferably this one here, the top arrow. But I'm also very happy to see this bottom arrow as well. So we'll see how it goes. But right now, I'm not going to rush anything. LJ has scared me away from Euro JPY, but I probably will look at trading it anyway. I'll probably just reduce my risk.
You scared me, but I am very persistent. I'm going to trade it regardless.
Yeah, I'm a persistent little degenerate. So I am going to trade it because it is in my plan, but LJ has scared me enough to force me to reduce my risk. So that is what I'm going to do. I'm going to reduce my risk on EJ, but I'm still going to trade it because that's what's in my plan. And if I let other people, change my ideas on my trading plan, then I wouldn't be a profitable trader and I wouldn't be sitting in front of you guys now. So I am going to trade it. Big shout out to LJ for trying to help a brother out, but sometimes you got to stand on a landmine to know that's explosive.
Wow. Okay, what an analogy. I mean, sometimes if someone can just put a land post up for you saying, "Hey, listen, minefield, careful."
Yeah.
But I agree with you. You should trade your strategy. And if your strategy is saying trade, you should follow it because that's your strategy. You've got the backtested data. You've got all of the information that you need. We should try and refrain from being scared of our own analysis. Let's put it like that.
Yeah, no, exactly. Yeah. However, when you trust people that are, are very good traders, especially when it comes to the fundamentals like LJ, it does make you're like, am I wrong? Like even Anastasiia has admitted to this one. Like, even Anastasiia said, yeah, thanks LJ, you cost me money because I took your word for it.
You see, so LJ is a great trader, seriously.
Yeah.
And he is, I would go so far as to say
he's a bit of a trader LJ is. We're all very profitable traders. That's why we're here. LJ
says be careful, we're like,
he can sway us.
No, but still, I agree to what Louis is saying. Stick to your plan, mate.
100%.
It's what got you funded. It's the thing that it's the only thing that you can fall back on is your own.
Yeah, 100%. Yeah, so, I'm not going to go flying over to Australia and saying, "Oh, come on, LJ, what are you doing? How dare you make me take that trade or not take that trade?" It's just
take responsibility for your own decisions, and
exactly.
You can heed his warning, but go with your analysis.
Right at the back of my...
Akko is asking, what currency pair are you trading? So in general, I trade the NASDAQ, and then I'll have a look at UJ on a different pair, and then I don't touch gold anymore because gold is just silly.
Gold
And
is
then
stupid. It looks good on a
Gold
watch,
is
it looks stupid on the charts.
yeah, and then Will, tell us what you trade, mate.
I trade predominantly the majors, Euro USD or GBP USD. Haven't really traded them much recently. However, I love gold. It's got me pretty much almost out of 7% drawdown on this account. So gold and I have a bit of a love-hate relationship, but I do trade it. And I do dabble with the NASDAQ and New York session. Since living in Hong Kong, New York session. Since living in Hong Kong, I haven't really traded New York session, so I haven't really traded the NASDAQ. So yeah, pretty much just stuck to gold and EUGU intraday, but I do also swing trade as well. So I do have EJ and NASDAQ testing the S&P and USD. There you go, that's the third one, USD. So I trade a variety. That sounded like a lot. It's only 3 swing pairs and 3 intraday pairs, to be fair. So it's not actually that much. And I don't trade them all like simultaneously. I'll pick and choose different accounts, different times, different. Yeah. But right now, I'm looking at trading EJ and gold. Just in case he was on about immediately what assets I'm trading.
Ahina is saying, I trade in gold only and it works very well. See, that's the thing. That's the thing about trading that I really love, is the fact that you have so many people that are going to view the market completely differently. And to me, gold is, I don't fancy trading gold, but there's going to be somebody out there that is only going to be focusing on gold and it's going to work really well for them. And
yeah.
For me, NAS has worked really well. How long it's going to work, I don't know. But the point still being that everybody has got like that thing that they feel like, okay, I've got this under wraps. I understand how it moves. I've done my back testing. I've got all of this information that kind of aligns with my strategy. I like this. And it pays you. And ultimately, I think at the end of the day, it's this idea that people want to compare themselves to other people to kind of like get a baseline of where they are in the world. If you focus on your own journey and your journey is providing you with results, that's great. If your journey is not providing you with the results that you're looking for, then you can maybe look to other people and say, listen, I need some advice. I see that you're very successful in what it is that you're doing. So then you can maybe get a little bit of information from those people to help you and assist you with your journey. But I think overall, your journey is yours. You're the one walking it. You're the one that should be focusing on yourself. So that's good. I like.
Yeah. Primal Light saying, I like trading in gold. However, I think that last week the big fish has definitely manipulated the markets by mass sell-off, triggering stop losses, margin calls, and for retail investors. It's an interesting outlook on it.
Maxwell Bonnie's asking, Richard, do you mean NASDAQ index or futures? Well, I take the CFD version, which is just US Tech or NASDAQ. So on TradingView, it's US Tech 100 index from IC Markets, and it's NAS 100 on the Fivers terminal. And the time that I traded is the London session and then into New York session as well. So yeah, so both London and New York. I have 2 strategies for NAS. For London session, it's generally a 1-to-1 or a 1-to-1.5 R trade. Expecting a little bit less movement in the earlier segments of the London session. And then as we get closer to New York session, you would start seeing some more volumetric movements for New York, going into New York, and then maybe a bit of a retracement, and then a continuation or a complete turnaround during New York. And then I have another strategy that I follow for that one specifically. So two segments during the day, 1 London session, 1 New York session. I generally get a trade in both areas. Not always, but in general, most of the time. Once the future section is released for the fivers, I will most probably go over and trade NQ with futures, the futures platform. So still NASDAQ, I'll just do the futures version.
Yeah, I'll probably predominantly be trading NASDAQ because that's the one that I've got. That's the indice that I've got the most experience with. However, I will be, US 30, I'll probably just trade on my swing. However, I like S&P. I've got a little bit of experience with the S&P, but when it comes to the futures, NAS all day long.
Yeah. No, I really do like NAS.
Yeah.
Or futures NQ. I really do like it. So I'll try and focus as much as I can. Ahina saying, yeah, so I wanted to point that every script works well. We just need to find out which script suits our trading style. Agreed. You can make any trading style work, bar with the caveat that you've done the back testing, you understand the limitations of your strategy, you understand when it works, when it doesn't work, and you've catered to making sure that if your trading strategy does start going into drawdown, your account is still safe by not over risking and over leveraging on trading. So anything can work if it was tested.
Yeah, 100%. Yeah, test it, back test it, forward test it, in test it, out test it, everything test it. Just test it. Keep testing it and test it and test it. And if you feel like, have I tested enough? The fact that you've got to ask yourself that means it's a no. So keep testing it a little bit longer, a little bit more. And then once you've said to yourself, I am confident, I have tested enough, I don't care what you say, I've put all the hours that God has given me into testing this asset, this currency, whatever, then that's where you've got the confidence. That's where you can say, right, now I'm going to live trade it. And then if it doesn't work for you, two things. Either you look at the strategy as a whole and say, is this working for me as a person? Like, is this suiting my personality? Or you can look back and go, okay, I was wrong. I need a little bit more testing, because that's absolutely fine. You can be wrong. You can say after a week, I have tested the Holy Ghost out of this. However, I'm going to now put it into real testing, and then next minute it goes wrong because you thought that week was, you were certain, you were positive that it was enough. Turns out you were wrong. That's fine. That's okay. You can test it for a year and find out you're still wrong and you need more testing. That is okay. The one thing that you must not do is rush it, get it wrong, and give up.
Yeah, agreed. We have a really, really, really good trader in the background. I don't know if he wants to be on screen to show his face, but I think he's a lovely guy. There he is.
Well,
look at him.
There.
Good morning, everyone. Hi, Richard.
What's up, LJ? What's up, Pedro?
Let's go. Good morning, everyone. How is everyone doing?
Good morning. How are you doing, sir?
I'm good. Happy month. Happy February already.
Happy February.
Yes, absolutely.
Time flies.
How was your January?
Slow in one aspect of trading. A lot of organization in another aspect in terms of the fivers and the Portuguese community. So that's good. But I'm looking for now for Feb.
Yeah, I can't wait for Feb. I'm hoping Feb is going to be a lot better than January, because January for me was diabolical. I haven't looked yet, so I'm actually gonna go get my history for January up, and I'm gonna share it with you guys. But it's going to be ugly. Yeah, 1.9% down. I lost 2% in January.
Yeah,
January is not for everybody.
Mostly gold, hey. Damn.
Mostly gold.
Yeah, fair. It was mostly gold as well.
Yeah.
There are days where it really works, and then there's days where gold just goes, nope, not today, my friend.
It happens.
Yeah, 100%. Like you said, there's days where it really works, and there's days where it just really doesn't. So, what can you do? You just got to trade your plan and plan your trade.
Exactly.
Exactly.
All right, gentlemen, we have Pedro and LJ that's going to carry on with this segment for us for the next 2 hours or so. Well, Pedro is going to be for half of that. Unless he wants to carry on and stay on with LJ until the end of the segment. That's up to you, my friend. But the rest of us,
we'll
myself and Will, are going to jump out for a little while, and then we'll see you guys a little bit later.
I don't want your background. So now I hope you guys have frames. I think I need to start putting something on my wall as well. I need to get something.
All you need to do is just literally just shift your camera a little bit.
Bullied, and people kept saying that I was in prison, so I had to go get something. Otherwise, I just had a plain
I need to get some
behind me.
frames. I need to get some frames. Either that or some nice slides like LJ.
Well, you need to get like a moving slug like mine.
Yeah.
It's just meant to be Suzuka, but
I like
looks like a slug.
All right,
so it's
guys.
like a snail
We'll see you in a little bit of time. I'm going to jump out. Oh, yes. I wanted to say, for everybody that was asking about the futures, stick around later today. We're not going to say when the futures is coming out. However, we have a special guest later today. And this guest is going to be pivotal to the futures platform. So later today, during Victor's segment, we will have this special guest, and this special guest is going to maybe excite everybody a little bit when it comes to the futures platform that will be released very soon. So please do stick around for that segment a little bit later this afternoon. Yeah, I just want to mention that. So
yeah, I'm excited.
we're not ignoring you when we're talking or when you guys are asking about the futures. Just there's stuff.
I mean, we're
happening.
trying to because we're
rollout.
dying. Yeah.
Yeah, the rollout is in progress. The wheels are spinning. Don't worry.
Exactly.
Yeah.
There's cogs and they be
Train
turning.
has left the station already.
Yes.
It's like when you're on the
Anyway,
drag strip and you got the burnout going because
You're burning the
launch
wheels.
control
Yeah.
and you're ready to just fly. Yeah, that's it.
Yeah.
Yeah, that launch control has now initiated. We're just now bouncing off the limiter.
All right.
Exactly.
With that being said, I'll see you guys a little bit later.
Yeah, guys, I'm off. Yeah, see you later, guys.
See you.
Take care.
Yes, thank you guys.
Ciao.
Okay.
Thank you, Rich and Will.
Yeah,
Hello, Pedro.
thank you very much.
How you doing, mate?
How are you?
Pedro.
Again.
Pedro.
We'll get that intro sorted. We'll get that intro sorted for sure.
Maybe I got it myself. I'll make like a similar but different version, so there's no copyright, and do it.
Yeah, definitely. I'm off for it. Yeah, that's going to be interesting. How are you doing? How is January for you, and what you are looking for now with these crazy moves that we have seen so far? Maybe I have a few questions that we can talk about this hour. How is everything?
It's been good. Yeah, that's been good. So, a bunch of the numbers we're talking about back all the way. It feels like yesterday, but also a long time ago. Back sort of Q3, Q4, with a bunch of the targets for Euro dollar, Aussie dollar, things like gold, etc. Coming into Q1, Q2. So basically starting 2026. Now, I will say they got there a little bit quicker than I thought, but either way, direction correct, and I was already positioned for that. I just thought it might be closer to end of Feb rather than end of Jan that we actually got to these numbers. So like we had the 5,500, 5,600 number on gold, that's played out beautifully. I think it was 112 to 118 on silver, which is pretty much on the mark as well. And then Aussie dollar, 70 cents with the first point of call pause point I thought we'd get in January at 69.40, and then take a bit of time to ease into the 70 to 71 coming into end of Feb and starting to round out Q1. Same with the euro, back up above 120. we obviously smashed right through that. And like I was saying, when we do get there, I expect it, however, to be very thin air, and we drop down pretty quick, which we also have done. So all of that has gone quite handsomely, which also actually leaves with a problem at the same time, that we've gotten there too quick, and now I have to reevaluate where do we go to next, right?
Okay.
So as far as my January, that's actually turned out pretty well. The same thing, like I was saying at the start of the year, I was sort of waiting for some of this stuff to sort of come through, some of the data, the Fed thing, this and that, however it was going to play through, the day-to-day news that we got. So I was definitely taking far reduced volume of trades and just very strategic, and still leaning on those ideas and those directions, but I was willing to call either a new time frame or that something had changed, which is why I was in that kind of like, I need to think about it, but then doubled down on, no, I've assessed everything, it's all the same, went for it, and I've taken far reduced trades, but yeah, cleaned up. So it's been quite nice,
Just
to be
more
honest.
quality versus quantity. Yeah.
Yeah, which I'm actually trying to do more of, as far as it's been part of, like we were saying before the start of the new year, trying to, or coming into the new year, want to get a bit more sleep, free up some of my time and reconstruct things, right? So doing more of that. More of the scrappiness stuff is just because I'm so backlogged with other things. You can only come to the market at certain times, regardless of when you'd like to, and you kind of just have to deal with what you're getting. So yeah, I've tried to very much push back against that and go to sort of where I was 6 months before, when I had that more clean airspace. And yeah, it's been good. So I'm glad I forced it. So
yeah, that's good. So you're already seeing kind of the benefits of kind of that shift of a routine, or at least the goals that you're working for.
What about yourself?
For myself, actually, last week I got also two nice trades. I missed the long on dollar CAD by a little bit. It was actually one setup that I've been talking about during the live stream last week. But I did manage to get the short on the Aussie and the short on the pound, which is a little bit similar to what we just mentioned. Like it's exactly the type of setup that I'm more looking for, those kind of more higher time frame reversals that can last a couple of days or eventually even more time. In this case, it lasts a couple of days. Both the Aussie and the pound got target yesterday, or the second target yesterday. So I'm already out of the move. But that's exactly kind of what you mentioned. That the main thing that I liked about the setups was the patience and actually waiting for finally to see the reversals. In this case, it was in alignment with the dollar, and when the dollar finally started moving to the upside, the other starting to move to the downside. This unfortunately was the miss on the dollar cut. Was really, so I've been looking at this move for a while, of price starting to slow down. I did mention about this situation where price eventually starts to slow down. And this, for me, I call it compression, which price starts to still making slightly new lows, but also starting to challenge a little bit the previous highs. And maybe you have a little bit of a few break-off structure in between. And then the main point was that price actually was reacting from a good level also on the left, and we had liquidity in the mix. So yeah, that's basically all of it was in alignment. That was really good, but I did place my order a little bit underneath within this rectangle, and price got really close, but didn't tag me on this setup by a little bit.
Oh wait, you tell me you didn't get tagged.
Yeah, I did. Yeah, I didn't get tagged on this one, unfortunately, by a little bit. And then when I saw it, price was already moving. And now I'm looking to see if there's a little bit of retracement, and maybe price can get back close to this structure to go up again. So maybe I'm going to look a little bit more into some potential reversal. But there you go. But this is more of the trade that I wanted. That's maybe beginning of a new cycle. Again, price has been moving just in one direction for almost 2-3 weeks, which is also something that I like to see. Basically since the 16th of Jan all the way until the end of January. So 2 weeks, price is moving in one direction. And usually in FX, that's about time for price to turn around. And of course, that was all in alignment with the dollar. but the one I got was on the pound. So on the pound, I did manage to get that one. Actually, this one was literally on the pip as well. Nice Quasimodo. Again, price starting to show a little bit of weakness. Again, the dollar potentially start to move to the downside, and I did manage to catch this this move in here. I got out somewhere around that level, to be honest. Price maybe can still go a little bit further down on the pound. Maybe can retest these 135.5s or something like that. Yeah, but I'm already out. If price goes up a little bit again, maybe I can catch another short. I was looking at the same thing on the euro, but the main difference is that the pound actually, when it created this big move up, start move down, then it still managed to get a little bit closer to the tops, while the euro dollar never really managed to do that. As you can see, basically this circle, that's where I was looking for price to eventually go to sell, fake out this top in here, which is basically what the pound did. Pound did fake out this high, and then they managed to get in, and the euro never really managed to do that, just continued to fall from here, and I didn't manage to get anything on the euro. And then the Aussie, it was also kind of a nice entry, kind of it left that supply behind. Price was reacting from a good level in my view, on the left. And then the price action itself was not bad, and kind of retesting this structure here. That's basically the trade I was mostly looking for. So this was there you go. It lasts from Thursday afternoon all the way till yesterday, which is kind of the type of trades that hopefully I want to be more focused on. One of the main actually charts between the euro dollar and so on, it was the euro index. For me, it was one of the cleanest ones that gave me the confirmation that maybe the euro was about to see some selling pressure as well, and that could align with the rest, which was this chart itself in here. Just based on the way I look at the market, the way I look at it, kind of I identified this rectangle. I noticed that price had broken this key level of structure, and then the way price respected the top with this spike and start moving to downside, it looked like to me a really valid double top, and I was looking now for the euro index to continue to push lower, which in this case would mean euro weakness overall. The move that I was expecting eventually on the euro and also on the euro index was, instead of price just falling through just like the euro did, I wanted to see maybe retest back into these left shoulders and then step off, but that never happened. So I kind of, it is exactly the same that happened on the euro. Like there was never this move before the move down. Maybe that can still play out in the future. Maybe now price just took these lows again. Maybe can retest all the way back into this level, and from here maybe find new selling pressure. That's something I'm paying attention. And then I'll be paying attention whenever price gets in here. Maybe can find new buying pressure again on the euro index, which means maybe on the euro dollar and so on. But this chart in here, it was really clear for me in terms of the direction that I was expecting on the euro, and in alignment then on the dollar and so on and so forth, because of all the correlation that we saw in the last few days. But yes, it was a good dollar focus trades, and now let's see what's next. To be honest, now I need to find out where the new opportunities are going to be. If it's going to be on US indices, are going to respect the highs again and start moving to downside. Yeah, I need to find where the next opportunities are now. But
yeah, it's perfect. I like all of that. It's really good. Same with the dollar CAD trade as well. Obviously, you slightly missed it per the entry. But yeah, like I was talking on here with Canada being the biggest loser from the Venezuela situation. So that immediately, shifted that kind of aspect right there. And really good pickup with, the Euro index. After seeing Euro dollar breaking highs, breaking through 120, a lot of people would think, okay, Euro's
that was a level, so yeah, exactly.
Right? And this is one of the things where not just to look at the Dixie, right, the dollar index, but also look at the other Euro index. You always love looking at the yen index as well. Yeah. So look at these things as like a collective, and then make a decision. So if you saw that we've approached those highs, but failed to actually match the high or break a new high. Meanwhile, Euro dollar is actually broken out from like a couple year term. That tells you there's weakness
basically
coming.
Yeah.
So it's a brilliant
Yeah, that's the environment. That's the kind of the try to increase the odds that on my favor. It's literally through correlation. I just love that. I just even feel more confident on then taking the trades when I do see that alignment and that correlation across different pairs or different assets. Yeah, exactly. I really like it.
That's a like A1 class type thing, and it's something very simple for you guys in chat. If you just because everyone checks the Dixie now and again, but they often forget the tangential individual currency indexes for the other majors as well, right? So yeah, that was brilliant. I've liked your all your trades. This is good. So.
Yeah, I like it as well in terms of the correlation. It has been a while since I actually focused so much on the dollar, but again, the dollar was so directional in these last 2 weeks without the situation.
The yen, that's the only thing I didn't capture the full part of that. That's the only thing I'm annoyed about because obviously been talking about it for so long. Yeah. Same with Dirk and everything. I did capture like 300 pips or whatever, which is good. That's great. You can't complain. But as far as the 700 pip odd drop, I missed a large portion of that. But at the same time, you can't be greedy. Because it's still a very cautionary thing, because every time we've looked like we're going to actually break through, there's been a number of like false starts, right? So
but and now looking at the yen index, we are approaching now back into this, at least the yen index is back into this potential structure, and I'm going to be curious to see if we're going to find new bullishness or strength at around these levels or not. So I have the alert already. Whenever it gets in here, I'm going to start tracking it. I can see that price is still weak, like there's not exactly any proper break. This is more of a continuation pattern setup. Actually, anyone that is looking for continuation setups, this is quite a natural one, where there is a little bit of capture of liquidity that for price to just continue into the next phase of the move after getting away from the top. But I'm going to be curious to see if by any chance price will just melt down and come back all the way to the lows, or if it's going to manage to find some buying pressure. I imagine that at least some reaction from here we're going to have. Not sure if we're going to go all the way, but at least some reaction we're going to have. So I'm going to then try to associate with either dollar yen, euro yen, or whatever yen pairs we are going to be looking at. Because when you are looking now at actually the yen pairs, we see them in a little bit different levels. Like we have this dollar yen a bit in the mix. We kind of mentioned that after the fall that we eventually would like to see dollar yen kind of coming back into here potentially for a new sell opportunity. So we'll see how that's going to play out. But we have Aussie yen, for example, breaking highs. So it's a complete different structure right now. So it just broke the previous high. From the fall, it also broke this massive high back in 2024. I don't even know where we are now. I don't have data on the left side, so that becomes tricky. I have no idea if there's anything there of which you almost at.
I think these are record highs.
Is it?
Yeah, I believe so. Yeah.
Yeah, if it is, so it's
now that's obviously off. Yeah, that's off the back of the RBA decision today, and then there's sort of speculation around further rate hikes or not, etc. So yeah, and you've already got the uplift of commodities, everything else going on. You've now got the trade tariff talks out of the way, so that high beta exposure, that risk-off exposure that the Aussie dollar carries is kind of in the background. So now it's the beneficiary of turning back around, which realistically, it's just the same way that the euro dollar, pound dollar did when we had the tariffs, and the Aussie dollar is just playing like a lagged kind of catch up, coming back into line. So.
Yeah, but when looking at the charts, we can see that again they are a bit maybe different. Like pound yen is also slowly getting higher. Euro yen as well. Maybe it actually is a little bit more lower. It haven't even really moved that much. And they broke key levels of structure here, so I think euro yen could even go further down. It's about maybe finding that moment of going, which can be aligned eventually with the yen index. So that's going to be a bit of my radar. So it's just in terms of the Aussie, because the Aussie, it was now one of the major central bankers that actually increased or hiked rates. Do you see that path going into another country, kind of not like in Europe or UK is still quite high, US definitely still quite high. But you see that situation, because I actually looked at the data today. The inflation has been increasing since last third quarter last year or something like that in
So
in Australia.
last November 2024 it was 3.4%, and then December 2025 was 3.8.
Yeah.
Now, what I don't like about it is basically if you actually break down the inflation, the components that have increased inflation, a large portion of it, 21.8% of that increase comes from energy input costs, right? So, what just households are paying for energy. Now, that also comes out of a portion of the end of a government rebate, which lasted from when we had energy prices go skyrocket after Ukraine, Russia type situation. So that has now ended. So obviously, once you get that government subsidy out of the way, price is going to jump up. There was also a portion with some of the consumables, like food products like meat, lamb, mince and stuff was up like 11%. I think other portions of red meat were like 14%, vegetables like 4%. Everything else is pretty much in line though. It's really just that energy component primarily. House prices were about 5%. Rents were like 3.9. So the basket of it has actually come from just fluxes in the market, and obviously there's like a delayed reaction from like the tariffs as well. So this is why I don't agree with them increasing rates. I think it's really silly. They just reduced rates back in August. So maybe there's one or two other times that they've switched tact in that time period, from reducing rates to now all of a sudden shifting them up.
Increase. Yeah.
I don't like the current RBA, the current board. They make terrible decisions. They're looking at the wrong data. They talk about how they're trying to place this stuff for the next 1 to 2 years because of the lead time that changing rates actually has on the economy, which is completely in conflict when you've just reduced rates 6 months ago and you're talking about the lead time of 1 to 2 years of the actual impact. Right? None of it makes sense. It impacts the wrong side of town per the economy, because especially in Australia, we're one of the most indebted countries in the world in terms of housing. We have a floating rate housing situation, so it increases mortgages. The other portion, it increases rents. And the people that own investment properties that rent them out to renters, it changes the psychology as, okay, we're going to get another 1 or 2 rate hikes going forward. So they pump those rents up massively.
Yeah.
In case they're already getting a small bump, but they want to protect against that. So it hurts the small side of town, which is already not cash flow flush, but it basically puts more money into the pocket of the top side of town, which if you actually look at the data, the top side of town is where all the inflation pressures are coming from services and consumables and everything. So I don't know what the logic is. They talk about the data that we're seeing and all this kind of stuff. It doesn't make sense. I don't get it. It's really dumb. They've been doing this for a while. I've hated the current board, plus the previous board. I hoped the new board would be better, but I'm going to say Michelle Bullock. She's the RBA head. No clue. Absolutely no clue. So definitely wrong decision. It's not going to do anything. And that's the problem, that because it's not going to do anything, they potentially will actually do it again. Right? And then the trouble is you then see an actual impact to the economy, which is just full negative. But inflation doesn't necessarily move, but you actually see a drawback in like employment or these other tangential factors. And then that's when it gets really bad, that you could see the Aussie then going to like 71, 72, 73 potentially, but then crashing back down to 67, 66 because it produces a really bad outcome after. Anyway,
Okay.
I could have a rant on this for another hour.
I can see that.
Henry will know. Like Henry will get it. Like, oh god,
it's them out.
terrible.
Exactly. It is what it is. Government is impatient. They're always kind of changing trends in between, and the reality that then they don't even give the time to see the results playing out eventually. It is what it is. What about how this situation with, because we haven't spoke since this happened, with gold, silver, and then even maybe touching point a little bit on Bitcoin. How do you think that the majority of investors nowadays look at Bitcoin, and why would they invest in Bitcoin? Because we have seen the dollar moving down, we have seen how this situation geopolitically and so on. Instead of Bitcoin going up, actually is moving down. So it's more of a risk-on type of asset that everyone is looking at. Is definitely not kind of an edge anymore. What is your perspective between, again, what we saw between gold and silver last Friday, the big sell-off, and eventually the goal of Bitcoin? And are we going back to 70s, 60s, or eventually going back to the 124s where we were 6 months ago?
So I think eventually we will actually get back to 100k. I think this kind of 70k type area is actually pretty healthy. I think there's the trouble is where people have looked at as though it's like a risk-off type aspect just because it's been dropping. I don't agree with that. I just think it's actually been so risk-on that as far as the cross-border of all risk-on assets that potentially have more security, a longer history of relevance or belief in them, if you want to put it that way. Are you going to buy, when you've got stuff like gold ripping, silver ripping, NASDAQ stocks, everything else, which are mature legacy assets, you're probably going to buy that instead, right? Just makes sense, especially as far as fiduciary responsibilities from, at this point with a certain market cap, you need institutional players to really participate. Retail players don't have deep enough pockets to keep moving the market cap substantially enough, unless it's through like arbitrary leverage aspects, which then get wiped out because it's trading. It doesn't hold the price firm, right? So when these legacy players are actually looking at the markets, obviously they're going to buy typical assets, right? There's all sorts of legal framework, structure, that kind of thing. If they just start loading up on Bitcoin, everyone will look at them like, what are you doing? And start pulling money away or shifting it somewhere else, etc. Especially when those quality old school assets are performing exceptionally, right? So I think it's more of that kind of play. Then we've had the other changes with liquidity, the debt refinancing cycle in the US as well, which has shifted from like a 4-year term, which used to link up with the block, the halving cycle, which now that's been extended. So those are like offset. So I think from here, though, you should see this stuff going up. Like I've been talking about the ISMs last year in Q3, Q4, that coming into 2026, we should see that picking up for the US. And we did see the ISMs come out last night, finally above 50, picking up. That should be healthy for Bitcoin. That also relays into some of the other stuff with silver and the rest, that should technically be positive. Now that's also on top of silver already having a crazy run, though we have dipped down. Part of that ISM increase comes from advanced deductions, like tax deductions on a bunch of the tech players with all their investments into data centers, all that kind of stuff, that they can depreciate those assets much faster per what the administration has unloaded with the big beautiful bill and that kind of stuff. So that increased depreciation leads to a higher ISM, right? Because they can tax deduct that and then the numbers go better. So that obviously is going to have its own effect on the NASDAQ, on risk assets, on tech companies, all of it. And it should actually start rising over time. And then same with Bitcoin. Plus there's a bunch of liquidity, like we've talked about in the past while, for the US government to unload, which they will be happily they will happily do so, especially given we have the midterms coming up, right? Which they want. They now need the general consumer to actually feel good in the economy.
Mm-hmm.
They were kind of trying to drive off just their policy changes and all this radical stuff and the immigration thing and all this whatever to drive it there. But they seem to be recognizing that's not quite enough. They actually need them to feel healthy as far as their bottom line week to week. So I would expect that they will further unload that kind of stuff, which therefore should be very good for risk assets going forward for the near term. Q4 is another question, but between now and the midterms, you can expect that will be unloaded. So.
Okay. Yeah, because Bitcoin actually, I think it can be seen a little bit also as liquidity. Like if there is a lot of liquidity in the market, I think then there's going to be a move to the upside, and maybe, as you mentioned, maybe because of the midterms or eventually also when the interest rates start to decrease, maybe there's going to be a bit more money going around. Maybe Bitcoin can be another boost for Bitcoin to go up. Because at this point, it doesn't look like it's an edge in terms of risk on. Maybe there is even alternatives to instead of Bitcoin or more secure. So it's like when there is a lot of money and people now can look for another alternatives. Okay, let's put some money on crypto again and on Bitcoin. Yeah. Okay. What about this gold and silver situation that happened? Is this kind of an alert for the market? Is this saying, okay, we are getting into a level of maybe are too expensive at this point? Is there any shift on the perspective, on the trend, or is just literally a natural retracement before just price just continues to go? So there's no change of narrative, and we're going to just continue to move higher because again there's still a lot of uncertainty going on in the world, and most likely we're going to see these precious metals continue to go higher.
Yeah, so they come kind of hand in hand. So at the moment, this is Bitcoin, right? So we had the crack through there. It's trading pretty technically, right? So you had the bottoms through there. You had a channel through here, hit that top, equals the bottoms through there, and then we crashed through and we've broken back down, right? So as far as Bitcoin, I would say we're trading very technically right now, and you've again got this equal bottom through here, right?
Yeah, from last year. Yeah, from last year.
So overall, the way to trade Bitcoin right now is very technical. Okay, so if you stick to that, you'll be happy. Now, going over to silver and gold. Yeah, so this is silver first of all. So this is what I was looking through for here from early. It's insane to think this was just January, to be honest. I was going to say December. I was like, no, that was actually mid-Jan.
2 weeks ago.
But yeah, we did get that playthrough, and the levels through here. This is also where the futures pricing for deliverables is basically a year from now. It's about 77. So that also lines up with a bunch of these prior sort of relative support levels. And this was also the situation here where we had the first increase from the CME as far as margin leverage, right? And then so we saw a bunch of players get where institutions and stuff were trying to short through here. Then we got margin increases, which gave us a blow off top. We crashed back down. We then rallied harder from there. Other players probably had more capital and gradually unloaded that, which helped price keep going up. Then you get the introduction as we've had that drop. Certain speculative players jump in because we've had a drop. Plus you've got people trying to unwind shorts, which just overall adds to the upside movement. And there's an interesting chart here. So this is the largest silver ETF out there. And you can see with these, the recent price movement after the drop, these are the liquidations basically that we had. So you can see through here, this would have been increased a portion of liquidations through some of those spike tops, and then also reintroduction of people jumping in longs to re-speculate. And then obviously everyone got massively wiped out. And then that contributed to the immense drop. And then so similar deal with gold. And this was the area we had scoped out. scoped for the overall tops. So between that 5,600 and 5,500 just here, and that ended up being quite nice. Now that came down to a couple things with market cap in terms of, I mean, obviously gold is, other than say real estate, whatever, as far as a liquid tradable asset, the largest market cap on the planet. You could argue bonds as a total if you add all countries together, right? But as like an individual asset, it's going to be gold. So once you get moving up to these kind of areas, it's all speculative drive. It's all based on leverage to get, prices up this high. So there's not that much raw capital out there in the world for that to happen. And all through this period, you had a bunch of institutional players, etc., talking about a move back to 4,800. It was clearly on the mind of a bunch of players, as I relayed to you guys. So eventually, you're just looking for that kind of structural, technical topping pattern, and then some kind of catalyst just to kind of prick the balloon for it to pop, which ended up being Kevin Walsh being stated as the new Fed chair. And obviously his past history being a bit more hawkish, anti-QE, all that kind of stuff. Now, I don't think that's actually going to be how this plays out. He's very well connected with the Trump family. He's friends with all of Trump's kids. Kevin Walsh's dad was one of the leaders on doing the Greenland thing recently as well. So he was very interlinked. So I think he could do a full 360 and actually be very Trump favorable, which I would assume is why Trump actually picked him. So as much as the market has moved that direction, I think we could get a inverse reality check for that. But yeah, we were talking about earlier in the week with Dirk. I was looking for moves back up towards this sort of 5K to 5,050 type area with the 200 moving average just here on the 1 hour. And then it's roughly in line with the prior wick lows from the first drop. Just like when we had the drop last year in, what month was that anyway?
April, March, something like that. Bitcoin.
October.
Yeah, we had an October, yes. And there was another one before on April, yeah.
Yeah, so similar deal where we had the downdraft there, those are wick lows, came up, came back down, and you see this sort of basket trading sort of sideways through here, came and basically roughly tested the underside of that. So I've been looking for a pretty similar deal right here until the moving averages sort of correct, come back in line, and so longs up to there, and then potentially shorts, at least near term. On that,
one thing so far. Yeah, one thing so far on this move on the gold is that I would have liked to see, even now on this correction to the upside, I would have liked to see a little bit more of a double bottom being created, which we didn't really have that double bottom, which means there's maybe still room at least for price to retest those one more time. So actually even have this circle in here. I was trying to see price actually from here to go a little bit more down and actually respect this level. And if this holds, then maybe we'll be a bit more bullish in terms of looking for price to go all the way back up, because we haven't really done that. I wouldn't be surprised again if maybe we have at least one more correction just close to this level, or maybe you actually end up taking this low one more time. And if you do take this one more time, I think some people may start to look this a bit more of a bearish move, because now it will be a new low being taken, which again, just if you compare with that move on in October that you just mentioned, like I would like to see again a little bit more of price holding a level and then starting to expand, and not just go away and start going. Usually, yeah, if this actually is to be a bottom, the bottom needs to be a bit confirmed, which in my opinion I don't think it has been confirmed yet. So yeah, maybe we're going to have a little bit of those selling pressure, maybe around that 200 moving average as you mentioned, or around this structure, and then we'll see what will happen. I think this level here has everything to still be retested, regardless. yeah, so that's going to be an interesting one to pay attention on gold.
Yeah, so I'm looking for a slightly higher preferred top. We could have like a short-term pullback just now, just into that sort of first pickup structure, the kind of dead cat bounce structure just below. At what level is that? 4,800, pretty much.
Yeah, one second. Let me just check your chart. To retest that level to go higher again?
Yeah, so like a pause through here, back into the 10 and the 50 moving average and buy those tops, which is kind of the dead cat bounce kind of level. Like something like that, and then back down again.
That's exactly. Yeah, you could retrace like that and then go higher back to those, again, as you mentioned, 5,000, 5,100, and then we'll see if you have a bit more of a bearish price action again to push to the downside.
So it was either that or something like back up to here first, then down, then up, then down. Right. So, but that would have depended more on potentially NFP could have got us there, but we're not getting NFP this week anymore.
Exactly right. There's another delay, another postpone on the data being released, which is funny. Yeah, we'll see what kind of volatility.
I was just going to bring up this. Henry, yeah, but can't let inflation get out of control. This is from when we were talking about Aussie.
Yeah, for the worst, yeah.
So rate hikes will be needed anyway, so earlier the better. I'll talk to you about it on Friday on the Discord, but I got the raw math on this stuff. Doesn't make sense, and this is why I hate it. It's
you need to email.
Incorrect. Yeah. But I won't bore everyone here, so don't worry.
Yeah, I need to send the email to the right department, LJ, without your information. Just request a Google Meet or a Zoom call with them. Yeah, I mean, we need sometimes they do need that. Yeah, Sean.
So regarding, because obviously we're just talking about gold. What do you think about silver? Like kind of similar-ish deal like that? Right, and then potentially lower. The thing is with silver, the ISMs should actually bring it up, right? But at the same time, the silver price is already. That implies that you're taking it at face value as relative value. Like this is actually an appropriate, like price discovery level. Right now, in terms of the forward, deliverable futures for silver, they're back down around 70 to 77. So I think very much potentially we could get a short-term move higher in silver, but I would not be confident in us coming back towards 100, to be honest.
Yeah, it's going to be tricky. When looking actually at the monthly candles, we saw that silver already basically retested January opening, basically the beginning of the year, but gold didn't really got there. There's a little bit more of room to downside on gold. That will take us to 4,330, something like that. So if by any chance, and sometimes the candles kind of price action likes to do that, kind of just retest the opening of a previous candle. It can be the monthly or weekly or whatever. So that basically leaves us a little bit more on gold, at least a little bit more further down at around this level, and silver already retested at that structure. We'll see, honestly. Again, that's why I like to trade kind of the when the market is falling and not exactly then the retest towards it. Because it's easier for me to kind of start paying attention of the way price is losing momentum and starting to show signs of weakness, then all of a sudden after a fall to know if price is ready to go up again, to the upside straight away. as a simple thing, just try to find kind of where are those key levels. Maybe there are a 20 moving average or some previous level support resistance or highs and lows or Fibonacci level, and try to see how price is reacting as it's approaching those levels. To see if there's any kind of opportunities to look for that, and maybe you can try to trade towards that direction as well. For example, if maybe price takes this top, maybe you can try to trade towards to the next one, or if there is a moving average in here and price maybe just broke the 50 and wants to go to 200 or 100, maybe you can try to trade that space in there. And again, the question, it's basically the same question that I asked initially, which is this a change of narrative or is just a correction before price just resumes the move into the direction where it was before? Because otherwise, if it is just volatility itself, but there's no shift on the narrative in terms of we are in an uncertain world at this point. There's a lot of geopolitical situations. Is Trump getting a deal with Iran or not? Like what's going on still with Russia and whatnot, Greenland and whatever. So if there hasn't really been a big change on that aspect, maybe we're going to see another move to the upside on silver and gold. And this was just pure volatility that happens in the market. And maybe a way to actually maybe get in at cheaper prices than continue to keep buying at so expensive prices. But if you do think that maybe the top is in place, that's a different story.
Yeah, I would say if you want to take that narrative, I'd trade gold, not silver. I think like silver's gone manic, right? It's not a precious metal. People need to understand that. It is still a commodity, right? It does have a use case and has had an increased use case in, batteries, photovoltaic cells, that kind of stuff. We've got renewable energies, AI, this, that, electric cars, all that kind of stuff, which is increased demand. Over 2025, demand dropped. At these prices, though, as well, you have to understand that supply-demand type situation. Once the cost of silver becomes that high, manufacturers will just go to copper. Silver is better as far as the conductor, but at that price, it just doesn't make industry viable. So that's the trouble as well, where you'll have a gravitational effect with it coming down. There was a bunch of it, silver sort of rose off the back of speculation after gold going ballistic itself. And now silver going ballistic as it did makes gold look like nothing, right? So if you still want to get in on something, you'd have a better time with gold. So if you take that chunk off the top as like, for lack of a better term, like fake price action per se, in such that it's like speculative, almost like looking at the .com crash. That top section is just ephemeral. It's just hype. It's just mania, right? Then you get the appropriate level. We would now be kind of at the relative tops for silver. So this would be a more realistic relative top. So take this kind of area, maybe up to 80, down towards 60 as the kind of trading range that you should really look at.
There's just one question way back from Steven asking me if I'm a full-time trader. Per se, I would say no, because I'm also working with the Fivers, growing the Portuguese community. In terms of my time, I would say yes, I do spend the majority of my time in front of the charts looking for trades and analyzing the market and taking trades and so on and so forth. And that's
You're a full-time trader for sure.
Yeah, I am.
Yeah, you do. You just do other stuff as well. It's like...
Yeah, exactly. And usually I actually like to make that separation in terms of someone that actually just focus on doing one thing regarding to the markets, or if they actually are doing something else in another industry that is not related to trading and to the charts. But that's actually one thing that I'm trying to distance myself is spend less time in front of the charts. Sometimes I do feel that looks like more of a kind of the same thing as spending time in social media, just screen drawing, because it's not beneficial sometimes. I can be more efficient instead of just being here, just zooming in, zooming out, drawing whenever, and then kind of not really doing anything efficient with my time. So that's the number one thing I'm trying to correct myself this year. And then there was another question asking about scalping. Where was that question? Someone asked about, there you go. Shami, is it possible, could someone scalp successfully on 1 minute time frame FX pairs, or just gold NAS works best? Yeah, first of all, in terms of scalping, if you're about to scalp, you need to first of all, there's maybe different definitions of scalping. After I work with a trader and I saw that trader taking like 30 trades in 1 hour, the definition of scalping, it becomes different from just taking 2 or 3 trades in 1 hour, even if it is in a really short term. Yeah, so if you are indeed taking a lot of trades in a really short period of time, I would actually even consider one of the biggest expenses expenses that you're going to do, which is commissions. Yeah. So in this case, just try to go to or trade an asset that doesn't pay commissions when you're trading, because that is going to impact in a big way your overall performance and results that you're going to get, regardless if your strategy is profitable or not. It's like you're paying tax straight away on your profits. And then yes, you can think about volatility, which is the asset volatile enough to be scalping. Yeah, maybe gold can be the most volatile one. NAS around the US Open can be quite volatile for sure as well, if you don't want to trade it, because it can be quite aggressive as well, the way it moves up and down. Or some other people like to scalp, but they like to scalp kind of slower markets but directional, and that sometimes can be FX can work quite nicely in that aspect. It's more of a slow move. You need to be a bit more patient, but at least it goes into more a directional move, and that happens in certain times of the day as well, even maybe certain times of the week. That can happen. For example, Monday afternoons, usually price is just slowly moving in one direction. Sometimes Friday afternoons can be also the same thing. Of course, around US Open or the London Open, there's more volatility, there's more manipulation, so you need to be a bit more concerned if you are looking for more directional moves. Yeah, it's about trying to see what kind of scalping or strategies you are looking for. If it is just speed, movement, or volatility, or something more directional, more certain, and also then try to study when do you find those moments within the week.
I think the core thing is definitely quality over quantity. So just like you're saying, if you're scalping that often, unless you're somehow running some background program with analytics, almost like a HFT type situation, which you're probably not, because even then you'd be doing a lot more trades than that, right? You're better off taking slightly lower number of trades, but capture a couple more pips. Therefore, you're going to get less commission. And if you do the math on the total cost basis, it'll probably be better for you. But yeah, NASDAQ is really good around New York in particular. Gold's always very active. Some people, like Pedro was saying, like a slightly more tame asset to scalp as well, which is completely fine. Like euro dollar is a good example. It's the highest volume traded FX currency, so a lot of liquidity. It tends to be generally pretty stable, unless you've got like a market event going on. So sometimes that control can actually be beneficial, because you're just looking for a directional move. You're scalping, but you'll just be holding it a little bit longer, but you have less overall volatility as far as the scalping aspect as well. So you're probably going to get knocked out less often than other assets, for sure.
Yeah.
I did just want to see this. So Justin was saying before, some guy saying 5% is not give withdrawals. You'll always be getting your withdrawals. Long history, long record of that. One of the longest in the prop firm space. We're on the 10-year anniversary right now. So if for any reason there's either, it could just be a delay in the payout, or so long as you've not violated any rules or done anything adverse, you'll get your payout. No problem. at all.
Yeah, 100%. And actually, I think I heard that it's actually many people have been being approved and passing their accounts and getting payouts as well. And sometimes
even when they perhaps shouldn't have, but Fivers will give the benefit of the doubt. That is not to say abuse that, because if it happens again, you'll be very quickly reprimanded.
Yeah, but what I was about to say is sometimes it's not just the system that does the work. Sometimes actually human interaction kind of that goes and looks at each case individually, and that's why sometimes it takes a little bit longer than normal. But 100% you are going to get your payout. So
there's a lot of you guys out there. So sometimes it takes longer to get through all the accounts or support, or sometimes there's been a really good asset which people have caught a lot of trades on, so there's a lot more payouts during that period, that kind of stuff. So sometimes it's just literally just managing to work through everyone's issues, right? So patience is key, I guess.
Yeah. Now on that token, is WTI oil basically traded heavy in the retail prop firm space? I'm not really sure. I cannot definitely reply to everyone. At least at the Fivers, I know basically the 5 most traded assets definitely is gold. I saw the stats the other day. Even when gold was moving to the upside, not just longs, but also many people positioned short, maybe trying to catch the top on gold. And then of course is euro, is NASDAQ, silver as well pop up recently in terms of the most tradable assets within the Fivers. But in terms of oil, if there's actually one asset that I don't really trade with the Fivers, unfortunately, is oil. For 2 reasons. I think the spread is slightly higher. It's the only asset that I consider the spread a little bit higher than normal, and also the swaps. So be careful also holding trades overnight with WTI, because that can be a little bit of a problem. But it's the only asset. But I do like to trade oil. I've actually started to trade oil like in the last 3 or 4 years. But it's more into my personal account per se. In general, I don't really think many people maybe still pay too much attention of oil. I like oil because of its uniqueness as well, and technically it's a nice asset to trade, and it's also different from everything else. So there's not much correlation sometimes. Of course, there is some correlation. Many FX pairs are correlated with oil, but the price action itself is kind of unique. And it's one of those assets that for sure is not going to just keep going up, because it has direct impact straight away into the economy of the world. The same thing that if it goes too down or too low, it cannot really be there as well. So it's actually maybe more of a ranging type of an asset.
Yeah, it's like all commodities, even like silver and gold. So we have had times where oil is up $120 a barrel, right? But eventually it does come back to earth, because there are those industrial impacts where it materially cannot stay there, right? So it pulls back. As far as the prop firm space, I would say it's probably less traded in the prop firm space overall. Futures wise, perhaps a bit more. CFD wise, perhaps a bit less, but that also goes to just it being traded in general. Even institutionally, there are certain people that love it, that kind of thing, but it's not like a massive thing, and often it's like a strategic now and again type situation. It's almost like silver, like it comes back into vogue certain periods and then people forget about it. So no one's been talking about silver for a long time.
Definitely.
Same way oil comes back into vogue. It's probably a bit more than silver, of course, but it comes into favor and then people forget about it and they come back to it, that kind of thing, right? So that's what I would say. Typically, the big thing, with oil, just like you're saying, is often the swaps. And so sometimes it is better to trade on a personal account. Depending on your broker, some brokers will have really good swaps, others will have very poor swaps, and it's kind of shop around type situation like that. So
guys, I do have to leave. I just realized I have a meeting now.
Of course, no worries. See you, Pedro.
I don't know if Richard is coming in or not. Is there making some dance moves on the background? There you go. There he is. Guys, thank you very much. I'll see you on Thursday or later on for the Portuguese live stream. Have a great one. Thank you, LJ, again.
Cool.
Great to chat with you and for all the knowledge. You are basically my encyclopedia or ChatGPT in person. So I just love interacting to exchange ideas with you about trading and trading ideas. I just love it.
That's good. Good to see you again, man.
Cheers,
Cheers,
man. Thank
Pedro.
you. Bye, guys. See you later.
See you, brother.
Good one. Can't wait to get on the road again. What's up, LJ?
Pedro. I was saying to Pedro earlier, I don't know if you heard, but I will make a slightly different version so we can get that for Pedro's like intro. They'll make it like so no copyright type situation, right? Yeah.
Dude, I've been waiting for that for a while because there's there's a song for Anastasiia. There's literally a song called Anastasiia.
Really?
Yeah. It's by Slash and the Conspirators featuring Miles Kennedy. It's called Anastasiia. It's pretty groovy. I really do like it, but we won't be able to play it because it's definitely going to be copyright strikeable.
Send it to me and I'll see what I can do.
I'll send it to you immediately.
Yeah, because I have I sent you any of the music that I.
No, I have unfortunately not been that fortunate that I could get like music from you.
I'll just play some because I just do it as like a hobby thing in the background. I'm used to since ages ago. Back when I was like 9, 10, 11 and first got into I got my first like iPod, or actually I didn't get an iPod, but one of my friends was lucky enough, his parents bought him an iPod Nano, and we were playing around with iTunes, listening to 50 Cent, that kind of stuff, and we ended up getting some good old music making software off good old LimeWire back in the day, good old Ableton. And so recently I've gotten back into making some music just as a side hobby thing. So
I play some instruments, predominantly bass. So I do also really enjoy just like getting a nice little bass line and just kind of like running with it. But I haven't had the opportunity to play in a while. So
I was going to say, I assume like electric guitar and stuff, right?
I have a hollow body electric guitar, an Ibanez, an orange one, just absolutely beautiful. I love playing that one. I do have an acoustic guitar as well. It's a Cort, and then I have a electric bass, an Ibanez Iceman. So it's got like that little hook at the bottom. It's just like a black one. It's just like, love that one. And then I've had electric guitars in the past. I've sold many of them. I've had different basses in the past, sold most of them as well. But I will never sell my Iceman. That is my baby. Never do. No, I'll never get rid of that one.
I assumed given your music
Taste.
interest, taste, interest, preference, whatever. Yeah, definitely. Okay, I'll see what I can put together. I'll try. I've got some other amusing things I'll send to you that I did in the past for fun, and but I can put together some actual proper stuff as well. And I've got some proper stuff to send you. But okay, we'll share that later.
I'll send you a few things.
What's this?
What is this?
Oh, Nico. Oh, okay. Yeah. No, I was just seeing it in caps. I was like, okay. So this was just before Pedro jumped out, I guess. So, what would we do? I mean, we can still answer this, you and myself, Rich.
I mean,
what would you do if you weren't trading? I'll let you go first. Yeah.
That's easy. I would probably continue being a poker player, which is what I did before I started trading. And then before that, I used to work at a factory, so I've got some managerial experience. you know, from doing those kind of like stuff. But I think if I had my way, if I didn't do trading, I would probably go back to being a full-time poker player, which it can be rough. It can be rough, but yeah. You?
I would do a series of things kind of all mashed together. So part of it would be art, sculpture, making music. That would be kind of the secondary portion. Main portion, I'd probably do something, to be honest, with cars. Right? These days, given social media, that kind of stuff, I do some kind of thing like that, tee that up, drive cars, do car reviews, you know, supercars, exotics, that kind of thing. Tee up something with F1, travel, combine all that together. Maybe go back and do some modeling type stuff, which kind of ties in with it, and you do like watches and, you know, yeah, it'd be something with that put together, which would
very
give the
interesting
lifestyle
that you would say go
aspect.
back to modeling and all of that kind of like stuff. It's funny to think that so many people come from such diverse backgrounds, and then I look at you and you're like, you're a model, and then I've seen some of your pictures and I was like, okay, I'll do this. It's like, okay, makes sense. It really
Yeah, I mean,
makes sense.
I'm on here with I look like a trucker right now, but you know what I mean. But yeah,
Yeah, but I mean, it's just like the aesthetic. Like models have certain aesthetics, and yours is currently, I'm a trucker. I got my plaid shirt and my cap on.
no, look, I did that stuff, but very much my personality is very chilling out, not that pretentious type thing, which is also, funnily enough, how you get more work in that industry,
chilled out.
because you're much easier to deal with than the sort of princess types, which was something I learned from my mum, because she did that when she was younger. So she was like, you know, the main how she got work was just because she wasn't weird like that or high maintenance type thing. You're just chilling out, cool, come here, deliver, do the work for them, blah blah blah. And yeah, so
Locklander.
if you do it that way, it's good. It also is very annoying though, dealing with a lot of those
Yeah.
individuals, which are a bit more.
Yeah.
Anyway.
I would say the one thing about playing poker that kind of became more draining and grating, you know, kind of like just rubs you up the wrong way, was sometimes the people that you play against or that you play with. They can be very entitled, very difficult to like enjoy a game if there's a person that's constantly berating everybody else's action and just absolutely complaining about how crap their cards are, and you know, like, I'm card dead, and it's just like, dude, it's not what you have, it's how you play it. Anyway, and that can become a little annoying in the like, especially if you're sitting there for 12 hours at a time and this person on your right is just constantly moaning and complaining. It's just like, okay.
It's almost like playing like a video game like COD or Dota or something, and they're just complaining that hard, and all you want to do is sit there and say like skill issue, you know?
Yeah, skill gap.
Like, yeah, because there's some of it that is like friendly banter, kind of like you know, trash talking, almost like, you know, UFC, tennis, whatever it is, that kind of makes it fun.
Yeah.
But then there's some people that don't really do it right, and they're just having a whinge, I say.
Yeah, and they get so worked up about the smallest thing sometimes, and then they keep carrying on about that small thing. And it's just like, dude,
Yeah,
like
dude,
we were bantering. We were just
we're like
having
four
fun.
hands past that. Move on.
Yeah.
Yeah.
Yeah, I know you folded aces. Who folds aces?
Cool, bro.
Yeah. Anyway, would you?
Yeah.
So everybody else on the stream will probably always get like the same like question as well. What would you do outside of trading? If you had to go and wager a guess, what everyone else, a Rulander,
Oh yeah,
like
I just saw that now. Yeah,
he had another cool one as well. Was a Locklander.
Locklander. Yeah.
Yeah, Locklander.
Yeah. Sounds very Scottish.
Yeah, if you had to, yeah, because I was thinking Highlander. If you had to wager a guess, what everybody else would be doing, as a fun little like interlude. I don't know, when they rock up, then it sounds like, okay, so let's say Griff. What would Griff be doing? You know, and Rich. What would Rich be? Okay, everybody knows what Rich would be doing if he wasn't a trader. He would have been a psychologist. But
actually, the other one, I would have kept playing rugby. That's a good one as well. I've definitely got a couple. If I lived another life, I would have just continued with rugby, which I didn't. And I've got another one as like physicist, rugby, and then
sports
wherever
physicist.
the hell I am now. No, physics, like space, NASA, stars.
Oh, that kind of physicist.
Universes. Yeah, that's what I was doing at uni before I started trading. Right, so.
And then you realize you're just really good at trading.
And I realized that you're not going to make any money looking at Jupiter. So.
Yeah, say that to Neil deGrasse Tyson, mate.
Yeah, most likely if I went down that route, I would have done some kind of social media stuff.
Well, you've got the personality for it. I wasn't around when you guys were having a little chat. Are you looking at anything specific? Are you in anything at the moment?
So not right now. So I exited a Aussie dollar short just earlier on, which is on the 1 hour. If we go down to the 15, I had the long yesterday afternoon. We didn't really kick on from there. And then obviously today having the RBA announcement, I was looking for a hawkish statement, but I had stuff to do. I was going to be asleep during this time period. Didn't want to hold it. I did take it on my private, like my personal brokerage accounts, but I have more variation there, so that was fine. So picked up to there as far as the prop accounts, shorted from the tops here after we hit 70.50. At this point, we're already up 1.5% on the day for the Aussie. So I jumped in there right by that round number and just took profit down by the base of that candle at the 10 moving average. Ideally, I was looking to jump in short before that candle. Fortunately, didn't, because we did jump higher out of nowhere. Otherwise, the take profit would have been just here by 70 cents, basically where we've bottomed just here. But seeing as we didn't quite get there on that pullback, I didn't like it. And there was no real indication of like a further tip over for us coming down. And at the time, I was looking at the euro dollar, which was coming through here, and we were starting to pick up. And same with the pound, we were still running higher through here. So I didn't like that. So fortunately, I did stay aside. The only other trade I'm looking at or considering right now, even though I've been talking about how I don't quite like the euro dollar overall, after this drawdown, I'm considering this kind of positioning near the lows, and it's just a near-term pullback, basically retracement down to those bottoms, and you've got the 200 moving average here on the 15-minute. So I'm considering taking this here somewhere. Once we get like a candle close that is indicating we're actually turning around, then I'll start to look at that.
So where's your stops basically on that one? Because I have some on euro specifically. I've got like an interesting thought that there's a potential for us to go all the way down to 117.60, 117.300-ish, somewhere around there.
Yes, so I do have that as well. I was kind of talking about this with Pedro. I didn't comment on it directly because he already sort of covered it as far as the Euro index and such. So on the daily, sorry, no, it's the 4 hour. So let me now bring up the 4 hour in here. So I'm looking at on my C trader, which I have a bunch of other indicators, that kind of stuff. I'm looking at about 117.50.
117.
Right. So that would be roughly a full retracement on the 4 hour to the 200 hour or 200 moving average on the 4 hour. And then that's also comes in line with the mid of the Bolly bands. So the 20 moving average on the daily. Yeah. And then you've got the overshoot number of basically 117.20 roughly. Which I was potentially seeing that we could hit if we had NFP to push us further to that. But I don't think without NFP we'll quite get that far. Which you can see, yeah. So that's right where your 71.8 is, and the cluster through there, exactly.
Yeah,
so,
this little segment here, just kind of like struggling. Yeah, that's exactly where I've got my my base area as well. Just we did have this attempt to push price lower.
What moving average is the red one?
The red one is a 200, which I just switched on with
200,
200, and then the green one is a 50. Also have the 100, and then I think this is a 20. Yeah. So there is that potential to do that.
And then that was the thing that I was talking about with Pedro, that would also come in line with the Euro index. Definitely has another level overall to drop down to. That will also come in line with the yen index pulling back a bit, so therefore dollar yen higher, hitting the long-term trend line that we've now come out of, basically a touch on the top side, and then to reverse. Because, I mean, I don't think fair value for euro dollar is down around 117 at the moment. I think above 120, like I've said, is thin air, and that's a bit hard to justify. But again, 117 is a bit too low. I think it's more of a 118 to 118.50 per fair value, given the ECB current conditions for the euro across the board, and then the current Fed positioning and US positioning as well.
It would be interesting to see whether or not it's going to actually, or how deep is this pullback going to be before it decides to continue. I mean, if it does respect the 200 EMA, that would be great. But I was just looking at now at the Euro 50 as well. It does seem like it does respect it quite a bit, but we're already quite far away from the 200 EMA on the Euro 50. So how deep do we think this pullback is going to be? So if we just look at that and then we compare it to Euro USD as well, not sure.
Hang on. Is that the correct
It's
index?
the Euro 50 indices.
Oh, okay. So, no, yeah. So, hang on.
So which one were you referring to specifically?
Let me see if we can find it on TradingView. Hang on.
I see there's a few people coming in with the moon cycles. Elili, or Eli, saying actually it's the theory about trading with the moon phase. And then Gombiji is saying, yes, it is. It's called the moon cycles and also other planet conjunction. It has impact on people's behavior. So that's a fun one. I said to my wife if she ever decided to do trading, she should look into the moon cycles trading and then see whether or not she can actually make any money with it. Just for the fun of it.
Okay, we'll get a physicist to explain it.
Crazy
That's
trade
right, I got you
translator.
guys.
Yep.
It's fun.
Mutzer is asking what's going on with the dollar. They've decided to shut down their government yet again. So whatever is going on with them, they really don't want the world to know. So behind closed doors.
Yeah, so it's a again, I mean, we always have the government shutdown thing. More and more, it's become a thing every period, every year, every 6 months. It's always a kick the can down the road. The thing is how Trump plays it. He plays it a bit differently. So typically they look for like a cross-check that will open up the government in total, so it can keep functioning for another 3 months, and then they basically come back to it, figure out the disagreements between each other, and then keep going. Now, Trump is trying to do this with he's opening up the part of the government that he needs, keeping the data and stuff locked down, so he can try and talk and tweet and say whatever he wants, and especially as there's like the rollover with the Fed and everything, and say, Jerome Powell is rubbish and the Fed is rubbish and everyone's rubbish and don't listen to them and they're the ones that messed it up and not me and blah blah blah. So it's all this which you guys are probably way too smart, obviously, to
fall
take
for
for
it.
real, of course. Yeah, but unfortunately a lot of the US public listens to what he says and takes it for gospel, put it that way. So it all comes down to that kind of positioning, public positioning. You got the midterms coming up, that kind of stuff. Him just trying to control the narrative as much as possible. I think it's actually a poor idea that he did that, because even the ISMs and stuff, we've had a number of indicators actually showing that the jobs number should have been a bit better. So it probably might have been an idea for him to actually release it. We did have the cold front, as we always get in January, for the US. But by this time, they've kind of worked out the seasonality adjustment, and the other indicators were actually showing higher numbers. So I think it's actually kind of an L that he has done.
Didn't you have this theory a while ago that he wants a theoretically weaker dollar, not an actually weaker dollar?
Yeah, so he wants a... Okay, so in terms of the actual number of the dollar, he wants it weaker. In terms of the sentiment, the belief, the narrative around the dollar, he wants it to be strong. And so it's a gradual meandering down of the dollar whilst it's staying strong the whole way through. And then also, once the dollar does become cheap enough, in terms of actual monetary terms, or like accounting type terms, then foreign countries, first world, second world, third world countries will load up on bonds, because that's also the thing that keeps their country stable, their own currency stable, gives them backing for debt financing, all that kind of stuff. So once it does actually come weaker, it actually strengthens the dollar, because more people purchase dollars now that it's kind of on sale, which actually reinforces it and actually takes it back up. But it has to be the narrative of how it got lower.
Yes.
Otherwise, they'll be hesitant to buy the same volume when it's at the same price once it's down there. So it's very much one of those narrative-driven type aspects. Almost kind of like the same way that like AI is right now. Like, is Nvidia 7 trillion or 5 trillion or 6 trillion or 4 trillion? Like, it's kind of, once you get up to these numbers, it's kind of arbitrary. But it's sort of how you got there, the sentiment around getting there, and that gives that robustness that either you have like a fragile 7 trillion or you have a robust 7 trillion. And then even if it comes off at 4 trillion, robust, or is it came off because it's fragile, or is this like a cheap discount, right? So it's the all financial stuff. It's like a narrative, story driven, social, humanistic type element to it as well.
So now
Especially
So now the question comes into play: how does the shutting down of the government, the withholding of news events, and that kind of like stuff, how does that play into that narrative?
Yeah, so like I was saying, I don't think this is actually very good. From his aspect here, I assume, again, it's a political pressure thing as far as the Democrats, that kind of stuff, to get a few more of his bits and pieces for policy that he wants to get shuffled through going into the midterms, once again, which per the prior government standoff, which was now the longest in history, neither side got anything done. So Trump also didn't win. It was literally just a waste of time. No one came out the better. So I think hence he's trying to proffer that he'll be willing to do that again, but keep portions open. So he still have to do work, but he'll subside certain bits and pieces, and try to say that, okay, well, I've done enough to keep the government open, so we're doing what we need to do for the people, but we're not getting all the data that we need, all the things we need to make decisions so that we can make good decisions, and it's the Democrats that are doing this to us, and therefore it's making it hard for us to make good decisions because we don't have the data, and therefore the Democrats are terrible. It's all these weird, subtle, small bits, and it's like, it's not one big thing, it's heaps of those little bits that all add up.
Each one of those little things that plays its role.
Yeah, it's I think it's the wrong decision right now. He's actually got things in favor that he should allow that to keep going right now. Like I've talked about, where I believe the US data is coming to. We saw the ISMs come out last night with that. So he should actually be pushing for that. That will actually help with the midterms. Yeah, I don't know. Some of Trump's stuff is just kind of weird. Sometimes it's right, sometimes it's just wrong. There's no real like logic as to why it's just you're just objectively wrong sometimes. So I think this is one of those moments. So unfortunately, I don't have the inner inside of some 400 IQ chess move that he's doing. It's just he's actually just made a bad move.
Would you normally say that like there's method to his madness in general? Like some of the stuff that he does is like you can understand the rhyme and the reasoning, but maybe not just the, how it's playing through? Or do you think that there's maybe a little bit more crazy in the crazy genius than there is genius?
No, so there definitely is rhyme and reason. Obviously, we've seen what's happened since his last administration. He's much more sophisticated, and the kind of people that he's brought around him were very intentional. They are very well informed. They know they're exactly aligned with what he's trying to achieve. He doesn't pick them by random and just hope that they kind of do a good job. It is very, very intentional. And it's probably been a very long progress for all that time that he wasn't in office. And he was kind of blackballed from global politics, social media, banking, everything, right? And he's been bubbling away, seething, trying to build this big ultimatum system. to go at it again. So yeah, it's very much intentional. Hence why, for instance, we got it's almost like the Kevin Walsh pick, right? Which a lot of market participants have seen as, looking at his past history, is hawkish. But if you actually look at it, all his connection, he's good mates with all of Trump's sons. Kevin Walsh's husband. Husband. What am I saying? Father. Sorry.
Father. Only in some states is that allowed.
Yeah. Kevin Walsh's father has been one of the main inputs on the Greenland situation. So basically, he is very, very interconnected with the Trump family, the broader administration, all that kind of thing. So, but his past history actually, on paper, makes it appear as though he is not. And he's actually outside and is completely the inverse to what Trump actually wants. So it's almost like a Trojan horse type pick.
I was literally about to say there's an insider there that's not supposed to be there.
And I think the market is going to have a bit of a surprise potentially that he actually does a bit of a 360, because in the past he's been very anti-QE, anti-stimulus, anti-this, anti-whatever. Completely the opposite of the current regime that we have in central banking across the globe. So yeah, the market saw that as a good pick. You got people like Scott Bessent in the background saying you should do this and rah, and that means also he can do some of that, but sometimes he can do what we want, and we have plausible deniability.
Yeah,
that he's somewhere in. It just makes it murky grey. Even if you can see what he's doing, no one publicly can kind of portray it black and white. That means that they can keep going doing what they're doing. So, to be honest, it's a perfect pick in that manner. Yeah.
Very, very interesting stuff, mate. Very interesting. I don't know half of that information, but hearing you talk about it is always very interesting.
Yeah, if you give me half a sec, I just need to get some water. My throat is very dry.
You do that.
Too much coffee, so
it's leaking out of you, mate.
You'll be back.
No problem. I see there's somebody asking about. Wow, that was quick. Good morning, NQ today for a reversal day. So I'll quickly go through NASDAQ and then go through US 30 as well, because I see someone is asking about your mean brother. Sorry, it's asking about, sorry, I just hiccuped there for a second. It's asking about US 30. So, in terms of NASDAQ, the US 100, US Tech 100. Yesterday, we had a very strong bullish day after a reaction off of a, let's call it a order block / nice strong support zone. So, this zone was established on the 21st of January, where we had a slight downward turn, and then eventually we started to gain a little bit more bullish upward movement, roughly around here. Now, we've already had basically a break and a retest over here, and then a continuation higher. So, if price were to come back to it, we would have wanted to see a similar reaction, and that is exactly what happened here on Monday, so yesterday. So during the Tokyo session, price came down into that zone and then reacted nice and bullishly off of it. When we had an opportunity to try and push price lower yet again, it failed, and we just carried on pushing bullishly. So with that being said, what we can see is that the most recent high structure over here was kind of respected this morning. But at the same time, we've also slowed down significantly in relation to this movement that we had yesterday. So a little bit more bullish based on this reaction that we had yesterday morning, as well as yesterday's nice strong push. If we go on to the 4 hourly, you can see this slow down quite significantly as well. Another thing is that we had this low area over here that got broken and closed below. So I would say we're kind of stuck a little bit. We're waiting for a little bit more impetus, and I think we're going to get the impetus during New York session. There is a potential for it to push back down again to try and attempt to take up a little bit in balance that might be sitting around here. If you have a look at the options today for the NASDAQ 100, the price is 25,756. So 756 is, let me grab, no, we'll just use this one. 756 is roughly around here. So that is in line with this base area that we have over here. So it's basically the rollover of last night coming into this morning. So we're expecting by New York Open that this area is going to probably be tested first, which makes sense. So it is an area where we've had a little bit of indecision after a very bullish day. Came back a little bit, tried to push higher, but this push up higher was not very strong. It's a very slowed upward tick. I did actually get a very quick short scalp on the live account earlier. So I entered over there. It went a little bit against me for a while and then eventually came down to this point over here. I closed it out because we were close to, if I go down to the 5 minute, I closed it because we were slowing ever so slightly around this area over here. So decided to just close it there. Could have kept it open for a little bit, but yeah. The point still stands. We're having this very slow downward tick on NASDAQ, and I think there is a potential chance that we can either test the lows of Tokyo, which was the most recent low where price started to push bullishly off of, and if that fails, then we're going to test that rollover section down here, which is in line with the options expiry at New York Open. So I'm a little bit more bearish on NASDAQ intraday, waiting for New York, but I can see a potential of us reacting strongly again off of this area and trying to push higher, let's say on the 4 hourly.
I agree.
But it is purely because of this reaction down here. So short-term pullback maybe, and then a continuation higher. And then we're going to come and test up here. What is this? This is 26,167 to 26,219 potentially. And that was the highs of last week Wednesday. Now, obviously, there is not a lot of price action to the left of that, except all-time highs. So that's
yeah.
what
So I agree. I agree definitely with like you're saying, the options level for today as like a near-term pullback. That also comes in line, like you were saying, with some of the other structure. Very good. Obviously, yesterday's play with the options level came through very nicely. We even surged well beyond that.
Straight through.
Yeah. So hence, you can look for that, see that as one of your interim levels, potentially take partial profits there, let portion run, or if you get the next candle immediately coming back off, then you close it out altogether. So that's kind of how you play that. Yeah. Right now, all the sort of earnings numbers have been pretty good. We did have OpenAI pushing back against NVIDIA recently. I don't think the market really cares about that. I don't think anyone else should either. It's more of an OpenAI problem than the broader market, actual tradable stocks. And I think it's because they're kind of realizing that they could get swamped by Google, Microsoft, Amazon, all of them. Right. So they just don't, Meta, all of that. They don't have the capex to continue what they're doing, and they're going way beyond the kind of levels that these other guys are doing. I think Sam Altman is way over his skis, for sure. And so it seemed like more of a nod to any other players that are close or potentially trying to arguably challenge NVIDIA or otherwise, saying, hey, if you do it, we will jump on team with you, and you'll get some momentum. It seemed much more of a tactical movement like that. So I think from here, I can't see any reason for any other stocks to be, the index in general, to be going down. Stocks are all very healthy. Employment, cost base, debt, all that is great. I can't see any reason for stuff to come off. So definitely, most of these drawdowns like that will probably be bought up from here. I would say.
Most probably once we reach that 25,750, we might even go a little bit lower. But I can think if that fails, we can come down all the way to 25,360. But that's quite a ways away. But that was only because that was the last time we had some sort of resistance trying to prevent the price from going up. So resistance from the bears trying to sell price lower.
Yeah, and the recent drawdowns as well were basically due to the Kevin Walsh pick, like we were talking about, as far as that being more hawkish, therefore less overall stimulus or cheaper interest rates for companies borrowing all this money, that kind of thing. But I think the market is coming around to he might be a bit more neutral than that in general.
Yeah.
And then there's the specter of potentially him even being in the pocket of Trump. But at least right now, the market is starting to see it as more neutral.
Yeah. At
Good
least
for
not
indices. Yeah.
So even if it isn't neutral, at least they're not viewing it as like a negative thing. So maybe they initially thought, this is not a good thing. They're kind of like warming up to the idea. And then US 30, what do you feel about US 30? I have a few areas here that I had marked up a while ago already. I still think we're in this bullish channel, which was established in April of last year already. And yeah, we've had some pullbacks days, like a week or so where, having a bit of a retracement. But in general, we're kind of like staying within this channel. So still quite bullish. If I go a little bit closer down on the 4-hourly, staying within this area, we have areas of consolidation, singular reactions, secondary, tertiary reactions off of it, pushing price higher. Here about the 49,673 to 49,580 mark-ish, we started to get into a little bit of resistance, struggling to push price past these points. We've had multiple reactions on this area, some stronger than others to try and push price lower. When we did try and get close to it now from yesterday, we're falling short ever so slightly, but I think it's going to be in the same line as the NASDAQ. It's a short-term potential pullback with the long-term view still being in line with this upward channel. Even though right now it's not looking healthy in terms of its attempt to push higher. But yesterday was a very strong reaction, taking up almost all of this movement in one day, which is like if you consider that this area is a range from down here to the top. One day we took all of that movement, and the last time that happened was on Wednesday, the 21st of January. We basically almost in one day we had the full movement pushing up higher, and then we eventually reached this top section, tried to push down. So I'm not entirely sure whether or not I think that this is all that good. We're a bit too close to this area over here for me to say, yeah, let's buy. So I would like to see it pull back a little bit more, potentially to this 0.25 zone. So if this area over here is the mid zone of the channel, I would like to see it pull back a little bit and then come and test 48,870 to 48,76-ish, and then react off of that to try and take out this high points again. Just gather up a little bit more momentum, push higher, push through.
Yeah, so I agree. So obviously the US 30 has a different set of companies. Obviously it's the Dow
This is
30.
NASDAQ, yeah.
Right? Yeah, so you have to look at them specifically, and also there's different weighting to each of these companies.
Each one of the companies within the US 30, yeah.
Yeah. I would say, so you've got a lot of the major sort of blue chip US companies in there. I think most of the banking concerns have gone out the window, both from rates coming down, the troubles with the overnight financing rates or potential banking stress, healthcare / pharmaceuticals, with Trump putting pressure on. It was kind of double-edged, like both beneficial and negative to a degree, where he's trying to put pressure on outside countries in giving the US higher costs and trying to reduce US costs. Now, that's a good thing for the consumer, but as far as the stock price for certain companies, it means they make less profit. But he was trying to balance that out with charging foreign companies more, etc. So all of that stuff is kind of in the background. You've got people like Walmart, Visa, MasterCard. You're trying to find your financial transactors in there. All of them, that's very consumer driven. They're all doing very healthy. You've got a portion of Apple, Google, those kind of guys in there as well. I would say you do go higher. I do like that retracement. I would just say it's a bit higher. So the base of where you've got that box with the base, I would say that would be my absolute drawdown. That's also where onto moving averages, on 1 hour, that kind of thing. I would say that's probably what you're looking at as far as a main base for that. So if I jump over to mine.
So on the hourly, I've just added the 200 EMA as well. Yeah.
So I'll be looking at something like that, and then eventually all-time highs. I don't think we'd get down to this lower area. I think that would end up being the base. There'd have to be something wrong for us to like break through here, I think.
Yeah.
In which case would change the entire structure of your thinking.
Yeah, that's why I went down, because I didn't see a base on the hourly. It was way too low down. That's why I went down to the 15 to see if there was an area that made sense. And then this area, 49,219 to 49,045-ish. That's a base area for me. Like the way that I view it, at least, it's this little box over here, which makes sense. And then if you just look, okay, this is once again on the 15 minute, but it's in line with the 200 EMA on the 15. And if you go up to the hourly, it's kind of like round about the 200 EMA as well as this, how can I say, this section over here, kind of like lines as well.
That kind of lower cluster relative trading range, like once you've got that kind of break below there, it kind of separates the higher side and the lower side, right? Yeah.
And then on top of that, the fact that if I go up to the higher time frame, if we just look at the median point
range,
it's still stuck in the bottom portion of this channel, and I do like the idea of it pulling back. I don't want a very deep pullback. But I mean, even on the 4 hourly, if it were to come back down to the 200 EMA, it's going to test the 25% zone, basically. So if I know you like referring to your standard deviations, you can almost imagine that this is a 1 and this is a 2, or -1 and this is a 1 and that is a 2 standard deviation. If we just look at the channel, so it would be perfect, quote unquote, if it came back down to this point over here on the 4 hour with the 200 EMA and it being like a 1 standard deviation, quote unquote, because it's not a standard deviation in this case, obviously. But that would have been great.
Yeah,
but I agree.
Same deal. Like you're saying, if you zoom out, you can see how that average line basically gives you essentially the average level of what you can expect, right? And then above, a bit more expensive, below, cheaper.
Cheaper, yeah.
Yeah, you kind of gradually go up with inflation, devaluation of currency, debasement. I mean, that kind of stuff. So, yeah. And obviously, the US 30 is, like you're saying, hence why we're stuck in this range is because of the different weighting of each of the those included in the basket.
Yeah, assets included
it's much more heavily weighted to like the financials and that kind of stuff rather than your like big tech players.
But once again, very very slowed top that we have here over from yesterday into today. It's not like a crash down that we're seeing over here. Okay, if I'm going to say crash down, I meant like a nice volumetric, momentous movement pushing down. It's generally a very slowed section and then a reaction. Slowed section and then a reaction. And if it were to come down, this area over here would just be the very nice area to come and test, first and foremost. At least for today.
Yeah.
Tomorrow, different story. We don't know what tomorrow is going to bring.
Yeah, for today, I like that. That's good.
Yeah, no, I agree with this. It's so nice when you have people that agree with you. Oh, it's so nice. There you go, your mean brother. That's what we're seeing on the US 30 for now. I hope it makes sense. If it doesn't, sorry.
And that prior top level near where you've got the what is that channel? Was that your zero lag MA trend? Is that kind of like a Kelton?
Yeah, that's the one that I told you was similar, but not entirely the same. Like I do have your Kalman one. Let me.
Yeah, sorry, Kalman. I said Keltner. You know what I mean? Yeah.
Let me get your Kalman Big Beluga up here. And then.
So yeah, there you go. The Kalman would be into that base.
Yeah. So I want to hide the drawings. Let's just see where I can. Is it on this one? Hide drawings. Yeah. So if we had the same. So what this is short term is 50 and then the long term is 150. So if I were to go down to 30 as an example for the short term, it aligns almost perfectly with the 20 EMA, which is the bottom portion of this zero lag MA. The zero lag MA is, you set it to 20 and then if you go and check the calculations, there's an EMA of an EMA. So 20 is the base, and then there's an EMA of that EMA that is slightly faster. So it also has a fast and a slow EMA, you can basically say. But they align similarly if it's on the 30. But I feel like the zero lag one is a bit faster. It's a little bit of a faster movement than the Kalman one. But the Kalman one does play the same way, I think. So the Big Beluga one over here, during this whole segment here, was showing a little bit more bearish. From this time frame over here all the way down to there's, short-term bearish. And if I just hide that one, you can see that in terms of the EMA, it was struggling. There's a lot of slowed momentum pushing down. And then here you start getting stronger bullish movements. So the price is above the EMA. If I put the Kalman one on, it's starting to eventually, it starts out neutral, and then eventually here it starts going bullish. So the zero lag one is just slightly faster, I think.
Yeah, of course. Yeah.
One is on 50.
It's almost like having... Yeah, like in theory, like a faster and a slower, just like you were saying.
Yeah. But if this one was 50...
Yeah, of course. Yeah, you can shift them.
It's going to be very similar.
Yeah. So I was going to say the next portion is that we were also talking about the NASDAQ having a slight potential to pull back. And then we also do have, was it factory orders? I'm I'm not sure if are we getting jolts today still. We should still get
Tentative.
jolts.
Tentative.
Is it just NFP that's out, or is it jolts as well? Because I couldn't find.
Jolts was supposed to be out. It's tentative, and that's it.
Is NFP definitely coming out? I thought that was also going to be part
No,
of
it's not. It's definitely not.
I
it's
didn't think it was going to be coming out.
But that's what I mean. I wasn't sure if jolts was compiled early enough that it still would.
Oh wait, there was something on the news about the jolts information.
Because I couldn't find a proper. Even going to their website, I couldn't find anything. So, and then tangential Googling gave me like a mixed picture of yes and no. So,
Yeah, all of them except for the preliminary University of Michigan consumer sentiment and inflation expectations, but that is not the government that plays that one. Unemployment claims for tomorrow is tentative. Where's the other one that I saw? ADP, non-farm employment change, as well as ISM actually has a date associated with it and a time.
yeah, so yeah, the BLS has updated on their website. It wasn't updated. Clearly, whenever I checked it before, it wasn't updated yet. They've said the next JOLTS opening data will be February 19. So, yeah, it's not coming out today. So,
Yeah, definitely not.
Yeah,
Which is pretty
I
factual.
thought that was the case.
yeah.
I did wonder a bit like you, though. I thought to myself, like, is it going to come out if it's printed prior to the actual shutdown? But I don't know. We'll see.
Yeah, I assume it's a. I'm sure they would have the data. I take it they don't want to release partials, that kind of thing. So
Yeah,
I
fair.
don't know. That's
That makes
kind of
sense. I
odd.
suppose.
Yeah. Either way, it'll just be factory orders. Then there you go.
There's an interesting question here from MDRS7. How on YouTube I see everyone winning with strategies, but when I apply or backtest it, it's not that good. So, who wants to break it to MDRS7? Who wants to be the bearer of bad news?
By the way, just to let you guys know, I'm in a gold trade buy. Just a real quick one. Not sure if I'm going to hold it right the way through to TP. Just a quick scalp to see how it's going on. It's a little bit higher risk, but still very valid nonetheless.
Yeah.
About
And
70
gold.
bucks up. Yeah, and gold. I'll just bring my chart up real
I
quick.
can see why.
Yeah, I like that.
Yeah, I can see why you want to kind of like steal that one.
100 bucks up at the moment, risking about 800 to gain about 600. So negative risk to reward, but we'll see how it goes. If it does break and close above here, A, it'll hit TP, and B, it'll validate a better trade potential anyway.
Agreed.
So we'll see how it goes. Keep an eye on it, we'll monitor it.
No, I like that. So the thing I had when I was talking with Pedro before, Will, was so either you got this as the top. So we've got these two colors, the blue. Either this is where we top, and you get a drawdown here with those prior tops, then up to the moving averages through here, and the prior cluster high and the wick low, right? And then we come off that, or we surge up to there first, then retest, then have another retest and go down. So it'll be one of the two. So the main point here is obviously, watching this wick high to confirm that we actually run through it, right?
Yo, Griff.
Yeah, I like that. I like it, Will.
Yeah.
Hey fellas,
Yo, Griff, what's good, brother?
Griff.
good to see you guys.
I forgot
It's
to
been
How
a
you doing,
minute.
mate?
It's been a minute, yeah. It's fair.
Yeah, I've not seen you for a little while. Well, how's the Wi-Fi situation?
Oh, bro, don't even. I'm using.
Why do you
I'm
have to
using my
punch it so low, mate?
Yeah, why do you have to low blow me like that, man? What's going on? Thought we were friends.
Okay, so I guess it's still not great.
Well, I'm on my data right now, so
Okay, well, it's looking good.
yeah, it's better. It's better than the Wi-Fi.
Going wrong.
Took a look at this apartment the other day. The missus hated it, so I'm not going to move in there, even though the Wi-Fi was absolutely like supersonic speed. But
She not like it. Wow.
oh, she hated it, man. She was like, she's like, I don't like it. Ours is better now. I was like, yeah, ours is better now, but it's got crap Wi-Fi. So,
You know the thing
can
that
you
I
do?
need in order to make bank. You know the Wi-Fi.
Yeah,
that's
yeah. You know the thing that I need in order to pay for the apartment.
You know that Wi-Fi.
Yeah.
Apparently
That's a happy wife, happy life, my friend.
Oh yeah, there's no point in making bank if I'm not able to survive long enough to enjoy it.
What about happy Wi-Fi, happy life? There you go.
No, that's happy Wi-Fi, happy husband, I suppose.
Social experiment I think needs to be done is before you get married or before you get into a long-term relationship with someone, sit with them in a room with really crappy Wi-Fi and then see how they react. And then based on their reaction, you can decide whether or not you want to be in a relationship with them. Like,
You know what? That's actually
How long
not
can you last?
how long can you last? And
This
then
will be
if
like the next Mr. Beast video. Like, how long
Yeah.
can you last with like?
How long can you do without
Breaks
Wi-Fi? Like, I'll be honest with you. If it wasn't for trading, I would be a caveman. Like, I have no reason for Wi-Fi. I don't really game. In fact, the only reason I've sort of not started gaming, but the only reason I've actually fiddled about with some games on my computer is because I'm bored here during the day. There's I don't really trade Asia session, and we're not live, so there's my trading starts from like 4 p.m. local time onwards. So everything up until that, it's pretty boring. I go out, explore Hong Kong a little bit. So start gaming a little bit. If it wasn't for Wi-Fi, bro, I wouldn't touch a computer.
Will has played some GTA along with me, and then also a game called Repo, and then LJ and I. So
Bro, that Repo, that's such a fun game.
I want
Mate,
more people to
Rich.
play Repo with me. Yes.
I was going to say we didn't really play Dota, did we? Come on.
Well, one of us tried. The other one was not capable. We're not going to say whom was whom in that scenario. Anyway.
We can try again another time. It's fine.
Yes, when circumstances present themselves a little bit more favorably to us, That was just a smorgasbord of bad timings, man, that day. Just absolutely horrendous.
Funny thing, if we were playing GTA, it might have actually been a good time. It could have been like beneficial to everything, like
Maybe.
right?
Maybe. Griff, friend,
Yeah.
buddy, pal, question. You know it's coming. You know what it is. Are you gonna forerun the question? Or are you gonna let me finish?
You can finish.
Griff has taken 86 trades in January.
Trades, my friend. Are you in any trades?
No, I'm not. But I think I mentioned the last trade I took last week. And it was an AU flag I took, which tagged me out by 0.1 pips and then went to be an 8.5% winner.
And then you said that you were not really considering changing your strategy for that specific thing. That was just one of those trades where it just went against you.
Yeah,
But
it's just one of those
Have you
things.
rethought that position?
Pardon?
Have you rethought that position?
It happens. I've got a couple examples over the years, and you never forget them when it happens. Those trades which tag you out by this much and then go and make 10%, you never forget them. But like, if I were to increase my stop loss or change things, then my overall profitability would decrease. So I just have to take those blows, unfortunately.
The exact same thing happened a while ago to my brother. He's also doing swing trading on UJ and EJ. And there was an EJ trade that he literally got wicked out also by the tiniest of margins. Just 0.1, just a pipette. And then ended up going exactly in the direction that he had intended. It was like, yes, it's going to go. And he marked it out perfectly, got everything right. The only difference was between TradingView and his MetaTrader terminal where he was taking the trade, there was just the slightest of differences. Just the slightest. And he miscalculated by a pipette. And I couldn't believe it. And he's just like, look at this. Look at this. He was
garbage.
he was using a lot of other words, which I dare not utter.
Yeah, I can believe it.
You can imagine to yourself just the absolute rainbow of language that he was using. Yeah.
The array of colours coming out of his mouth were very blue.
Yeah.
That's why I think you got to have super clear rules, because like if you're using TradingView, but you're also looking at MetaTrader, which has slightly different pricing feeds, then you're going to get like bummed out so you can't flip-flop, because there have been times where I've seen people, maybe MetaTrader saying one thing and TradingView saying another, and then sometimes using MetaTrader data, sometimes using TradingView data. So I just always set my stop loss and my entry and everything based on the TradingView data, even though my MT5 pricing feeds are a little bit different. And that's just the way I've always done it. So I can't change it because like if I would have set my stop loss based on MT5, I would have stayed in the trade. But I always just do it on TradingView, and I gotta be consistent.
Yeah, see, I was the opposite to you guys. I took a trade on UJ, which was invalidated on MT5, which I never do my analysis on MT5, is always on TradingView. So EJ gave me an invalidation. I took out the trade. It absolutely rocketed up into my direction. I was like, right, okay, fair. That'll serves me right. That'll teach me for like cross-platform analysis. And then on gold, it did the exact same as you mentioned earlier. It whipped me and then hit like a full TP plus like 10x more. And I was like, oh, ouch, my heart, my poor heart.
That's trading.
Yeah,
so I think this kind of like directs very nicely back to this question from MDRS7 when he was asking about how on YouTube I see everybody's winning with strategies, but when I apply or backtest it, it's not that good. And then our Vitalissimos. I don't know. I was struggling with the pronunciation. They replay maybe easy to choose the best way to start to show strats and stuff like that. What is your guys' opinion? Because I feel like I'm quite vocal about my feelings regarding this specific topic.
Yeah,
LJ, your opinion.
I guess I'll go first. So first and foremost, obviously, why all of us are here is because we've got trading experience. We've been doing it for a long time. We trade as a massive portion of our income. Some of us are like completely full-time traders. Others, part-time because they've got split, jobs, or you might have some entrepreneurial stuff like a business type thing. But you have a massive portion through trading, right? So it's kind of why we're here. That's why we're presenting to you guys, to help you guys out, to teach you, to inform you, that kind of stuff. Bring all this knowledge, information to you guys. So, once you've got kind of, at least speaking for myself, 13, I think now it's 14 years experience, trading markets, doing that full time, you kind of have to be doing pretty well in the market. So on average, yes, you're gonna be showing good stuff, and that's because that's how you've actually gotten by. That's how you live. Now, as far as that's what I can say for us here. Yes. As far as like other people might be different, and other people are trying to might have a different agenda or something else or whatever. But yeah, it comes down to an experience thing. Honestly, right? Like if you played basketball or soccer or rugby or a sport or something for 14 years, you'd expect that person to be pretty good at it. And if you just started a year or 2 years ago and you guys play table tennis, chances are you're going to get blown out. Right? So hopefully that actually signals something to you guys that it's of value, and we're showing you this stuff. And same deal with Rich. Will do a bunch of live trading. Will's got his terminal up right now as well.
In fact, I passed phase 1 and phase 2 on this exact account.
Yeah, and some of us are more in-depth, like full-time trading. Others of us have other bits and pieces going on, so it's a partition of what we're doing as like a whole, etc. So there's blocks and bits and pieces across the board, which also is hopefully helpful to you guys. Whereas some of you guys aren't going to be trading full-time. You've still got a job, whether it's full-time, part-time, whatever it is. You're trying to trade on the side, potentially migrate your trading into more of a full-time thing, or potentially like 60% or 70% of your income and go down to like a part-time position and potentially migrate that fully to trading / investing or whatever. So I'll leave it there for now. I'll let you guys go next.
Play about with yeah, dude, I 100% agree with that. I think a lot of people on YouTube show the best of it, and a lot of people don't want to show the negatives. Whereas, like, you know, everyone here is here for a reason. You know, LJ's got 14 years experience. Like, I got half that, and like 7 years to me feels like a lifetime. But, you know, we've all got different levels of experience in the market, but nonetheless, we've all gone through some form of journey, which we talk about. And you won't see us talk about just, yay, I'm amazing, this is me, I'm so cool, I'm so good, my trading is just nothing but 100% profit. You know, you won't see that, whereas you do see that a lot on YouTube. Whereas, you know, I'm going to take myself into consideration here. I have gone through a 7% drawdown live on stream. You've watched me. I'm still in that drawdown. I'm like 2% down at the moment, or like 2.01% down, just to be almost exact. So you've watched me live past phase 1, phase 2, go into drawdown, claw back from drawdown, struggle in January. I pulled up my P&L. I can pull it up again if you want me to, chat, let me know. I pulled up my P&L for all of January and I've lost 2%. November, December, break even. However, September, October, 7%. You know, so there's pros and cons to watching YouTube traders, but when you're watching traders like us here on the Fivers, it's nothing but transparency. Now, a lot of people don't want to watch that because it doesn't make them feel good and it bores them. So they want to go over to other traders which just show 100% profit rates, and then they want to copy, and then turns out that's fake profits, that's fake trading, or that's edited trading, and then you guys go and test it and then fail it, and then you're like, this is a scam, and it's a whole vicious circle because you get bored watching people who know what they're talking about. So when you say, why do I see a lot of traders earning X amount of money, but I can't seem to earn it? Because maybe you haven't quite found us, which now you have. Make sure you like and subscribe to the channel. Now that you've found us,
shameful.
Yeah. Now that you've found us, you can actually sit in, watch us, and understand that's not all sunshine and roses. Sometimes it is going to be blowing accounts, going through drawdown, and having moments of tilt and stress and wanting to pull your hair out, you know, so it happens. What we can say, if you are watching us and you're still struggling, is be patient with yourself. Find a way that works for you. Like using LJ's analogy earlier on, using the, you know, if you're playing table tennis, you've never played rugby before, next minute you go and jump into the I don't know, international games, you're going to get mowed. You're going to get absolutely mowed down. Whereas, you know, if you start off at the beginning, you come through grassroots, you're really practicing, you're practicing every day, you're playing like grassroots level games and you're coming through the levels, then maybe one day you'll be able to get international level. However, you know, this the same goes with boxing, for example. I'm not going to go punch a bag 20 times or even 1,000 times. I'm not going to go punch a bag 1,000 times and think I can knock out Anthony Joshua. You know, so just bear in mind, like, trading is no different to that. You're not going to go back test GBP USD for 20 trades and then think you can go jump into the live markets and be a super profitable trader. It doesn't work like that. You've got to be realistic. So just a couple of different scenarios there for you that would possibly answer why you're seeing some super profitable traders, but maybe aren't necessarily putting in true profitable trades. Oh, I've gone from 200 up to 200 down. It's depressing.
Griff, your opinion on this subject?
Yeah, I know the exact kind of YouTubers that MD is referring to. Like, of course, it only makes sense to put good out on YouTube. As someone that posts YouTube videos myself, the videos where you're celebrating a win or showing off or sharing a success, they always outperform a video where you're losing or you're being vulnerable and you're showing the real side of trading. So it's quite difficult to, if you want to have any success in YouTube, whether that's to sell a course, which a lot of these guys do, unfortunately you have to just share the good side of trading. But I find that, myself, I think the more honest and vulnerable you can be, the more kind of rapport and connection you get to build with your audience. So that's been my approach, just complete vulnerability and honesty. And then, the videos where I'm like, here's my worst trading month ever, which get like no attention, I get to build a good connection with the few people that do watch. So yeah, there's two different approaches to YouTube. But yeah, the people that do just share the good side of trading, I get why they do it. They're trying to build a career on YouTube as well as on trading. And quite often the results you see, maybe they've been chosen selectively. They're showing you a small sample size. Maybe you're just seeing a couple months of good results and you're not seeing the full picture. So that's another element. And yeah, I'd say third element is, strategies. I find that most strategies do work. And as these guys have described, a lot of it does come down to just time and experience. I think Richard has mentioned before, like, you can kind of give a man a fish, feed him for a day, teach a man to fish, feed him for a lifetime. I think a lot of it is just coming down to experience. You can give someone a trading strategy and two people will trade it completely differently. One person will have the right psychology and mentality around that, while the other, who's maybe less experienced, won't be able to execute it properly. And I know that the best traders, ultimately they trade quite discretionally. I know LJ, you're making executive decisions on all sorts of different elements. There's no clear set execution rules necessarily. You're using your experience in your trading plan. And of course, you can't use your experience in your trading plan if you've not been trading for a long time. So that's the fourth element. Yeah, I'd say that answers all aspects I can think of your question. Richard, you've not answered, right?
No, but I think I used to be that kind of person that I would say, okay, nothing is black and white, it's everything is on a scale. So I'll still hold true to that. The idea for me is that in general, you always have to consider what is the intention behind the action. And majority of the people that have these videos talking about, oh, I made X amount of money in X time and I have a 90% win rate and so on and so forth, and they pick and choose the information that they're going to relay to people, is the intention behind that is usually centered around the idea of either trying to sell a course or trying to get people invested in this person's process, and in so that person is going to make money off of people following them. So it's usually a social media thing. It's usually followed up by, hey, I have a course. I'll just give you a tidbit and then I will give you the rest of it if you join this thing that I have, or it's a marketing ploy of some sort in general. Okay. Now, the thing is, I always consider the person's intention. And if the person's intention is to get you to kind of sign up for something, like in this case, a course or something, it's going to make me question whether or not this person is actually selling me what I want to hear or selling me what is actually achievable. And in general, it is usually what people want to hear. So we've all heard the saying sex sells. It's the idea that showing the negative side of trading is not sexy. Nobody wants to talk about it. Nobody wants to see it because it shatters this expectation, this illusion that people have about the industry. It's not pretty. We don't want to see it. We want to see what's pretty. What is pretty? Seeing fast cars, people buying mansions and all of that kind of like stuff. But when you take a step back and you kind of like look at where is it coming from, then you realize, it's not actually from trading, it's from me selling a course, and that's how I make my money. And then, like you said, people are going to come forward and say, oh, it's a scam, it's a scam. Well, technically you just got scammed, true, but the industry itself is not a scam, but you always will have bad actors. You'll have people whose intention is to take your money and not provide you with something that is A, back-testable, and B, actually true, like replicatable in the market in general. So I can understand someone going out there and just trying, just trying to make a bit of money, trying to trade, and then they come across this person, and this person is promising them the world, and then you just the longer you are in the industry, you kind of like realize that is just a dream that's getting sold, and people want to buy the dream, when the reality itself is a lot darker. The reality is not pretty. You all know, if you've gone through drawdown and you're reliant on your income from trading, how does that impact your psychology? How do you feel if you haven't made what you need to make in order to settle your debts or settle, your responsibilities? It's harrowing. It's difficult. And that's why I always referred back to the idea that trading is way more psychological than it is mathematical or financial, actually, because it's always in here. And if you can have this baseline be strong and realistic, trading is going to become a lot easier for you because your expectation is going to be managed properly.
I think it is definitely mathematical and analytical every day, just the same. The trouble is, with most other things, you're not turning up with a P&L in front of you every single day, and it's right there, and you win or lose. You don't. If you have a bad day at work and you didn't perform, you don't cop the loss, right? Because you're working for a company or whatever, you still get paid. You're never gonna get negative pay at the end of the week, the 2 weeks, the month, whatever time frame you're being paid on. But in the market, it's every day. And so I think that's where the psychological aspect comes into it. So obviously something like poker has both very much. There's a mental kind of element to it, plus the analytical, the probabilistic elements. But you're not necessarily playing high stakes poker games every single day of the week, right? Whereas trading, you are kind of engaged in that. So it becomes much more heavy. And the other thing, like we were talking about with the sports analogy, the thing is when you come into the market...
Can we just get a screen share up? Will I see your screen is up, but you're not sharing?
Oh, yeah, sure. I'll put yours back up. It's fine. There you go.
Anyway, carry on, LJ.
Yeah, so it's what I always say to people. I think I've said this before on stream as well, and what I tell friends when sometimes friends ask me if they want to get into trading or investing, that kind of stuff. I always emphasize that it will be difficult because essentially it's like going to the park to play basketball, and you think you're just trying to play a casual game because it's just at the park and you want to shoot some hoops and whatever. But then LeBron James turns up on the court and just destroys you. Right, because that's the thing. You jump straight into the shark pit with all the hedge funds, central bank, institutions. You got central bank stuff going on, fundamental stuff going on. They relay that into the market. All these big capital players, you have to deal with them at the same time. So you don't get a chance to play kind of those rookie grades of learning per se. You're kind of thrown into the deep end right away with all the big players and the sharks, right? So it does make it a little bit difficult. So that means you have to steady your approach in terms of the learning process to try and survive long enough to become a bigger shark and then start playing the proper game, right? So it's not about just making it right away. You got to gradually get there. If you do that, you'll survive.
Guys, I think I've forgotten how to trade. Yeah, I've taken another loss. I've gone from like 250 up to, well, I've just lost 400.
Do you want my honest answer?
600. Go on.
Was that a hypothetical question, or do you want an actual input?
On what? I think I've forgotten how to trade.
Yeah.
I mean, it's a hypothetical statement, but I'd love your answer anyway.
To be dead honest with you, my friend, I think too many changes too quickly around your routine.
You reckon?
Yeah. The last while you took one or two trades that seemed like they were according to your strategy, but maybe felt a little bit forced. There was one or two times where you took a trade where you forgot about news.
Okay, yeah, that one was
time change,
100%.
a complete time change, and I think maybe with let's call it the stress surrounding the fact that your internet is struggling and you're in a different country and all of that kind of like stuff, maybe all of those things are like slowly building a little bit, and instead of you definitely haven't forgotten how to trade, mate. Like that's absurd. I think that maybe psychologically you're in a bit of a slump, even though you may not fully.
Yeah, I think I'm in a bit of a mental drawdown at the moment, which is putting me in a physical drawdown.
Yeah, because like you said, you're not as physically active at the moment because you're struggling to find a gym and all of that kind of like stuff. So all of these extra elements, though small, are creating a bit of a weight on the shoulder kind of like stuff.
Death by 1,000 cuts, as they say.
Something like that. But no, you haven't lost your ability to trade, mate. I think just you're in a bit of a slump.
Yeah, no, I know.
Death by $400 a trade.
So again,
Okay.
Death by $400.
$400 a trade.
Yeah, no, it was 600. Yeah,
One
This is 600. There you
Oh,
go.
geez.
it's $600 loss.
0.6, not that bad.
Yeah, no. The dollar value doesn't matter. It's
Yeah.
just the amount of bloody red that I've seen since January. I'm like, it's so draining. And look at it now. Look at it. What it wants to move back up. There's a couple of fingers, a couple of digits on my hand that I'm inclined to use to the markets at the moment.
I was going to say that you're inclined to use, or that you're now missing because they got bitten off.
Oh no, that I'm inclined to show and demonstrate to the markets. But I can't because I'm
Sigma's got a question for you, Will.
am I an EJ? No, actually, I haven't looked at EJ yet. Let's have a look at EJ. EJ. Oh yeah, EJ's looking quite nice, isn't it? Didn't quite break on the 4 hour though. It didn't go. No. Let's have a look. Yeah, it did break above, but it looks a bit pathetic, man. It's a bit wick. It's a bit like I used yesterday, the wickage. Wickage. Yeah, but we got a lot of wickage up here, which is putting me off a little bit. But the hourly looks a little bit better. The 4 hour looks quite nice.
The pound yen, though, like we were talking about before when I came on.
Yeah. In fact, let's have a
Look
look
at pound yen.
I'm gonna get my trading view up because I have pound yen on my trading view.
So this is why I was saying I like the pound crosses, like with the yen and that kind of stuff, a bit more than the euro right now.
Yeah.
The euro is just
Yeah.
very.
For the pound yen. The pound yen is looking.
Yeah. Do you want to swap your screen over, Will?
Oh yes. Yeah. Let me bring up my trading view. There we go. Can you see this okay now?
There we go.
Yeah. So this is pound yen at the moment. As you can see, it's a little bit nicer than EJ. Yeah, that actually looks really good.
So we're actually getting the movement.
Yeah.
We had the same thing with USD JPY as well.
Yeah.
UJ is also moving a little bit more intentionally, let's rather say.
Yeah. I've never liked UJ. I think I got burnt by UJ at the beginning of my trading career. And same with GJ, actually. I think that's why I don't trade GJ, because GJ I found was very wicky. And like you said, LJ, there's a lot of move. Like, it moves a lot better and a lot nicer. But back when I first started, the moves would just kept wicking me out of my stop and then moving in a God knows what other sort of direction, either whether it's my intended or it'd wick me out, mess about a bit, and then drop. And it was just so unpredictable. I couldn't find an edge on GJ, and I think it just put me off trading most yen pairs until recently. I found EJ and I found nice. UJ burnt me big. I lost a lot of money on UJ, and I haven't looked at it since. I'll analyze UJ, but I haven't traded UJ since.
I will say the same with the pound in general. Just in general, I don't like pound pairs. Like, in some occasions, like right now with the pound yen, same with the pound dollar at the moment, I like it. But typically, for the same reason, pound does a lot of chaotic type stuff, versus euro dollar will typically be active and moving, but a bit more synchronous, a bit more structured than the pound. And the pound, UK government's done some weird stuff for a while, so that's another question. But do you have any trades you're actually eyeing off, Griff, at all? You've got
not at the moment. I was looking a little bit at AJ for a continuation, but we've just retraced too much now. Yeah, AJ and just AJ. Yeah, AU nearly, but it had this wick right here. Let me do a drawing. This wick was a little bit too big to consider a continuation. I like the descending. This breakout was nice, although it was just one candle, so I prefer to see sustained momentum over multiple candles. But yeah, this wick, a little bit too big, considering this one candle as well. It wasn't quite clear enough. I would have set a pending order down here as well on this inside bar, and for price to retrace that much, it would have been a bit too much. I mean, you could have set an order here, so that you've got two candles retracing to the entry. But yeah, at that point, we're not really seeing the trend continue. We're just seeing price come back quite aggressively, quite deep to where I would have had my entry. And AJ, similar continuation. Inside bars quite low down, so I wouldn't have liked to set my my entry this low down. It did come back kind of slow, but then if you wanted to wait for a slow retrace, now you've got double wicks and the break isn't that big. Yeah, there's a couple things filtering me out. Yeah, and prior price actions just going sideways. So we've also just broken above this high, so it kind of makes sense for us to kind of reject right here, like an ascending channel. I wouldn't be surprised if we move down, if anything. Yeah, so not really looking at too much. I sound so pessimistic when I'm doing like a trade analysis. I'm just like, you're bad. I don't like this. I don't like that.
Every now and then, we'll just hear Griff go, ooh.
Yeah, once every like 3 weeks. The only reason I do that, because previously I would be focusing on what is good in a trade, and I'd be, but then I would find that I'd kind of start justifying bad trades to myself because I'm focusing on the good. You need to be balanced, but I've just found that by looking for the bad things, it's much easier with my trading approach, because I like to take trades with like 0 or maybe 1 bad thing, because obviously you can't find perfect trades in the market. Perfection doesn't really exist. So yeah, by looking out for just anything bad with a trade, I find that it's just a lot quicker for me to analyze positions. Because if I count more than like if I count more than one thing that's bad with the position, then I know I'm not taking it. So just a bit faster than this is good, that is good, this is good, that is good. And it's like, oh, bad thing and another bad thing. I can stop looking any further.
Yeah. When you have a tick list of 3 bad things and move on to the next one, it's a quicker process. You can go bad, bad, bad. Okay, next one. You can just straight away just move on.
Yeah, save you wasting any of your kind of decision-making energy.
Yeah, I think if you look for the bad things as well, it prevents you from trading. Whereas if you're looking for the good things, I think it causes you to overtrade, which is quite an interesting concept. Because a lot of people would be like you just said, oh, I know I sound pessimistic, etc. But I'd rather sound pessimistic going into a trade than sound optimistic. Like I'd rather go in and be like, that's crap, don't like that, that's rubbish, that's crap, I'm not taking any of those trades, I'm going to move on to the next one. Nothing today, going to move on to tomorrow. Instead of coming to the markets and being like, oh, that's quite good, that's kind of good, I kind of like that, screw it, because you start persuading yourself to take a trade that really isn't necessarily the best trade that you could have been taking.
Yeah, I definitely would catch myself doing that, which is why I think I've taken this approach a bit more. But I guess it depends on your personality because, yeah, I would find myself kind of, because I have so few trades, I want to get involved. So if I start convincing myself of a trade by looking at all the good things, then I start to oversell it and kind of put less weight on the bad things. Yeah, interesting. I've not thought about that for a while.
No, I think that's good. It's like a risk management type position. So you're protecting that
exactly.
like downside adverse event type thing. Obviously, you do also have to be looking for the good cadence, something actually working out well. Because if you're on the defensive, you're not going to go on the attack ever. But yeah, it's that healthy balance. I will say with your levels that you're looking at before Griff, I did like them as potential like entries to go longer. I did have them as TPs for like short-term trades, like intraday trades earlier.
Oh, cool.
For shorting the tops for the Aussie. So obviously, yeah, that big candle that we had today was from the interest rate hike today. So I would expect a bit of a pullback, to be honest. I mean, there's skepticism about more rate hikes. I don't really like it. I don't know if they will. So that's the only thing that, yes, just like you were saying, we might get that deeper drawdown if that doesn't come to fruition. Yeah, because I'm very skeptical on the decision today. I don't think it was the right decision.
Can you guys excuse me for 2 minutes? Just take me off of screen. I just need to address something very quickly.
Can't do that. No.
No, sorry.
Can't excuse you.
Yeah, you're going
9.
We need
I should have just like removed all of us and just left Rich here.
just left him up. Just looking at EJ now after Scott said about it. Looking at it, I probably will be buying if it can close. Thing is, we got an hour and 20 before this candle closes. If this candle closes similar to where it's at now on the 4 hour, I'll consider buying. Just because.
Yeah, so I will say I'm actually long euro dollar from this point now. I jumped in
After slamming the euro, you're just going to admit that you're long in it.
Yeah, but now, no, I was saying this when Rich first jumped on. We've now gotten to a point where I think we've consolidated enough because obviously you get like low activity, low volatility, followed by higher volatility. Like eventually it's gonna move. So we're starting to base enough, and I've already taken a number of trades today. So as far as containing risk reward, yeah, it's still like an intraday trade. Basically, I jumped in at 117.87, and I'm targeting 118.03 roughly.
What do you say? 117.87.
Yeah. And then, yeah, 118.03 approximately. 03, 02, like that kind of range.
18, did you say, or 17? 03.
Yeah, so 117.
Okay, yeah, nice. Yeah, 117 and
118.
118. Yeah.
Yeah.
Okay, yeah, that's nice. I'll rate that.
So that was the piece I took earlier before you jumped on with I was talking about it with Rich.
Yeah.
So that'll probably be my final trade, at least for today. And it's basically coming up to the underside of that higher trading range.
I was going to say, if I would have liked to have maybe not have gotten in. Oh, come on. Not quite where you got in. I love where you got in. I couldn't trade that low. I think if I was to trade, it would have been about here. So what's that? Oh, there you go. 17,950. I probably would have targeted a similar area. I probably would have been targeting around 18,054. In fact, my stops probably would have been close to your entry. I would have looked something along the lines of this. I should get it up. I'm trying to squeeze a 1-to-1. Can we squeeze a 1-to-1? Oh, it's tight. Oh, maybe not. Oh, okay, maybe.
LJ, I remember last week, I think, you were talking about shorting gold and silver. Did you have any success with that?
I did.
Oh,
I didn't capture the whole thing.
Took an absolute monster.
So I captured a good portion of those shorts. I didn't capture the whole percentage lower, but I also went heavier leverage. So first of all, this is the that's the euro trade right there. So it was that was an hour and 20 minutes ago, or whatever. So that's basically what I'm looking at. So basically the underside of this higher range through here, and just by the crossover of the moving averages. I am rich. I'm taking trades. This is the euro trade I was talking about before when you first jumped on. I took before.
Yeah.
So that's still running now.
Okay, but
Griff
who entered the trade right now?
Me.
Okay.
I don't know what Will's taking. He's probably, what is Will taking?
Gold.
I'm deep. No, it's not gold. It's not gold. I haven't. In fact, I haven't brought it up. I'm actually entering in on EJ.
Okay.
I really like this area, even on the lower time frame. Like on the 15-minute time frame, it's quite nice as well. So, risking $700 for a swing position.
Well, hang on. I'll show you the gold.
I want to see this
trade.
fat gold and silver shorts.
Yeah. So through basically this was the top area that I had designated with I was talking with like Dirk and stuff, and back from last year I was saying, Q1, Q2, I think, and even next year, 5,600, 5,500 is where gold tops, right? And then this was the level on silver we talked about from mid-Jan. That ended up being pretty nice as well. Slight overtick there, and then down into that pocket. I did trade a portion of the silver there as well. Just given silver and gold both had slightly different structure. And at the time, what pushed me further to gold was that silver failed to make these new highs. We're now starting to break down. So I took those trades there. And if we go over to gold, so the first trade I took through here, right? Now we didn't really push through that base. So I just took profit there and I was like, okay, I'll wait. I'll see if we get another sort of technical structure to jump in. Jumped on this candle. I basically wrote it down to the base of that sort of run fly zone. So this is one of the patterns I always see, you go all the way up, all the way down, basically to where you sort of drove off from. So that was the first instance. Obviously, we pushed beyond that. Then we recovered a bit, and then I took the trade through here since we started to fail just under that higher trading cluster, and we're starting to make lower candles coming off, and then drove that down to the equal bottoms there. This was during the Friday. Then my time, this is like in the AM, right? So this is like 2 a.m. I had a nap, right? So I took profit there, had a nap. I saw that we were further down here already. So I could have kept holding, but that's no problem.
I thought you were about to say you like closed partials or something. You had a nap and you took profits and closed partials. You woke up and you were like further down. It's like, just panic, exit now.
No. So I was short the whole way through, but I took full TP down here, right? Just by the bottoms of the prior structure here. But we had kept going through the Friday. So obviously, once I saw that wick, we didn't make a new low through here. So we rallied up through here, and then on the base of that second bar, just here, that's where I TP'd, because we didn't get like a new low. And then obviously it's Friday, etc. I was pretty tired. Went and took a nap, got up again, saw price was down here. And then obviously coming into Monday, we drove even lower. So as far as the Monday action, I didn't participate in the rest, but this was very healthy, right? So either way, that's still a good portion drive down from 5536 down to the first spot 5300, and then there 54 13 12 or so down to 5146. So
nice work, man. That's great.
Yeah.
I saw that happening, and I was hoping that you'd managed to find some positions.
Been looking for it for a little bit now, so I've had my eyes on, and I was happy with that because I did go in a bit, like I was saying, a bit heavier positioning with these as well. So it was pretty similar to the dollar yen situation, where we had this massive like 700 pip drawdown, which I didn't capture the whole thing, but I did get in on this tick down through here, right? So that's still like 200 pips or whatever it was.
Yeah, that's a hell of a sell. Really nice sell. When you told me that you caught that move, I was like, oh, nice. I was like, absolute legend.
Yeah. So you don't always capture the whole thing. Once again, it's not like I shorted it from there and captured the whole 700 pips. I'd probably go away for 6 months. But
yeah, fair.
But that's still a good take. And because the trouble as well with some of these moves, like we've had various like false starts, obviously. So you always want to be cautious going into it. And you don't want to be greedy once it starts, and then you get some kind of pullback, that kind of thing. So that's another thing for you guys. Like, if you do identify that stuff, don't FOMO into being worried that you're missing the whole move. Just be happy that you got things directionally correct. If it went further or not quite as far, you can always re-enter. There's always another trade. Another day, another trade.
Another day, another dollar.
Yeah.
Or in my case, another trade, another lost, another opportunity to give the dollars back.
Well, we will not accept negative talk on this here.
No, you're right. You're very right.
Minus 600.
Positivity only. I am positive that I've lost a fortune in January, February.
Think of it like this. You have presented yourself with an opportunity to claw your way back out of it.
Do you know what I think? Do you know what I'm actually doing? It's a secret strategy of mine. I'm proving to you that I can make it all back, lose it again. I'm going to get back to that minus 7%, make it all back, and see guys, I told you, it's super doable.
Easy
you follow my course. My course, guys. I too can help you get out of drawdown.
Yeah, but I can't have you getting profit. Just get out of drawdown. Dude, look at gold now, man. It's just... It just took $600 off me and then decided to do nothing. Just decided to consolidate and wick about and just do nothing.
There's a question here from MD. How you guys come to develop a trading plan? I'm sure in starting of trading, your trading career, you guys have tried every strategy.
Oh, 100%. Yeah, I was strategy hopping. Like,
It's a good question, actually. Yeah.
I think we could start with Griff, because Griff, I think, has pretty much been in that like frame of mind now recently. You know, the development of a new trading plan, or at least was considering it.
Yeah, I have. I haven't had as much time to work on that as I'd like, but I always try to write down any new ideas I've got to try and contribute. You've always got to be developing your strategy. You've got to constantly be working on it. Like, what's it called? Kaizen? You know what I mean by Kaizen? Just constant, always developing. Yeah.
Japanese.
I love Kaizen. one of my biggest motivational philosophies is Kaizen.
Yeah, it's very good.
Where'd you start then, though? Like with that, like how? So
Yeah.
As far as like starting and then developing that sort of like Kaizen into where you actually got it to, and fixing those like fractures or whatnot.
Are you asking me?
Yeah.
Yeah. I mean,
Yeah,
like starting a new trading strategy and like developing it from the ground up, you mean?
Yeah,
Yeah,
like how do
basically,
you go from creating something new, but also following the idea of improving on something? Like, what's the starting block, and then what is the next steps that you would consider typically for yourself?
Yeah, it's really not easy trying to come up with something. I think you definitely need to have some references, so you can't just go from nothing. Like, I've got a lot of experience already, and whenever I'm trading, I try to take note of any patterns I see reoccurring, and sometimes I'll spend 20 minutes just looking back, seeing where else that pattern's occurred and if there's any entry there. And like I said, I always take note of these little patterns that I notice. And so basically I'm just trying to find these combinations, I guess, seeing how one variable interacts with another. And you can't test more than 2 variables at a time, because then you don't know the impact of it. So it's quite difficult, because it's what makes it so tedious, because you want to see how this one thing interacts with this other thing, and you do loads of data gathering, loads of testing to see how those 2 things interact. And then you want to continue doing that with like 20 variables, and then that's kind of how you're able to refine a strategy, if that makes sense. It's really tricky. I can't think of any like specific examples. Like maybe what happens on this specific currency pair, because it has another element, when we get an impulse and then immediately wick. How often do we continue? Do we range afterwards? Do we pull back aggressively? What happens next? And then you want to try experimenting that on other pairs. You want to try experimenting wicks after ranges, after Vs, and then you want to get as specific as you can, after a descending channel, after a morning star, after a news event. So there's all sorts of things to test, and that's what makes it so tedious, because you want to have as much data as you can to know when it works and when it doesn't. And yeah, that's the kind of the position I'm in at the moment. I'm in the trenches, to be honest, just testing two things constantly. Trying to figure out how to optimize the strategy as much as possible. So yeah, I hope that is a good answer.
I think in general it's a good point to start from an idea. Like you said, you notice something, so there's a theory. You start with this idea of a theory. I see a certain pattern, and I can easily see it as it's happening. I can see the pattern. Now I need to kind of like figure out whether or not, if I go back, can I see it, or how often does it happen at least? Let's rather say it like that. Is there any evidence that suggests that if I'm going to start putting time and effort into trying to build on this idea, that it's potentially going to be fruitful? Doesn't help I see a pattern that only arrives once a year. That kind of like thing.
And you want to see what happens like around that pattern, like before it, after it, because you might notice it working 50% of the time, and then you're like, aha, it works 80% of the time when this price action is right before it. And it's that's what makes it so difficult, because there's literally it can get as detail oriented as you want it to be. There's literally millions of different patterns that you could explore, and you don't have enough time to explore all of those, so you've got to try and find the most high impact ones to test and kind of prioritize them and then test in this kind of order. But first you have to actually notice these patterns.
Actually be in front of the chart long enough to kind of like notice certain things in real, not in hindsight.
Exactly. Most people won't even realize that, you might see this pattern working 50% of the time, and that might be the best you can make it. But someone else might be, oh, hang on, there's something here which improves the win rate by this much. And, you just need to keep stacking those variables without taking away from the win rate, because you might find these two variables which increase the win rate, but when you have them both, it decreases the win rate. I think that's what makes... It's almost like quantum, where you have... I'm going to stop there.
That is an incredibly very deep well of conversation. Just that one word.
Yeah, God, my mind is like a web. I can't get my words out to describe these. It's the patterns, man. I feel like that meme where it's like,
somebody quickly grab my tinfoil hat. Quickly, patterns, man.
Yeah, you can
all over the place.
You can just see them everywhere. And it's about how you can connect them to make the most high win rate strategy possible. But yeah, like I said, it requires a lot of testing, one variable at a time. It's very tedious, very slow, and you need to try and find the best combination of variables to make the most high win rate, high profitability strategy. Yeah.
I think that's generally why trading takes such a long time. To become a, let's say, just a semi-skilled or like a semi-proficient trader. It takes a lot of time, because it takes a lot of input. It takes a lot of time in front of the chart. There's a lot of back and forth between your journal and what it is that you see, you writing stuff up, and you might be doing something for 3 to 4 weeks and then realize, okay, this just doesn't work on this asset. And then you have to start afresh with a new asset and the new variables and so on and so forth. It takes a long time. It does.
Indeed. And on that note, I better shoot off. I've got to go back to trading, back to Traders Connect, and I'll see you guys next week.
Sweet.
Awesome, Griff. Thank you very much for joining us today. Have a great one, my friend.
Thanks, boys. Good talking to you. See you soon.
And you too. Peace, man.
Ciao.
So we're getting a little bit closer to that time of the day where we're going to have a little bit of a special guest coming in very soon. So for everybody that's in right now, we have a special guest that's going to join us in the next segment for the last hour of the stream. Will, were you not aware? Did you not get the email?
Maybe.
Not. So,
It's like
everybody's asking.
My Wi-Fi wasn't working. I couldn't.
Oh yeah. Good excuse. Good excuse. So
right,
we have
Will.
Yeah. Mr. LJ is the Doc LJ. He just wrote you a prescription for. For Victor's segment, the afternoon segment, we have a very special guest. You will get to meet this person, and this person is going to be a very important person going forward for not just the YouTube stream, but also for the Fivers in general. And for everybody that was asking about the future stuff, stick around because this person is very important for that specifically. So not going to give anything away. I will introduce the person soon when he arrives. Soon.
Yeah. Beautiful. I was just going to say, I saw this from Unbiased Trader before. Sorry, I completely missed this earlier. So do I create portfolio based on themes, e.g. Euro macro / global liquidity and growth / cyclical momentum and defense equity? Yeah, definitely. So hence both my day-to-day trading through each cycle, month to month, week to week, the next 3 months, 6 months, etc. I definitely formulate those ideas the same way they've been talking about stuff happening now in Q1 and Q2, all the way back in July, August. I mean, you guys can go back there on the stream and we'll see where we are now. And okay, cool, right? So, yeah, definitely. And then in terms of personal portfolios, like long-term holds, that kind of. Sorry, dying. In terms of
So sorry, guys,
on
I'm
the back.
dying here for a second.
Yeah, apologies. So in terms of that stuff, yes, definitely as well. And that is certainly shifting with the new regime shifts, technological shifts with like AI, the more offensive position of governments with government spending, that kind of stuff, and you rebalance these kind of portfolios overall. But I would say for that stuff, yeah, overall, I kind of have like a personal, somewhat of a risk parity type portfolio, sort of built and constructed for myself with an added portion of like alpha on top of that. So it's kind of got both those bases because obviously I'm also trying to massively build wealth. It's not like I'm punching in, you know, a couple $100 million into a hedge fund and just want a risk parity type thing. I also want to get compounding exponential growth over time at the same time whilst being defensive per those considerations. So yeah, definitely. Obviously, it's hard to go in depth with that. That's a very big conversation. You could do 20 hours of videos in depth on YouTube or something with that. But yeah, definitely ask me more in, I don't know, the Discord or something else like that, or even if we play poker or something. Yeah, any other time, or send me a message. There you go.
Awesome. Thank you very much for that, LJ. And if anybody would like more information like this, that what LJ is sharing now, or like the idea of more of like a macro template, let's rather say, like something that you can start looking at, let us know. Like maybe we can formulate something here by the Fivers to assist everybody a little bit more in depth with the macro stuff. We do have a newsletter that comes out every few days or so, where we're talking about potential market movements and stuff like that. It usually gets emailed to everybody, but if you guys want more, just let us know, and we can definitely consider something like that if there's a large enough demand for it. Then we will definitely look at supplying. So yeah, just let us know.
Indeed. Yeah, if you guys are looking for that, you know, let us know, and potentially I'll put something together for you all. You know, outside of just what I show here, try and put into like a condensed form that you guys can reference and that kind of thing. So, yeah.
Very much. Awesome.
No worries, my man.
It's the sage is saying it's all about experiments and tweaking. Sorry.
Oh yeah, with the trade strats, definitely. Yeah. I would definitely agree with that. So same deal from myself, like starting on the back of what Griff was saying. Like, yeah, I've been through scalping, intraday stuff, long holds, weeks, months of swing trades, stock trading, futures, options, CFDs, currencies, commodities, the whole bit. And then you kind of find what fits your lifestyle, whatever else you have going on, family, that kind of stuff. Maybe you have kids, maybe you don't. Maybe you're in uni, maybe you're in like midlife kind of thing. You've got a job, whatever.
Crisis.
Yeah, find what one of those styles actually fits you. So.
Do you know what I love to compare trading to? Because it's actually more successful than this is not. The only difference is maybe a bit closer to a hedge fund example. But trading is very much like being a scientist, and LJ, you'll probably love this. So a lot of scientists, especially like I don't know, theoretical physicists, for example. In fact, again, if we've got a physicist right here, LJ, again, you'll probably love this. A lot of scientists will hypothesize over, especially like astrophysics. They'll hypothesize over a certain idea that they may never know the answer to, and they'll spend their entire life developing, strategizing, testing, and trying to prove a theory that 30, 40, 50 years later may not be true. Or, to top it off, they may have spent 20, 30 years proven something, found something, developed something, or had some form of wow, aha moment, and then just for it to be another 30 years time when they're retired, they've come to the end of their career, they're like, oh my god, this is the biggest turning point in my career, this has made me as a scientist. Some young pup university student disproves it. They, in theory, have wasted their entire life, but they haven't, because what they've done is they've spent passion in their career. They've spent passion testing, developing, and understanding their industry and their field a little bit more and a little bit better, and contributed to a further development of that field. Now, trading is very similar to that. Now, okay, yes, you could argue, however, if you don't do well and if you don't succeed as a trader, you're not going to get paid, whereas a scientist does potentially get paid. However, the theory behind it is still there.
Their funding can be stripped, though.
Yeah, and then they get fired.
True.
Basically, yeah.
But the fundamental idea is there.
The interesting thing about that is like, I think we've had this discussion before where we've referenced the idea of a person basically looking at the process, the journey, versus the end result. If a scientist hypothetically had the viewpoint of the end result is the only thing that matters, they might look back at their life exactly in the scenarios he explained as a failure. He spent his whole life trying to prove a specific theory and it came to moot. So he'll look back and be like, I was a failure, blah, 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 blah. However, the opposite end of that is the person that was, it's the fact that he was trying to prove or disprove a specific theory that gave his life meaning. He was in the pursuit of trying to prove or disprove a theory. So that's very much like a psychological difference. And yes, this is a scientific thing, but still the idea of it is like where your focal point is going to really determine where you place value. And if I'm a end goal kind of person, my eyes are always over there and not like the next step, I'll never quite know how far I've come. I'll never quite know how far I need to go, that kind of like stuff, because I'm only focusing on the end goal. But if you're focusing on the process now, it makes it a little bit easier for you to see where you are, where you've been, where you're going, that kind of like thing. So that's just my like visual, like for myself, how I see that kind of like discussion that you had now. It's a very good example of the perspective being very important.
Yeah, exactly. And you're right on the money, Will, with that, developing the trading thesis and your strategy and approach, right? So it's basically the same idea of how I approach trading. It's just like a scientist or Was the
Yeah, fair.
Spider-Man thing.
Yeah,
Like,
you've got a very scientific mind as well, so I could imagine that would be super, super correlated.
yeah, and that Spider-Man meme. It's like, I'm a bit of a scientist myself.
Oh yeah. I'm.
Remind me of that.
What was his name?
Willem Dafoe.
Yeah, Willem Dafoe. Yeah, it was his.
Yeah.
Yeah.
But yeah, that's basically what you're doing. So you come to the market. So that's the same thing with all the macro fundamental garbage that I do. Obviously, I do all the technicals the same as you guys as well. You guys in chat, everything. It's just I add the whole collective together and kind of build like a hypothesis. And essentially, just like a scientist, you try and build that framework and then you put it to the test. And where you test it here is the market. Right, so you build that framework and you test it in the market, and just like science, I think I've said this before in the past when we're talking about my background and stuff, you get a result, which in science is going to be potentially an area for further study or a new revelation in like a scientific theory or something like that. In the market, it tends to be you get a profit or a loss.
Yeah.
Right? And sometimes you're going to have to test it again because you might have actually been pretty correct, but you've got to try and change some of the parameters to actually gain further insight. And that's kind of how you go about it. And eventually you start building up that just like you would in science, that scientific framework, background, understanding, knowledge that you can get better at doing experiments and eventually move things further and further forward. Right. So same thing with the market. That's the kind of idea and thinking you want to have each time you take a trade, and then you keep testing and testing and testing, and you eventually find stuff that works out. And yeah, there you go.
I like that. It's a good approach in my opinion, because at the end of the day, you're saying that your approach is systematic. Even though you're trading with experience, you need it to work through those systematic processes in order to realize certain things about the market. So your approach was a specific way, and you kind of like built your fundamentals, not fundamental analysis, but like the basis of your trading style.
Of thinking, that kind of stuff,
Yes.
right? Because you always, if you want to progress in something, typically you have to be able to measure it. You can't just like say, oh, it's kind of here or there. Like if you really want to make proper progress, and especially early days, you can make progress kind of randomly, but especially once you want to get to higher ends, you get diminishing returns over time. So you do have to be really critical in measurements. So yeah, exactly what you're saying. There's a framework in place.
Yeah, and I think a lot of people should maybe attempt at approaching the market in a similar fashion. Instead of trying to jump in with the idea of I want to make millions, jump in with the idea of I want to make a few dollars, as an example. So bring down bring down what it is that you want to achieve to a measurable state, and just kind of like see, okay, where am I? How am I doing in reference to the specific metric that I've set for myself? And then if you don't have to prove anything to yourself, but if you've kind of like got some data that suggests something a little bit more, then consider doing a little bit more. If you have data that says, oh, I don't know, I'm inconsistent, or I'm just not following it the way that I envisioned I would, maybe don't go the next step and put in more money. Don't try and force it.
Exactly, perfect. Because the same way that Will was also saying with, it takes, years or decades or more to develop to actually reach like a breakthrough. If you approach the market that same way, where instead of trying to reach that breakthrough immediately and, tomorrow Lambo, try and come to the market each day to learn something new, to progress, to get better, you will naturally, over time, almost by accident, seemingly, get to that kind of point, right? But it takes that progressive, slower nature, which most people don't typically gravitate to, put it that way. Yeah.
And it comes back again full circle to that previous discussion that we had about people coming into trading, watching a video from somebody, and then realizing that, oh, it's actually a scam, you know, that kind of like, you know, that's the realization that they come to because they get swindled and so on. It's because you're looking for that quick in, quick out. I want to make money as quickly as possible. And that you don't realize this is very much a career, like any other career, where you have to have learning stages. You know, you build your way up. Within that learning stage, it takes years. For some people it takes much longer. Sometimes it takes people decades to like really reach like a level where they're like, okay, I'm an expert. But that's the exact same with every field. Nobody just rocks up today and all of a sudden is a rocket scientist. Sorry, you need to go and have studied at university. You know, you needed to have been graded and pass certain standards, and then maybe go and do practicals and so on and so forth, and maybe become a junior engineer and so on and so forth. It's the same with trading.
It's like astronaut, you know, like kids dream about being an astronaut. It's like, yeah, I really want to be an astronaut, sit in a rocket and go to space. Yeah, well, first pass GCSE maths and science, or maths and physics, you know.
A little bit lower.
Yeah, first let's get the basics and like try and get an A at least, like an A or an A star or an A plus, whatever grading system you have in your country. Let's try and get top marks in basic level maths, basic level physics, and then slowly make your way up. You know, you don't just, you're not going to chuck yourself in a rocket and go, there you go. What if it goes wrong? You know, you got to get there.
Yeah, it's a like a tortoise and the hare type, you know, analogy, fable as old as time. Like sometimes the sort of slowest way there is actually the fastest way there, type deal.
Yeah,
and you know, it doesn't mean those fast ways don't exist. They definitely do. That does happen time to time, but it's not something you can rely on and bank on. And you got to think about the probabilities of how many people that actually works out for versus the basket, and you're basically taking a gamble on that you are in that top echelon basket, of which is not necessarily a good idea when even being in the basket altogether at the end of the day in the top echelon is already unlikely. You're then trying to take a secondary gamble on you getting there that quickly. So if you do that multiple of the probability of that actually happening, it's that multiplied by the multiple of it happening to begin with, which is even lesser. So if it's like 1% or, I don't know, 0.5% actually get that get rich quick thing, and then you've got like 5% make it all together, you got to multiply 0.1 by 0.5, and then you can see the probability is very, very low. So you're better off going for the larger portion, taking a bit longer. You'll get there. You know, have a happy time along the way. It's good, it's fun, it's progressive. You'll be, you know, proud of yourself that you did it, you know, along the way. Like, yeah, you don't need to do it all tomorrow.
What I learned, again, I can't remember who came up with Kaizen. However, goes back to the whole philosophy of Kaizen. You know, I don't know which one of you guys put it in chat just now. It was Griff, was it? Oh, I thought it was in the Kaizen chat. Fair. Okay. Well, Griff, if you're still watching, yeah, 100%. This brings it all back to Kaizen, the philosophy of constant improvement, just 1% better each time. It doesn't have to be 1% better each day. You can have pullbacks, you know, you can have drawbacks, setbacks. It's the idea, it's the philosophy of the consistently being better and learning to look for a better, improved you. So if you look at a better, more improved you in your trading, you know, I may not be technically speaking, I am worse as a trader in 2026 January than I was in 2025 January. Technically speaking, January last year, I had a fantastic month. This month, or last month, this year, crap month. It is what it is. We have pullbacks, drawbacks, setbacks. However, what I have is more data, more opportunity to learn, more opportunity to enjoy the people who I'm surrounding myself with, who's making me a better trader. And therefore, it is going to be giving me the ability to put into place maybe fundamentals, because I'm speaking to LJ more. You know, since streaming with the Fivers, you know, I wasn't streaming with the Fivers January last year. However, now that I'm streaming with the Fivers, I speak to LJ more, gives me more of an understanding of fundamentals with macro, you know, so therefore maybe it's something that I can start implementing because I'm learning as a trader. And this goes to you guys in chat. You do not have to be a stream host. You do not have to be a profitable trader. You don't have to be a full-time trader. You just have to be here. Because by being here, you're hanging around with like-minded, positive individuals who are trying to push you to be the best version of yourself. And that is literally the definition of Kaizen. Because it's about surrounding yourselves with people who are going to help you improve. And they do say, you know, you are the 5th millionaire of your friendship group. If you're friends with 5 millionaires, you're going to be the 5th. If you're friends with four alcoholics, you're going to be the 5th. You know, so it swings in roundabouts. Who do you want to hang out with?
Definitely.
Well, that was quite the saying, Will. Thank you.
You're welcome. Hey guys, who knows? We could be alcoholics. We're just profitable alcoholics.
So I think it's always been the goal of the Fivers to be a good actor in the industry, especially in an industry that I think is a little bit misunderstood by outside forces. People generally look in on retail trading, and they look in on the, you know, people saying I'm a Forex trader or something like that. The viewpoint is misunderstood. And then at the same time, you have a plethora of negative bad actors that does tend to, you know, kind of like prove that statement that it's, you know, it's a little bit misunderstood. So I feel like it's our duty as the streamers here on the Fivers live stream to, yes, be like a port of call for like-minded people, yes, but also to be very realistic and to be open about specifically what it is that does happen in the industry, at least to a degree where we ourselves are impacted by it as well. Like, I cannot speak on behalf of how LJ is doing things in his life and so on, but I can only ever talk from my perspective. And realize this, that like between the three of us, we have almost like 30 years of trading experience, but neither one of us is the same. LJ has got the most, then Will, then myself. And we all had our own journey and our kind of like our own way of reaching this point. So with the Fivers, I believe that if you can align yourself with, first of all, people that are like-minded to yourself, and then secondly, with people that wishes to see you do better in life or wishes to see you actually build from something. And that's what the Fivers is, in my opinion. They are the, look, the industry isn't pretty, it's hard work, sometimes it's going to suck, however, we're here to assist you as much as we can. Here we go. Let's try. But it's always going to require a little bit of input from you as well. It's not just like, here you go, here's everything, congratulations, you are now a profitable trader. It's still that thing of just like the input is going to determine the output. So I love that. Like, rock up every day. Yes, we're not always trading live every single day because we're also trying to instill the idea that if you're going to trade live, make sure that you trade the best setups. Don't just jump in on a trade because I'm live and I'm supposed to trade. So you're not always going to see a live
trade.
Trade
Your normal trading approach, because you're not going to be trading, every 3 minutes of every hour all the time. Right?
Yeah, true. So the idea is to try and make it as realistic as possible. Yeah, that's all I wanted to say.
Realistic as Will with his drawdown right now.
Yeah.
On Euro yen. Just like the... Is this another minus 600? I think you're muted, Will.
Oh, my bad. Yeah, Euro yen and in drawdown. There we go. This is my Euro yen. I'm only in like $40 drawdown mine, so yeah, $45 drawdown. So that doesn't really bother me too much. It's I was looking at Euro USD, but so in fact, let me. Oh no, come back. There we go. Let me delete this so you don't think that I'm actually in this trade right now. So these are areas that I'm looking at. So I like the idea of buys, but I don't like the idea of buys. It's a bit. I'm on a bit of an emotional roller coaster with currencies right now, especially gold. But so there were two areas that I had up. First one was this one here, which I explained about after looking at LJ's euro long. This would have been my nicest area. Now, it has given me the opportunity to have a pullback, but don't know if I want to enter it. However, on the 15-minute, it was really bullish, so I looked at the idea of having this area here. Now, the way it just dropped, I was like, yeah, no, I'm not interested in that. So if it comes back down, or if it does come down to here and it comes back to this area here, I'll consider a long entry. Oh, no, don't do that. There we go. I'll consider a long entry. Yeah, this is Euro USD. However, if it doesn't come back to this area, then I'm not interested. I'm just going to stay in with my Euro Yen, which seems to be moving to the downside, which is okay.
I will say I'm out of those trades.
Yeah, I don't blame you. The way Euro dropped as well.
Well, mine hit TP there, so that was.
Oh, nice! I see hit TP. I was going to say I didn't know if you'd hit TP or not. I was looking at it, I thought, I wonder if he's like this is going to be an area.
Aussie, just marginally.
Nice, awesome.
Right over the TP top. So, yeah, so I'm out of both of those now. So I'm completely flat in the market. I'll probably just wait now because we came up to the underside of there in that box. With the crossover with the moving averages, the confluence there. So that's full done. So between now and we've got New York open, and then factory orders. I'll probably just sit on the wayside. Plus, already had a pretty good day already, so I don't need to trade more.
Don't need to add to anything.
Yeah.
Fair.
Don't need to become gluttonous.
Yeah. So there's a few. James Pinhorn saying, "Millionaire friends, where can I find one of those?"
You found them. Yeah. The millionaire was purely an example. You don't want millionaire friends, my friend. You want profitable trader friends, and here is where you'll find them.
Sean saying, "William, I have given you 1 cow for that motivation, but you have to come to Uganda to get it."
Can I just say, that is my favorite comment I've ever received.
Can we get a Funded Freedom episode where Will has to travel to Uganda and collect a cow? Take it home.
Sick with that.
Oh, dude.
Bro,
Dude, that would be so cool.
That would be so cool. On this episode of Funded Freedom, we send the Davis brothers to Uganda to pick up William's cow.
The first thing that people are going to wonder is like, why is he going there for a cow? And then they have to go back. Oh, it was because of a comment in the Fiverr stream.
I'll have to snip in the comment, like edit in the comment.
That would be amazing.
So funny.
Hello, Monsieur Victor. How are you today, sir?
I'm fine, thank you. How about you guys? How's everyone as well who are watching us, which makes me very happy knowing that. But first to the first question, how are you guys doing?
Not all of it once, guys. Come on.
Yep.
Well, I never want to talk over
we'll all answer at once, so I thought I'll give everyone a couple.
Come on, guys. Give us each an opportunity to talk, guys. Don't talk.
I'm doing brilliant. Brilliant.
Wait your turns. Wait your turns.
I'm good, Victor. How are you doing, my friend?
I'm doing great. I'm, as usual, how do you say that? optimistic, good vibes, good energy,
Like
as
that.
usual. So, how is everything on that side of the world, Will?
Good,
And
man. Yeah.
actually, LJ as well.
Yeah, fair. Yeah, that's good, man. It's really good. It's a bit cooler at the moment. Temperatures drop, which is so nice.
I was
I
going to
went,
say the same, dude. Temper has dropped today as
Nice,
well,
yeah.
like, just a little bit. It's
It's
you
like
know, it's
beer.
bearable.
It's really good.
Yeah.
Yeah, so me and my partner went out for lunch, and she was like, "It's really cold," and I was like, "So in other words, it's just normal temperature."
Yeah.
And so I had jeans and like a jumper on, and I tell you what, I took my jumper off because it was still hot, but it was
Yeah.
mwah, mwah. It makes up for the losses I've taken in trading.
Yeah, you
That's
don't
always
want
a
to
good
get
thing,
burnt
right?
twice, right?
I mean, actually, with the more I think about it, I probably still prefer the wins than to absolutely sweat. But I know, beggars can't be choosers in that.
Yeah, in this case.
Got to deal with what
So-
we're given.
LJ, I see that you hit your TP on a trade there.
I did. So these are probably my final two trades. We were just talking about before. These are just little short-term kind of scalpy type trades. Euro dollar, and then there was one on the Aussie as well, just here. So I took a short earlier today. Aussie dollar from the highs after we had this drive. Obviously, the big candle here was the Reserve Bank decision. And then I did actually have there was a long on pound dollar earlier today as well through here that I did take. So those all
Nice.
came through nicely, and then that's pretty much been my trading for today. So I'm basically done now. So those were the final two little pickups I saw just before New York. Little scalp trade.
And you were you trading the interest rate decision of the Bank of Australia, or were you trading
Not today.
Okay.
No, not today.
not
So
different.
I got to bed this morning at about 9 a.m., which is a little bit later than normal. So the interest rate decision, my time was about 2:30. Yeah, so I got up. I got up basically when we were sat just here. Yeah, so just before that, it was like 3:30 my time. Woke up, had a shower, that kind of thing. I was potentially considering another short from here if we rolled over, but fortunately didn't. I was talking about this earlier. Had this drive higher, and then shorted around the round number about 70.50, and we're already up 1.5% at this point, right? So then I took the short.
Looking at your screens, I mean your charts, which I have in the last couple of days, it seems you're on a roll, or am I not correct?
No, you are very correct.
I see that.
Yep.
Yeah, I've noticed. You're
What's
printing
my,
money as usual.
LJ's been
Yeah.
making.
Yeah, I've been cleaning house recently, so it's been good. So the idea with this was basically back to the basis candle, and with the 10 moving average on the 15-minute. That's what I was looking at from there. And then similar deal here, as we came into this support, we're now starting to build up. We had euro dollar and pound dollar also starting to make a move higher. So as far as the cross correlation of all the majors, I took a split trade between the Aussie dollar and the euro dollar just here on the confluence of the moving averages as well. Just as a final short-term trade before New York. But yeah, put it this way, Victor, I've had a very, very happy January, that's for sure. So
Good.
Speeding.
And it's spilling over in February, so to speak. So we can see.
Yeah.
All
Yeah,
right.
that's great.
So what's the cow about? I have been in the background before I came in, and what about that? I mean,
got
nothing.
another
No
brilliant
offense to the cows, but I mean, what is it with the cows?
I got another awesome comment. It's, hello, William. After you were done getting the cow from Uganda, pass by Kenya and we can visit the Masai Mara lots of lions.
So
Dude, like Funded Freedom's gonna be like a whole safari trip.
Dude, we can't have like, what is you got to take the cow with you? I'm pretty sure the lions would probably try to eat the
I
cow.
was gonna say, wouldn't I be
lose the
literally? I'd be food. They'd be looking at me like, well, this human looks a lot slower because he's dragging a cow along with him.
So what will happen is with the cow is you're not taking the cow home. What we'll do is we will have a ceremony, and that ceremony will involve your cow, and then we will all partake in that ceremony with your cow. And then when you do leave to Kenya, you're going to be quite heavier than you used to be prior to the ceremony. And then the lions
with one within the cow.
Yes,
Well,
then
the cow
you will be way more nutritious to the to the lions. So they're working with a plot here. So
Yeah.
I was thinking something a bit more less gruesome. I thought the cow was as food for the lion, but you're putting it a bit more a bit more of a thriller.
He just wants me eaten by lions. He's already planned it. Like, he's already invited me to South Africa and suggested the whole safari idea. I know what he's planning. Why do you think I'm in Hong Kong, not South Africa?
Will's new challenge,
like I'll move further away.
He's got to teach the cow to trade. Right? We need, like, instead of the trading chicken, we need the trading cow.
Yeah.
Musa is saying, and then Tanzania will add you some more goats. Is that a goat? No, it's more cows. Sorry.
Bro, I'm gonna have a farm by the time I get back to the UK. I mean, I already do, but
Yeah. Why not?
I'll be like old McDavis at a farm.
Remember, in African cultures in general, cows is wealth. So the more cows you have, the more wealthy you are. And it's a sign of, like, prosperousness. So,
like a social status, right? It means you're rolling. You're a baller.
I'm an absolute baller because I got like 3 goats, a cow, and a couple of lions.
Exactly.
Yes. That's
Exactly.
the general gist.
Prosperity.
Sounds good to me.
Yeah. Golden cow, the cash cow.
Yeah.
There you go.
Sounds good to me, man. Sounds good to me. I'll do a whole tour of just like picking up livestock.
But where are you currently, Will?
Currently, I'm. Like, where am I sitting right now?
Because you said because we see the traveling trader. Are you in your new? I suppose looking at the background, you are at your new home base, right?
I'm no longer in prison. I exited prison by buying a couple of posters. Yeah, no, I'm in Hong Kong at the moment. April, I'll be in Dubai, and then I'll be back to Hong Kong. Depending what happens politically, there's a lot going on at the moment. I want to visit Thailand before I head back to the UK as well, so I'll probably go to Thailand as well and then go back to the UK.
Nice. No cost involved.
Will, I don't want to be the bearer of bad news, but have a look at gold.
Don't. No, don't. No, don't. Don't even. I'm not in the mood to look at it right now. Dude, that's so depressing, isn't it?
You put it on Will's chart. There you go. Gold, I hate you. Oh, perfect.
Let me just bring my MT up, just so it makes a little bit more sense of why I hate gold right now. Because Victor, I'm not okay with gold right now. Can you guys see okay? There we go.
Yes, we do. We can.
So, invalidation would be a break and close under this candle, preferably under the wick of the candle. But if we get a close under the close of the candle, then I'm out. Anyway, so we got a close under the candle and then further wicked down under the wick of it. And I thought, there's the invalidation. I'm out. And what happened next? We decided to go ahead and potentially hit a $600 TP. Well, it's about to anyway. So, yeah.
What can we say, right?
Hate gold right now.
Gold, I hate you.
Oh, man.
Yeah, gold, I hate you. I hate gold right now. We're not friends. I'm not okay with it. I hate it. Just go away.
Dude, I'm sorry. It's just like we're all here laughing at your misfortune, but the reason why we're laughing is because it's so relatable. That's why. We're like,
No, yeah, 100%.
there
That's
it
the
is.
reason. Like, I'm just so okay with it. It's because it happened to me a couple days ago as well, where it literally whipped me out and then just printed money for me after hitting my stop loss. Like, it literally whipped my stop loss by maybe like 3 or 4 pips over my stop, and then it just decided to print money. I mean, literally shoot for the moon. I probably would have taken about 2-3k from it. No, I hit a stop loss first. And then today, you know, my TP potentially could have been about 1 or 2k, but like I would have taken out at this high, which would have been about $700. But no, I decided to give back $600.
You're such a good Samaritan. Will,
I am, aren't I? I'm just. What can I say? I'm
Giving back to
I'm
the
giving
market
out money.
like that.
I'm practically a charity at this point.
You're just very generous, Will. That's
Yes,
it.
I am.
You're just very, very generous. We appreciate for you. That's how we know. That is the Will we know, right? The generous, good.
I mean, I'd
fella.
rather not be generous, but you know, you're welcome, guys. You know, have it if you have to.
Oh, man.
Yeah, actually, if I look a little bit, and maybe I can switch to my screen on, if that's okay with you, Will. On gold. I'm not sharing anything, of course. Let me share that first. Let me come back to my screen when I have something on.
No,
which is not the case yet.
Victor. Mr. Preparation. Unprepared.
Victor's he's about to bring up like
What
how many cows Victor has, right? He's just going to outshine you. Cool.
Yeah, fair.
He's got more cows.
Yes. So the charts. Let me clean that up. So on the higher time frame, we did get a reaction on that order block, although it's not exactly something that I would be trading because of the wick, which has squeezed a bit too much for my taste. But if we do get the close as engulfing, that could be the beginning of a possible signal from the daily, meaning you would have this area then for where we can base our trades off. But that's on the higher time frames. On the lower time frames, I didn't get anything. The only thing I have is the possible area where we have this H4 indicating a possible supply from there. But we are not getting any, price action. Present price action is not creating bearish structures at all. They're doing the opposite. They're actually, that's what you were trying to catch, which was the retest of this H2 order block, which is in the opposing direction of the H4, which means I'm not going to be participating in that long. However, there is a starting 47 minutes ago, that would be the area that I would be, if I had, if I had the alignment that I would be looking for since the turn of the hour, it was actually 5 minutes later, that candle, I'll be looking from that candle, I'll be looking for the long. And we did have a little reaction here. This is the order block that hasn't been invalidated yet. So I would be interested to get on that candle to go long, but I didn't have the H4 to back me up, so I couldn't take that trade. But this is a beautiful quasi that, that will be the head, left shoulder, neckline breaks it. And before it actually continue, it goes back to retest something that makes sense in terms of the quasi, and then moves out. It's a beautiful, but it didn't line up with my idea to, because it didn't have the H4. But it's a beautiful price action. Too bad it didn't. You can see how it transitions to go from a bearish, to a bullish kind of order flow with a bigger candle, bigger move, bigger legs, switching from the bearish to bullish. That's a beautiful transition there from bearish to bullish. But it's not. It was actually the let me see. I did get a on GU for those who are perhaps trading this pair. I did get a. We are on the daily. We didn't have anything. On H4, we are within a bearish order block, which came after we interact with a bullish structure here, which was not fresh, but still had this kind of a reaction. And we're within the H4. We have a couple of another H4 that was created, but more importantly on the H2. Let me see. It was the H1. I'm sorry. On the H1, we did get the area that I'm looking for, and if we expand this, right, like so, let me put it on the H2, which is that one, right? If we do that and we go to the lower time frames, you will see that price comes right to that order block right there and reacts on a smaller time frames quasi, right? So you have it. Let's see, it would be like so, right? That would be the established uptrend. Left shoulder, the head, the neckline, it breaks it. But before it continues, at least presumably it hasn't finished yet, but before it continues, it goes back to retest something that makes sense to seal the deal, so to speak. And that's what it did here at the second entry order block on that bearish structure. And it goes, at least that's the assumption. I'm still in this trade. And I'm not putting it to go all the way down. I'm just putting it at the next level because, it did have a reaction on, as we said, on the H4 already. So, it's not so clear that it's going to continue, although that's the path of least resistance. You want to be, you don't want to be expecting all of it, right? Just take a slice, next level, and then you move on. But that's my trade on GU. And on EU, I don't have anything. I'm just waiting for. I did have a couple of scalps I took. I think about 5, but that was in the early morning on the London session. But they're all gone now, so I don't have anything. I do have a supply zone up here, which I don't think it'll get there. But if it did, then I'll be looking for a possible short from there, and only to go to the next level, which is not too far, and I'll have to decide whether it makes sense to get into that trade or not, depending on the structure and so on.
Beautiful. I like it.
Yeah, awesome stuff. Right, guys, I'm going to have to love you all and leave you. So I'll see you tomorrow. This trade that I'm in at the moment is Euro JPY. I'll keep you updated with how it gets on. It is a swing trade, so I'm probably going to be in this for a couple of days, a couple of weeks, maybe even a couple of months. We'll see. Keep you updated. I'll keep you posted how it goes. But for now, thank you very much for joining. Make sure you smash out that like button. And I shall catch you guys tomorrow. See you later. Take care.
Take care, Will.
You guys see me by any chance?
Yeah, we got you right here, man.
Hey, how you guys doing? Nice to meet you.
Going well, brother.
Hey, Dave.
This is unreal. I've been watching you guys from time to time, and now.
Oh.
All right.
Out? No. Hang on.
We lost Dave, and I'm sure he
Rich
will be.
and Dave swapping positions.
All right, I know what's going on. Give me a second, guys. I'm gonna jump out, and I will sort this out.
You guys are in the same room. What's happening?
Do you need me to? No idea. All right. Whoa.
No problem. But as
then.
you guys have seen, Dave is going to join us, and but we have it's going to take a couple of moments until we have him, in the right from the right signals. So it's,
indeed,
apparently,
Dave has some good stuff for you guys. So
yeah, I'm very interested. It's going to be, and while we're waiting, why not do us a favor? Subscribe and like the stream. while we're waiting is as a gesture of support to our channel, our effort, and all the goodies, including the person that's going to be joining us soon. It's going to be lots of fun, understanding and I'm excited, aren't you, Jay, to see what he's going to share with us. And with every new trader that we bring on the stream, that's it's a brand new opportunity to learn from them, right? They have been in their journey and probably have a lot of experience and inside, outside of around the trading to which we can benefit from. So I'm very excited whenever we have new hosts or people coming in, guests, to share their tricks.
Indeed. And we're pushing up on 100K now. We're getting closer each day. And right now, I think, how many likes are we at on the stream? About 238. We're going to push this.
238. Okay, all right.
300. We'll set the easy milestone right now. 250, guys. Another 12 right here. If we can get towards 300 or 270, bit of a drum roll, bit of hype for Dave coming in. Then, guys, punch it right there.
Yes, we can, Dave.
We can in the background, Dave. Let us know when you're good.
Oh.
No, that's all good, man. That's all good. I will show
right.
you just quickly
Go
as
ahead,
well.
LJ.
I was just going to say, Victor, what you're saying with gold, yeah, similar deal. So I had two things mapped out with Pedro. So either, like you were saying with your 4-hour blocks through here, either dip down to the support, run up to the resistance, and then up, down, down. So I agree with that. But yeah, Rich and Dave, let us know when you guys are settled. Bring you in. Beautiful.
All right.
we're
Dave,
back.
welcome.
Thank you. This is live, people. This is live, so
I do apologize. That was my mistake, guys. I accidentally gave Dave the wrong link. So, but it's all sorted now. It's all sorted.
Yeah, I caught it last minute. I logged in with your name. I'm like, uh-oh, something's...
Yeah, it's like you guys swapped places.
off.
Yeah.
Yes,
Not
indeed.
supposed to be like that, you thought, Dave.
I was like, why? Yeah, I was like, well, Richard doesn't look the same. That's weird.
Way more handsome. What's going on here?
Well, debatable.
All right, let me go ahead and do the introduction if we haven't already done that.
No, go ahead.
Not
Go
yet.
ahead, Rich.
Yours.
Go ahead.
Excellent. Okay, guys, everybody in chat, I would like you all to give a very warm welcome to David, or Dave G. He is the Futures live stream manager. So from today on forward, on Tuesdays and Thursdays, Dave is going to jump in and talk about the Futures segment as well as the Futures project that is happening very soon. Now, unfortunately, David cannot divulge when exactly. Yes. However, he is going to be our prep for the Futures platform that's coming out very soon. So anybody that has a question regarding Futures from, I don't know, like any asset that you can think of that is being traded on Futures, this gentleman down over here is going to be your port of call on Thursdays and Tuesdays. So everybody just please welcome Dave.
Ooh, what a superb welcome. Thank you. I feel humbled.
Yes.
Very humbled and privileged. It's nice to be with you guys. So yes, we, as everybody's aware, we have the Futures project going on. Lots of things being cooked up in the background. lots of interesting surprises. Interesting things are going to be happening very soon. But we prefer to under promise and over deliver. So no dates yet, but it'll be sooner than everybody thinks, because we've been getting the question a lot: when futures, when are futures coming, when are futures coming, etc., etc., and a lot of jokes, you know.
Yeah.
I've seen 2027, I've seen 2030, I've seen all kinds of things. So it's
Sometime in the
coming very
future.
soon. Exactly, futures is coming in the future, in the near future. So how you guys been? Been discussing the hot topics, gold and silver and etc.
Indeed.
We,
I think.
we have. Go ahead.
No, you go, Victor. I was going to say you were running over some stuff earlier.
Yes, no, we have mostly gold, but as well we do touch on silver from time to time as well. Since it's been, you can't avoid not talking about of silver. I mean that, to the moon kind of a move it had, and then
Indeed.
the big reaction, Dave. I'm sure. Have you been trading these two assets?
So, like Richard, I'm really a NASDAQ, an NQ and ES trader. Well, the futures, of course, but I couldn't resist. I've touched gold mostly, and silver just a little bit, because in futures the risk is very high, and we'll eventually get into that. Actually, there's gonna be soon, I think February 9th, a new contract, the 100 ounce silver, which is going to be interesting. But yes, I've traded both assets just a little bit. I traded silver way back when it was around 77. Then I didn't touch it. Totally missed the short on gold. But since I'm mostly an intraday, very short-term trader, I'm slowly have gotten into swing trading. I'm mostly looking for the fast moves during the day. So it can get tricky when you're trying to trade gold like that, even though I traded it yesterday a little bit, nearly caught the bottom. But yeah, that's been it.
That's a nice transition actually to the question. I'm pretty sure everyone is asking themselves, what kind of trader are you, Dave? I mean, you are the new addition to our team. What can we expect, or what can the audience expect from you as a trader? What kind of experience are you bringing to the table?
Sure. A little bit about my background. I discovered trading back in the summer of 2019. So trading per se, I knew about the stock market. I knew about assets and things like that, but never really got into it. And then I saw a YouTube video that said trader makes $11,000 in a day. Delivery driver makes $40 in a day. And I was like, wait, you can actually make that clicking buttons? I have to say, I was in the advertising industry before that for the longest time. Ran my own business for a while there. And, I was interested. So I got into it. And of course, like everybody, I dove with both feet, and I am not risk averse. So I dumped way too much money into trading way too early.
Wow.
They told me about prop firms, but I didn't want to hear about it. I was convinced. I was trading my own account for a long time. I traded my own account for 2.5 years. So don't want to get too much into the detail, but many, many, many losses later, I decided to kind of take it more seriously, gradually evolved. And I would say midway. So I touched on futures a little bit at the beginning, started with stocks, did everything. I did penny stocks, I did crypto, I did, when you're beginning, you're trying everything. And then eventually landed on futures because of NVIDIA, actually. I spent a summer when NVIDIA was around 400 trading NVIDIA, and it was just clicking and clicking and clicking. And I was like, okay, I think it makes more sense for me to just focus. And I was trading the Qs, the equivalent of the NASDAQ. And I was seeing good results. And that's how I decided to stick to futures. I finally accepted to try prop firms because, I was tired of bleeding money. As a married man, there comes a point where they're like, "Hey, dude, what are you
gets
doing
tricky.
with those savings?"
You're still married though.
Yes,
That's the key
happily
thing.
married, happily married, happily married. We'll get into
Good
that.
question.
I even convinced her to trade. She tried her hand at trading because she's way more disciplined than I am, and she had a little bit of success. But she says it's too stressful. So I don't
Trading
know. We'll have to
moon cycles.
convince her again. You said what?
Trading moon cycles.
Yeah, and crystals. So yeah, that's a quick summary. So about 6 years of experience. I'm still very much on my journey like everybody here. I think one of the reasons I'm here, at least personally, is because I can relate to everyone who's tried to pass a prop firm challenge, eventually passed. I still remember the feeling. I still remember how it feels to pass and then blow up your account and not get a payout, and then finally pass and finally get that first payout. So these are things that are pretty still fresh in my mind, and I can definitely relate to people. So, and of course, trading, what the difference is between trading your own account and the prop account, the pros and cons, and everything. So yeah, that's why I'm here to share my knowledge. Oh, and I feel like I'm blabbering a lot, but I would say 80 to 90% a short-term intraday trader. So I'm taking trades that last between 5 minutes to 2 hours max. I'm mostly trading the New York session. From time to time, I'll take a swing trade, but it's rare. So if you're interested in fast trading, fast action, I'm your guy.
Perfect.
And everything
That's-
futures.
I'm sorry?
And everything futures.
Yes, the future is coming in the future.
Yes. So fast-paced, you said, lower time frames, minutes to hours, not days. And
Exactly.
so your what is the highest time frame you're looking for? Where does your setup, your analysis start? Do you start with a daily bias and then you go to the hourly right away?
Yes, I start with the daily bias. So it's layered. I'll start with the daily bias. I'll then go down directly into the hourlies and the 15-minute. I'm taking most of my trades. If it's early in the morning, I'll even go down to a 30-second chart, believe it or not.
Ah,
But
nice. That's my kind of a guy.
but
Yes.
yeah, mostly using the 1 to 5 minute time frames early in the morning, and then if I'm taking trades later, I'll go up to a 5-15 minute time frame. But I'll jump back and forth between different time frames using basic support and resistance levels, a little bit of volume profile, and yeah, I'll gradually get into how I trade for you guys.
Yeah, I
and share
think
my
we
thoughts.
will in the coming days, spend and dig deeper into all the workflow and the strategies perhaps that you use or the setups that you're looking for. I'm pretty sure we will munch a lot as the audience would be looking for, all the
Sure.
gold nuggets in between. Because that's what we do here, right? We show experience and we show things that do work and things also that do not work, so people don't waste their time. We can
Yep.
guide them a little bit into what has worked for us and probably will also work for others.
Yep.
Awesome, man. Welcome.
Definitely. Thank you. To not waste time and dive right into the chart, since we're talking about gold. Were you guys still on gold? Or I see GP. Here's one thing I know very little about. It's Forex. So it's funny that a guy is on a Forex channel, but I know very little. So I'll be looking to learn from you guys regarding that.
Well, that's
No
the
problem.
nice thing about this industry is that you have, let's call them experts, like yourself. You're a futures specialist.
Man, you're
Victor
overselling
is a specialist of everything, and then LJ is just a master of everything. And
Yes.
the thing
I've
is,
listened to them. Yeah.
you help us, we help you. The community sometimes helps us, we help the community, and it's all this idea of we're all part of this system of trying to learn off of each other. And
That's
we're
great.
all here.
That's great. Yes, I listen to the guys sometimes, and I see there's a wealth of knowledge there. LJ seems to just have an encyclopedia in his head. It's crazy. I was actually re-listening to a few master classes by Victor regarding risk management the other day, regarding dynamic risk and R's and stuff like that. So really awesome. Really feel privileged and honored to be with you guys. Humbled, actually.
Welcome.
Yeah.
Thank you,
We're
thank you.
just as humbled to have you be a part of this family that we've got going on the live stream, and we would like to extend that invitation, hopefully, that we will become part of your family once you have your own a live stream, which
Definitely. Which is coming soon. Yes, we will have. Well, shameless plug. We will have a Futures YouTube channel, and it's actually up and running already. If you guys want to help and go follow and like, we'll appreciate it. And we will have our live segment very soon when the Futures in the Future launch. So yeah, hopefully you guys can come on, jump on, and we can talk trading.
Yeah,
Of course we will.
trading and non-trading. So for everybody, in the description box below, we should have the link to the Fiverr's Futures channel as well. So please go there, join, like, subscribe, and stick around, because when Dave starts building on his YouTube channel, things are going to grow very quickly, and you want to be there from the get-go. So everybody go there. In the description box below this current live stream, the link is there for the Fiverr's Future stream. All right, gentlemen, I am going to have to jump out. I have another meeting that I need to get into. Dave, do enjoy. I see there's already a fair few questions for you in the questions section, in the chat section. Victor and LJ, as always, it's always a pleasure having you guys with us. Thank you, LJ, for sticking around as long as you have today. I'm pretty sure you were very excited for Dave's arrival.
Indeed. I had to say hello, you know.
Yes, I see you rubbing your hands there.
Good to see you, man. Good to see you, man.
Good to see you too. Good to see you too.
So, yeah.
All right. And then if you guys haven't already, please drop us a like. If you haven't already, please subscribe. We're trying to get to 100,000 subscribers. We're getting tantalizingly close to reaching that milestone, and we would absolutely be so appreciative to everybody if you could help us get to that milestone. It is the 10-year anniversary year of the Fivers. There is an event that's going to be coming up soon, and it would be so cool if we could have that and 100,000 subscribers at the same time. That would just be absolutely amazing. All right, guys, have a great day. I will see you all tomorrow for another live stream starting fresh 8:30 GMT. That's it. I'm out.
Alrighty.
See you.
Take care, Richard. Thank you.
Thanks,
Thank you
Richard.
for taking care of our nice community, our nice channel, warm channels where everyone is welcome. And Dave as well is coming into our, warm family of here at the Fivers, and I'm sure it's going to be lots of fun. I can't wait, actually, Dave, to ask you, to get to know you as a trader, as a person, and see, how you approach the market, and especially because I trade not mostly. I only trade CFDs. I don't trade futures, at least not yet.
Okay.
And I will perhaps later on explain why that is the case. I mean, because future has been around for some time, it's quite popular. I haven't made that transition yet or added to my portfolio or things that I do. So I'm extra specifically interested in learning as much as possible while interacting with you about futures as well. So Dave,
Just before you go on, Victor, I will have to say bye for now, guys. Sorry, lovely to meet you, Dave. A pleasure.
Likewise. Thank
Welcome
you.
to the new home. I'll have to say bye for now. Go find myself some food. Been around here for a bit, so I'll see you guys again. See you guys tomorrow, just like Rich said. Ciao for now. Leave you guys.
Thank you.
take care.
Thank you. Nice to meet you. And yeah, definitely you need to feed that feed that stomach.
Yeah.
So
I see you guys.
enjoy. See you soon.
Ciao.
All right, take care. That was LJ, the guy that knows a lot about trading, not only technical but also a lot of the macro look, the holistic look at combining all the different aspects, the schools, and kind of a trader. We love LJ. He's such a great asset to have.
Indeed.
Dave, so tell us a little bit about you said you're on the lower time frames. You are what kind of trades are you looking for? Are you a breakout trader? Are you a mean reversion? Are you what kind of place are you looking to get your hands on?
Well, you actually, it's funny, you hit the nail right on the head. I am actually a mean reversion trader first. This is my bread and butter setup. As they like to say, buying the dip is something I like to do. I think it's because of not being risk averse, which I've paid for many times. And then when the market allows it, I really like to take breakouts. And I think there's something I like to do which might be unusual for traders, and hopefully I'll be able to show it live. But I like to be contrarian on my theory sometimes. So for example, I have an example yesterday. Maybe I'll show my chart in a few. I will have a long bias on let's say we're trading the NQ. I'll have a long bias and I will enter short. And to find out whether I'm right or wrong, and immediately reverse long if the trade works. Because here's the thing: the many times when we enter a trade, we enter where we think we're right. Very often, I like to enter where I think I'm wrong. This way, if the trade proves that I was wrong on my long bias, then my short bias will work. I don't know if I'm explaining myself correctly. Maybe I should show a visual example.
Yes, I think it would be better, but I do get what you're getting to, because I know and I do that in some sense as well. So does that mean that you are but how do you
let's say we see a technical pattern, let's say we see some kind of triangle forming, okay, and then we have the first leg, which is in our favor, which is showing, okay, things are supposed to move up. We've reached a consolidation level and things are contracting. And then we are at we could form a triangle there. And then you stop right there, stop where you went up exactly. So we formed, let's say, 60% of the triangle shape. And the expectation is we should break higher. But depending on the market regime, what will often happen is we will have fake outs. So what most traders will do is once we start breaking out, they'll enter long above that top resistance. So let's say you start to break out exactly. So there, oftentimes, depending, because I use volume, and I when you trade an asset often, like the NQ, you tend to understand its personality. So you kind of intuitively, because I'm also very discretionary in my trading. I'm trying to be less discretionary with time. But when the breakout starts happening, if it doesn't happen within a certain amount of time, I'll go short right there. This way, my bias is long. I want it to go up, but I want to make sure that, okay, we are not going to fake out. So I'll enter short, and instead of having some kind of stop loss, I'll have an area where in my mind, I know, okay, if we don't continue to go down, then I should reverse long. I don't know if you understand.
Yes, I think I get your point. You're basically, I use that as well, because what I do with the order blocks and quasi and the patterns and the structures that I use is that I use the opposite to prove my point. If let's
Exactly.
say I'm the same thing, I think it's the same thing. When I'm looking to go long, then that means that it should not, that this seller's move that should fail. And
Exactly.
so I don't actually get into the trade, but I see that that's what the market, at least in my mind, that's what the market wants to do,
Mhm.
and I'm gonna wait for them to fail because that means that my long is actually valid.
Exactly.
Right? You use the signal from the opposite direction, whether they're losing or gaining probabilities, to actually have a better probability in your bias. I get that. That's
In my bias,
very,
exactly.
yeah.
So in that example where you're showing the triangle pattern, when you're entering
Mhm.
short, you might get different reactions. You might, for example, get a break and then a retest. And the advantage of going short there is that on that retest, you're actually building capital, and you can realize, okay, if I was wrong and this is an actual break and retest and it's not going to fail, I could just reverse long and I'm already in profit. I've already booked some profit on the trade. It's not something I do all the time, but because of my not being risk averse, I tend to, instead of waiting for a trade to happen, I tend to enter with and scale into trades to kind of feel the flow of the market. Yeah, that's one of the ways I trade. I often pay for it, I have to say, but I'm okay with taking multiple small losses, because it's all about risk reward and how much you're right when you're right versus how little you're wrong when you're wrong.
Yeah, but and because what you're doing seems kind of scary. You're going short right when the market is trying to break out, but of course you're not doing it when the market has momentum, I suppose, on the lower time
No,
frame. I think you're waiting for some kind of a failure or exhaustion on the lower time frame to indicate that usually that this is not really having a follow through
follow
movement.
through,
That
exactly.
you have to wait for that failure, basically, or follow through before getting in.
Exactly. I mean, let's say we are breaking out on this particular pattern that you showed there, but we're breaking out with a high, with behind the move. You have the pattern. You've been watching the setup kind of form. Also, it's let's say it's happening on the second day of the asset completely reversing. So, for example, yesterday the NASDAQ reversed its downtrend. This is not something I would try on a first day. I would probably try and wait when things are kind of more muted and people are hesitating a little bit more. I will be watching the volume. I will be watching the tape, as we call it, to see how fast prints are happening. So there are many considerations I'm taking before actually going counter what my my bias is.
I understand that. That's cool. And there was a question here in the audience, and actually, everyone who's watching, if you're thinking, I wonder how Dave does this or that, or you wanna pick his brain on what he's talking about, then now is your moment. You can ask us in the chat, and we'll do our best to touch upon the questions you have. There's one here that I think is interesting. Probably because you get in against your bias, your original bias, to see the proof that you are actually right. The do you hold those two positions together as a hedge at some point, or do you?
So I'm not hedging. It's a single position that
Yeah.
I'm ready to reverse at any given moment. So so basically I'm accepting that I'm wrong until the market proves that I'm actually right. Maybe a clearer example should be on a breakdown. Let me see if I could find an example from yesterday, because I actually took a similar trade yesterday, and I don't know if I can share my screen.
Yes, you can. If
Give me
there
one
is
second.
yeah.
Or if you want to load the NASDAQ on your chart, I could probably show the futures, the MNQ or the NQ. There you go. I usually trade the micros because I prefer holding multiple contracts. Gives me an option. So let's go to yesterday's. Go to the lower time frames. Go to the 5 minute or even the 3 minute.
Okay.
Okay, and then yesterday at around 11 a.m. my time. I'm not sure what time that would be for you. All right, there we go.
For what time zone you are?
Just no problems. You're right there. Go to the left.
Yes.
Go a little bit more to the right. It's 1800 hours for you.
1800.
Yeah, right.
hours. Okay. Yeah. Okay.
There you go. So keep zooming in because that's where I took the trade. All right. So we had the initial drive. We had a pullback in the second drive. So go a little bit further back. A little bit further back. Exactly. So we have it's actually 1700 hours. Sorry. So you see, we had a pullback. And
you mean this?
Exactly.
That's the
that's
momentum move,
drive, and
pullback.
then the pullback. Exactly.
Okay.
And then we have that large red candle right before the green one. Exactly. So on that red candle, I felt like the pullback was starting to be over, and I wanted to go long.
Okay.
What I did though is, since I couldn't confirm it and volume was not confirming it, and I evaluated that the pullback could continue from 25,840 all the way down to 25,768 where you were. Exactly. So at 25,835.
Hold on. So you thought
right there, exactly.
This is 840. You thought, okay, so it's going to continue. It can continue all the way to where?
All the way to 780.
780. Okay.
Exactly. Yeah. To go back into that pocket. So instead of waiting for confirmation and for the actual, let's say, first 5 minutes to break the structure and start moving up, I went short there.
Okay.
Waiting to be wrong. And when I started to be wrong, when buyers started stepping in on that green candle over there, exactly, then I reversed. I was short, and then I reversed long. So that's basically me shorting what I would say bottoms at first. Trying to prove whether my bias was correct or not, and then reversing long.
Okay, it's an interesting way of trading, but it does give you, because I think the reason, correct me if I'm wrong, the reason why you do this is because it gives you more confidence, right? Because the invalidation of the sell is actually a confluence for your long.
Exactly. The invalidation of the sell is an added check in my favor, sorry, that we're going to continue long. Why? Because, when you're trading the New York session, there are times that usually have reactions at 9:30 on the open, 9:30 my time. Usually if the stock is, the asset is really bullish, you'll have an opening drive like we had yesterday. Then things usually continue into the midday, and around the midday, sometimes at around 11 o'clock, 12 o'clock, you will have a slowdown. And this slowdown will usually provide the option of doing a mean reversion trade. So for example, yesterday, since I use VWAP as a guide, as a reference for price, and we extended beyond 2 standard deviations.
Okay.
Because we had a very strong opening drive, my bias was long that we would continue higher. But keeping in mind what I've seen in the past, that we could revert to the mean, so get back to one standard deviation or even to VWAP, I wanted to be proven wrong before I was proven right. That is why, based on what I was doing, unfortunately, I can't show my chart yet. That's why that trade was taking. Now, I'm taking in a lot of information while I'm taking this trade, because here we just see the candles and it's like, why would this guy go short there? But when you're looking at the momentum, how this red candle was moving down, the volume, the speed of the prints, it warranted that, hey, maybe we're going to revert to the mean before reversing up. So I'm not hedging. That's a long answer to the question. I'm not hedging.
Yeah.
It's a single trade.
I understand. You're basically going against your main idea as a signal, and you
Exactly.
use that as an indicator to see, because if you are right and you're in that move, then the signal wouldn't come and you wouldn't you wouldn't switch.
Exactly.
You're long. Yeah, I understand
Exactly.
that. It makes a lot of sense. You have a lot of traders that before they actually jump in, they have a feeder, right? So they put
It's
in
a
a small
feeler trade.
position.
Exactly.
Yeah, you put a position on. In this case, your feeler is in the opposite direction, but it's the same thing. You're basically getting more information from the market as a putting your ear to the ground to see, okay, if I'm supposed to be right, then if I'm right, then this trade will be invalidated, and that's going to be my signal for my entry, my actual position with my bias. It makes a lot of sense.
Exactly. And if I'm wrong, I generate a profit and I have an extra buffer for whenever I'm right.
Yeah. Yes, indeed. And do you let the profit you win from that initial feeler, do you add that to your, I don't know, your size on does it make your size bigger?
Yes, it definitely makes my size bigger. So I'm entering the trade with a feeler. So let's say 1/5 of the position I want to trade. So let's say I'm trading the MNQ and I'm random number. I wanted to enter with 5 contracts. I'll enter with 1/5 or 1/4 of the actual position that I want. And let's say so I'll have a buffer to, instead of risking, let's say 1 R on my long trade, I'll now have an R1/4 or an R1/2 because of the profit I generated. Of course, if I end up being right.
Yeah. And if not, you only lose a fraction of the position you would be taking anyways on the actual trade.
So, but again, that's just one example of the many types of trades that I take. It just occurred to me because it's one I did yesterday. So
I see. Well, the audience is filled with anticipation, I suppose, to watching you in action and seeing, what they can learn from you as they can, with all the hosts we have here at the Fivers. And for those who are wondering why are these guys talking about trading, why are they sharing, well, it is because we care about our audience. We want you to succeed, and one way we think, it's not about giving signals or telling you what to do exactly. It is about exposing you to different kind of traders like Dave, like myself, and like many other, and giving you a palette, so to speak, for you to choose from, right? Because being a trader, it's a very personalized experience, right? It's going to be different for everyone. Your journey is going to be different. Your path to success will be different, longer, shorter, or smoother, or whatever. It all depends on yourself. So on your personality and all these traits that everyone has different. So by giving you that palette of choices, you can see which person, which trader resonates better with the way you are and the way you see the market. And that's how we work here, basically, at the Fiver. For those who are watching us, don't forget to like, not lick.
Well, you can lick it if you want. Hey,
I don't mind if you lick it, but like
judge.
the button, like the stream, subscribe it, and we have awesome, Dave.
So I actually want to return the question, Victor.
Okay.
I want to know. I know you use Quasimodo setups, which I would really love to learn about. But what kind of trader are you? I know you're probably much more systematic than I am.
Yes, well, I am indeed systematic in the sense that I have, well, we all should be trading with a trade plan, but my trade plan is very fixed, right?
Okay.
It doesn't, I'm not a discretionary trader. I can, and I do it, I do trade discretionary on a different strategy, but that's completely, I keep them on different boxes, so to speak, like mental boxes. And the trade that I share here at the Fivers is the main strategy that they use, which is based on order blocks and a quasi, short for Quasimodo, as you know well. And what I do is a systematic trader who I'm trying to catch simply said, I'm trying to catch the moves from one level to the next using reversal patterns on a lower time frame and using top-down analysis to understand where exactly that level is. And I'm a kind of a trader who rather have a low win rate and shoot many bullets and getting just a few, but they will have a much bigger risk reward ratio. And in eventually they cover winners. A couple of winners will cover many losses, and that's how I basically trade. The whole idea is, why do I prefer that? Because I have I combine that intraday strategy or workflow with a swing trade. And so in certain occasion, I can take the same template, or not the same template, it's the exact same trade. I can open a door if the conditions are right, and actually use the same trade for the swing trade if everything lines up, and having a tight stop loss that have a high R multiple trade. If you can actually leave a portion of that open for that swing trade, you have a huge trade on your hand.
Definitely.
And that's basically my trade. So systematic, top down, using reversals to catch my reversal patterns to catch my. I'm only going from one level to the other, with the potential to open to upgrade that trade to a higher win rate, and getting many multiples doesn't happen very often, but that's basically how I would describe myself.
Okay, that's the goal. So you're using also the fractal nature of the markets to apply your lower time frame setups to higher time frame setups. Is essentially what you're doing.
Yes.
Okay.
I believe the market is fractal, as many of us do. But I strongly believe that, and I use the same principle, the same structures, the same patterns that I use on the higher time frames to identify when the market is in alignment in there's a certain rule. It's not any alignment, but certain specific fixed alignment. And then I can then wait. I only want to be trading on the lower time frames when I have the alignment that I need on the higher time frame. So I can trade the same patterns on the lower time frames, but the stats will not be the same when you have the H1, H4 daily and so on already aligned, because once you have the lower time frame that moves in, the pattern on the lower time frame makes sense and clicks, everything else has the potential to also click. And it doesn't always click all the way up from bottom top to top again, but they will with a certain frequency. So you will have, let's say, if I have let me give you an example. I'll go to, let's say, another time frame, another asset, on GU, let's say. So let's say we have let me go to the daily, let's say, and to give the audience a little bit of an idea. Actually, that is, let me go look for something else. All right, so on gold, so we have I use chart patterns, what I call order blocks. So to me, that's the indication of what the market, what the whole day and the second candle, when it has the engulfing, it indicates where the buyers were overpowering and who's in control and all of that. So I use this on the daily to go, let's say, to the 4 hour, and then look for that confluence. And in this case there isn't any, but let's assume that this was the structure that I'm looking. The same structure outside bar engulfing or quasis that are indicating me the same structure, and this would be, let's say, on an H4. And then so I use top-down analysis, like we all do, I think, or a lot of people do.
Well, I certainly do.
And we use, I keep on doing that all the way down, as you said, using the fractal nature of the market. And this would be, let's say, the H1. But if I have all of this, the daily, the H4, the H1, all of them telling me that this is where buyers, in this case, are likely to come in and take control, and I go to lower time frames and I start looking, for example, for the quasi that I trade, and I get the quasi, I have now the potential that my lower time frame reversal pattern could be, doesn't always is, but could be the very turning point where not only the 1 minute or the 5 minute is turning from bearish to bullish, but actually it could be the very best place to get in, because you have the, let's say on the daily, let me mark that. Maybe on the daily you would have this happening, right? Price coming back and moving out, right? And I want to catch the biggest move possible, and I use the lower time frame pattern to have a go at it. Of course, it's not as easy, but that's the general idea, using the fractal nature on the very low time frame as granular as possible to get in at the best turning point. It doesn't always succeed, but that's the general idea. And even if you only catch this move like 1 in 20 of your trades, that is enough. That is enough to,
of course,
offset all the other ones. And this is the extreme case. And the majority of the times you have those, single hitters. You're not hitting this is like a bit of a home run when you have the alignment and it goes all the way. And eventually, I didn't say this, but eventually I can have then a daily target, which would be something like this, right? It's not actually here. I can't see it here. But you might have something on the daily time frame that you could be targeting because you're using daily structure, right? Understanding the time frame power of each one and how it looks. This is non-existent. There is no structure there, but I'm just
so we're exactly for illustration purposes. That's very interesting that you're doing a top down and basically a bottom up at the same time is what I'm seeing. We have a tendency as traders to do the top down.
Yes, actually it is a top down analysis for the setup, but the management is bottom up. So the management, depending on what price action does after I get in, I will know if it's only on the lower time frames, on the 5 minutes, and that's it, I get a gut out. Or it's something that is active on the 1 hour. Maybe it doesn't get all the way to the daily. Maybe on the 1 hour, I would have something, I don't know, a structure here, and that's it. That's all I will get from that area. I mean, that's actually not even this is the reversal pattern here. So imagine on the hourly, it only gets to here, and I will get my signal to get out there, and not expecting price to continue to the daily structure, right? So I have a daily structure, an hourly structure, and actually an H4 structure, H1 structure that I will have to, gauge the market, price action, read price action in the trade management to understand, okay, what kind of signal is this? Is this just the lower time frame? Is this an H1 signal? Is this an H4 or daily or even weekly? And depending on the answer of that question, I will know what target is appropriate to aim for, right? Because
my question is, once you're entering the trade, and let's say the trade is going in your favor and working, you are basically reevaluating your plan, meaning you entered here on your quasi setup on the reversal, and then let's say you had just random numbers, you entered at 4659 and your target was at 4880, for example. But as the trade is developing in your favor, maybe things moved up and kind of made a V-shaped recovery, you're reevaluating the setup and allowing it to evolve into a longer time frame trade. Is that what you're saying?
Yes, that's exactly what I'm saying. The only thing is that I don't do it discretionarily. I have it systematic.
Interesting.
So basically,
that's how I was going to ask. How do you do that? Because I personally would do that but totally discretionary. I have actually an example of on the NASDAQ where I did that when we gapped down right before Trump gave the Greenland speech. It was a single day trade that turned into a three day hold, but my analysis was purely discretionary. So I'm interested in knowing, how do you do that
Yes, well,
systematically?
basically you can take anything. There is a reason why you use, when you use your discretion, there is a reason, there is something you were looking at.
Oh, of course. It's
Something trigger. I mean, that's how you work, right? It's not
yes,
random.
it's not random.
Yeah, there's something you read and you understood that this is bigger than the initial trade you had on. And so once you do that a large number of reps, you can start seeing you can start seeing the resemblance of those trades, right? There's something that there is a common denominator of all those times that you move and upgraded the trade. So if you do your analysis, if you do back testing, whether you're discretionary or systematic, doesn't matter, and you go look for all the times that you moved on, and you ask yourself, okay, why did I do that? And then you also do the analysis on what did I group those times that all your trades, you group them in those that did go to a higher target and those that didn't. And you start looking, okay, what characteristics, what indicators, what anything can I see, what patterns, not chart patterns, but what patterns in the numbers do I recognize that the runners have?
Okay.
Right.
Interesting.
And sometimes the patterns are late. They come in late, and that's they can't do anything about it. That's how it works. Sometimes it comes in early, but that's rare. And the opposite, the same thing you do with your feelers. What indications I have as a counter indication that I shouldn't have this one to run.
Yeah.
So if what you see all those that you thought were gonna run, but they didn't. Is there a common denominator of that group as well? So on your analysis, you will have like subsets, and then you can learn from these subsets. Okay, if it has these characteristics, then I have, based on the data, a certain probability that it will run. It will still not be sure, because there's nothing sure.
No, it's probabilities all the time.
Exactly. So, and then you can build your stats on things depending on how many of these characteristics it have. Some will indicate that it will run, others that will not run. And you can bundle them up and then do your trade plan, then do that. Once you have these rules that dictate or that give you an idea, an insight of how the probabilities are based on your data, on actual objective data, not on feelings. At least that's how I envision it. You then can build your trade plan saying, okay, I'm gonna be targeting the next level initially, and if I see this or that or the other, one of these three, or maybe it's only one characteristics, then I will extend part or full or the whole position to the next level that makes sense under those conditions. So for each, and it's dynamic, right? So because when you enter, it hasn't shifted yet on the higher time frame. So you'll have to get in with giving it some ample time, adequate time for it to develop, mature, and then you can assess whether or not to upgrade the trade or not to a higher time frame trade, so to speak. And that's something I'm big on, because it matters a lot.
It does. It's actually not too different, because when I say I'm discretionary, I'm probably overdoing it. I'm not fully discretionary. A lot of the strategies are based on backtesting, and what you've just said there, I have done for the NASDAQ, where I did a lot of backtesting, and it showed me that, okay, for example, if you I can't remember the exact stat. I should pull it up on my Excel sheet. But let's say usually 70% of the time, if before 11 a.m. we have gone up 1 ATR and a half, we will continue to trend up. Actually, that's why I took that trade yesterday. So So, and then that trade, if it's a first day reversal, will usually continue. Don't have the exact percentage onto the second day. So that's kind of, I would say, similar to I think what you're saying is based on the testing you've done. Probabilistically, if X and Y happens within a certain time frame, then it makes sense to hold the trade longer.
So basically, this is then your rule. If before 11 o'clock it moves 1.5 ATR, and I assume that's on the daily time frame.
Exactly.
Mm-hmm. Yeah. So basically, for those who are watching, you can watch this. You can look at look for the indicators and look for ATR, a very powerful indicator, very common default on all platform. Average true range, and you can pick that up, and it will. I already have it. So you will have something similar to this. Probably it's going to be much bigger, but you can make them smaller, and you can go to the daily to get the daily ATR. Right. So the daily ATR is typically time frame dependent, so it depends on what time frame you are. So you have to go to the daily and hover over your candle of interest, and then go read the indicator below. In this case, let's say in gold, the daily ATR, it depends on the settings of the ATR as well. It is currently, let me move it a little bit because trading
these days it's going to give you huge numbers.
Yeah. Normally it's about what, 50 or something like that in gold.
Yeah.
Look at that. Now it's 212. And you use the ATR as a gauge to understand a high volatility day is coming in, a big range is coming in, because before, in the first few hours, the market is already expanding in such a way that tells you that likely there's going to be a second wave that continues the rest of the day, and you want to go in the same direction of that expansion. Is that correct?
Exactly. That is 100% correct. 100% correct. Let's say recently where it's gone up, I think it's at 400 points now, but the NASDAQ usually will move 200, 250 points in a day, the whole day. Okay. So if before 11 a.m. we've already moved, let's say, those 250 points, so one full ATR, or we've already moved 300 points, that there's a high probability that it will continue during the day. So, of course, it's probabilities. It'll happen 60, 70% of the time. Then the other 30, it will revert to the mean. And this was part of the idea behind my trade yesterday.
Perfect. That makes a lot of sense. Well, I have those as well, right? Rules that are based on observation, things we see, and we we measure, and then you can understanding once you have the measurement, when you have the data analyzed and you play along with it, you turn it around, make subset, you analyze, what happens if I do this? What happens if I if I start, instead of 11 o'clock, I watch, 10 o'clock or 12, or what happens if there's a news day there's news on that day and that hasn't come out yet, things like that. So you creatively, trial and error, you check all these scenarios and you pick up those patterns, and then what I do is I incorporate them in the trade plan, meaning I will know next time, right? Sort of like a playbook. Next time these conditions are met, I know I need to do something. You need to have a different set of rules, or a different set of management, different set of targets, perhaps, or not trade even, perhaps.
Yeah, exactly. This is something I had to learn the hard way. Is sometimes a big part of risk management is not clicking the button. Just watching the market. And for somebody like me who had an overtrading problem during part of my career, they always tell you don't trade. Well, it's not that easy, especially when you can't necessarily lock your platform. So one advice I would give to the audience is trade the simulator. There's plenty of them out there. You can just try it out. It will scratch that itch of you trying to trade.
We all know that itch.
Yeah, yes, that itch is always there. But especially when you're not a swing trader, you want to be in the action. The advice I could give, because it has helped me a lot, is trade in the simulator. And surprisingly enough, you will find, well, at least in my case, that most of the time you're wrong and you shouldn't have been trading. Yes, sometimes you'll be like, oh, woulda, shoulda, coulda, I should have been in because this went a million points in my favor. But it's not it's one way the audience can use to help them with over trading.
Yeah, and actually, I would, if you allow me, I would add a second one for those who are, really interested in becoming better. Do the simulator, and when you think or you want to have that urge to trade, and if you want to take a notch up, journal what happens in your simulator.
Definitely.
What you think, what setup, what you think is going to happen, and what actually happened, and then do that over and over again, and then look back at 50, 100 trades and see, is it actually profitable, or do I think it is profitable, but in reality it isn't?
Isn't,
Right?
yes.
And that might be an eye opener, because a lot of times we think something, a setup or a strategy or a play is a certain way, a certain very profitable, you might think, but in reality, we might have a little bit of a gambler's fallacy, right? Remembering the times it wins, but we tend to ignore the many other times it doesn't work.
Exactly. You remember the 3 times it worked, but not the 7 times it didn't.
Exactly, and the way to objectively know if it works is by collecting data, understanding what the stats are, and if we should, and you will have the answer. You don't need any mentors, you don't need anyone. You will have the actual numbers telling you, okay, don't trade this anymore, or it is profitable, but you have to filter the moments, or the occasion, because sometimes it works well and other times it's better you not trade it.
Exactly. No, that is totally right. That is totally right. Actually, I'm going on a tangent here, but I wanted to ask you this question since you have gold open. Do you use the gold to silver ratio at all to kind of determine your trades long term, or your investment thesis long term?
No, but I do know about the chart, and I do look at it, but to be honest, no, I don't use it. I know people who do that.
Well,
and you do?
Well, I've found out about it recently, and
Okay.
I think what the chart shows is pretty interesting. To do it on TradingView, you just pull up gold and you divide it by silver, and it's so you would put. Let's use the futures instead. So GC.
Okay.
And then you
GC1, right?
Oh, you could just click. Okay. You could just click COMEX, yeah. And then divided, or if you want to select futures, it'll give you only futures. This way you don't have to exactly. And then you do /SI, and there you go. You could pick that.
All right. So
the first silver futures, yeah, and then press enter, or that one. There you go.
Oh,
you could close it. It's fine. It gives you the daily. It doesn't go lower than a daily time frame. That's all it's saying.
Okay.
But you can go all the way up to a monthly time frame if you want. So what's interesting is if you go all the way back to the 1980s.
Okay.
And you trace a trend line from 1980 to 2000. To right now. So you make it past through 2011, you see how close. So the ratio sits at around 67 usually, more or less. And when it goes into the 40s, it kind of determines, okay, we've reached a top. And it's interesting to see that trend line, we're getting very close to it right now.
And what does this tell the gold trade? Because the way that I it was a long time that I used it to weighing on my portfolio. I never used it as a signal for my trading. What does it tell us when it gets, let's say it comes back to the trend line? What will that tell us?
So when it
Or-
goes, if it does, of course, because it's all probabilities, if it goes back to that trend line, then it's a topping signal. So since we haven't gone all the way to there, my theory is that it is a possibility for us to see higher highs in both gold and silver than what we've seen right now. Last time I think we were at 38 on the ratio. So basically, the way it works
30.
is, yeah,
Yes, it's 30,
30.
32.
Oh yeah, actually 32. Yeah, and then before in the 80s, I can't remember what it was.
16.
That seems a little odd. We should probably do it logarithmically. But anyways, if we're just looking at the trend line, yeah, it should be a little higher. So that'll give you a probably a closer number. But what it's saying, if we're just being visual, a touch of that trend line would signal a top. And since we've come close, and it's probabilities, and we don't know whether or not we've reached that top yet, if we see both assets continue to climb, and we reach that 40 ratio, let's say silver reaches a price of 150, then gold would be at 6,000. So
I understand. Yeah. So, but the topping, that means that we can use the touching of this trend line as a signal to go then to the gold, and then to reverse the trend. Meaning,
so if you were long, if you've been holding long all year or whatever, and you got a little bit scared and took a little bit of your position off, well, you could continue to watch this signal as a topping signal. And you could also use it as a bottoming signal, using the lower ends of this ratio. So I just thought it was interesting, and we could have the audience look at it.
Sure. Thank you for that, man. That's I think the same thing, the same way that I said you can use characteristics in your stats to understand where should you be looking for your edge, or to increase your win rate, or to increase the times that the runner will run, or that a trade will run. This is actually the same thing, right? You're looking for statistics or indication by combining, in this case, a ratio of two assets to get a probability, right? Because every time it did this in the past, or maybe 80% of the times it did something in the past on this ratio, it means something for the actual asset, the underlying assets in the ratio. And you can use this building your probability case to get on a trade that has edge as well, or maybe stay out of a trade. Maybe, if you had, you think, oh, this is the moment to get in, you get this ratio, it says, no, it's not the time yet. You have to wait for a bit more extreme case.
Exactly. So I just thought it was interesting, since I've been doing a lot of research on gold and silver lately, because it's been the talk of the town, obviously.
Yes.
So a lot of interesting stats. Maybe we'll talk more about them on Thursday, because there's some inflation adjusted prices also that I think we should look at. I just, anytime I'm trading, I'm trying to do the bear case, the bull case, and the neutral case. And a lot of people were calling for tops when silver was at 70, then at 50, then at 70, then at 100, and we got to 120. So things can just keep going up. You have to be open to both directions. Just when you think something might not be able to go up, take it from a guy who's seen a lot in crypto and who's seen a lot of things go parabolic. Anything's possible.
For sure. Yes, I would like that. Definitely. I like that, where you said you're thinking all the different, the cases, right? The bullish, bearish, and neutral case. Having all the possible scenarios as a trader is a good thing to have, because you're not marrying necessarily one, but you're just playing the one that is more probable. But having the cognizance having that recognition of when one play is more likely and when it is out of play.
Yep.
It makes you a little bit easier to switch. All right, so now we're switching from one scenario to the other one. And
Exactly.
having that flexibility is quite very, very important, because otherwise you'll be stuck in the same thing, looking for that reversal that will never come, and it
Yep.
will just be perhaps the end of your account. Who knows? Dave, it's been very, very insightful talking about you, and I already know that we're gonna have some very, very good discussions here in our live stream, because I get a feeling how you think, and I like it very much.
Thank
So
you.
it's gonna be a lot of fun for the audience watching us. We have come to the end. For those who are watching us, you want more of the Fivers, you want more of trading, we have a Discord community, a lively Discord community that is waiting for you to be a part of if you're not part of it yet. If you want, it's completely free. You just have to have an account with the best prop firm in the industry. And in our hub, you will find the portal to the Discord community. There is on every weekday workshops where we come together and talk about trading, and you're all invited to join us in about 40 minutes or so. Different hosts, different people, coaches talking and coming in and explaining things, or just having a good time reassessing, talking about the market and whatnot. Dave, it's been a pure pleasure having
Likewise.
us to know you, and I'm very excited for everything that we're gonna be, sharing in the future.
No pun intended. The future.
Actually, no pun intended, but maybe pun is
Maybe a little
intended.
bit.
I don't know.
Indeed.
A little
Indeed.
bit. Thank you for for being with us. And any last words before we close our stream?
Well, likewise, thank you. It's really a privilege to be here. Thank you to all the community. And again, shameless plug, futures are coming. Follow us on all socials. We'll have great things planned for you. And Victor, I'm looking forward to exchanging more with you. Thank you very, very much for having me today. And thanks for everybody. I'll see you soon.
All right, perfect. There you have it. Have an awesome day, everyone, and see you tomorrow. Bye-bye.
All right. Bye.